but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Woo, hump day.
Anything going on in the news?
What did we miss? Did we miss? I fell asleep early last night, like at 4 o'clock in the afternoon. What did we miss? Wow. Almost speechless, right?
Yes.
Honestly. I mean, and we'll get to what we did last night, but oil, 17% move to the downside. I mean,
Absolutely incredible.
your gas prices are going to move about a nickel.
Not even. They're not going to move.
I'm just kidding.
They're not going to move.
They are going to move small, but they're not like you would think. Even the S&P's up 2.75%. Let's just call it almost 3 and 4% across the board.
The Russell's up like 4%.
That's correct. Yeah, Russell's up almost 4%. Nasdaq up 3.5%. Dow and ES up 2.75%. Crazy. I don't know. I hope my friend Chris Veio is okay. I spoke to him at 3 o'clock on the show afterwards.
No high fives. No high fives.
No high fives. I warned him. I tried to help him. He wouldn't listen. He was my biggest bull.
I know. I tried to get him back for a while.
I remember a couple weeks ago you actually
I've tried.
Yeah.
But he'll be back. He'll come back.
Of course. But
how do you feel now? We're at 68.50 again, that magic number.
I asked Chris if we were going to be at 68.50 by the second quarter. Anytime in the second quarter, I didn't know we were going to be there in 12 hours.
And we're here.
He said no. Took the other side. But anyway, that's just a fun gentlemanly bet. Wow. I don't know. 68.50. I'll tell you what I don't want to hear. I don't want to hear about how we were making higher highs and lower lows. Higher highs and lower lows. And you could see that we were going to break out here. That's what I don't want to hear from somebody. Because I didn't hear anybody pounding the pavement about any type of upside move of any kind of magnitude here. And we both talked about it on the show. It seemed weird yesterday. And it's weird even today. Look at what volatility did.
The close was a nice little ramp up even.
The close was a nice little ramp up. But volatility was still up 4% on the day. And even the S&Ps in the market was basically unchanged. Volatility's in by 8 or 9%. Let's round up and say 10%. Yet the market is up almost 3.5%, 4%. I mean, volatility is still bid. So you haven't missed anything here. I actually think you're in the sweet spot of volatility here now.
Yes.
Because I think volatility at 25, 26, we were having those 50, 100-point handle moves. You had to adjust your whole, and the option market adjusted for you. You look at a 25, 30 delta option, and it was 2 times, and I said it yesterday in the show, it's 2 times away from where it normally would have been when volatility is a lot tighter. Now you can have a little bit of volatility contraction, but I think the 20-ish area in volatility, low 20s, 23, 20 is really the sweet spot for the way that we like to trade. But right now, probably have to go both sides. Go ahead.
My question for you guys is, if the tasty view of mechanics is we operate on a 45-day time frame, let's say, but now we're at something has to happen every 2-week time frame.
Yeah.
How do you reconcile the two?
We've been in that for
I know,
months
but
now.
right. But now it seems like, okay, now this is going to be an every 2-week situation.
You got to do both. And I mean, we trade a lot of diagonal spreads, calendar spreads, butterflies, stuff that you have, some sort of convexity to it where into these big moves, like I have stuff that's going to explode today. And you have to have that.
Explode in a good way or a bad way?
Yeah, like stuff that's just going to go to silly numbers. And you don't get that convexity with short premium. Like short premium is great. And then you got to have that sort of decay so that you don't have to be right in the here and now, right this second. Yeah. But you have to have some delta, some convexity to your position, some gamma. I mean, that's just the market we're in. Is it going to last forever? Who knows? But
no, we've said that it's been a nimble market.
It's been a nimble market.
And you've been basically trading oil short. And I'm not saying that because oil is down 15, 20% today and saying we've been trading oil short. I said it yesterday. intraday, oil's been a great trade. If you've just put on positions for 45-ish time frame,
Nothing's moving.
Nothing's moved, and we've had higher highs every day. This is the first day that you're getting any kind of movement to the downside. Now, skew, those calls were quite inflated, like we talked about yesterday, having those short calls, which have hurt you or didn't help you or were a pain in your side for the last couple of days, are going to pay you today, and they're going to pay you pretty nicely. But it's been a tough trade being short oil, and I don't think oil is out of the woods yet. I mean, I don't think so either. It's going to be a lot like gold was.
Yeah.
Listen, if where Vol is right now, it's like this is going to continue. Mm-hmm. Like, this is not going to be the last. It's not like it's over and we're going back to VIX at 17, or at least I don't think so. I'm not playing for that. Like, I think you're going to have these days where you're moving 100 points in either direction. And
there's a lot of hurdles till we, negotiate a full peace, resolution, whatever.
It goes to your point. It's been a news-driven market, and you have to adjust that trade a little bit. Like, you have to take what the market's giving you.
Right, and listen, we happen to get it right, and it's just a guesstimate. Let's not think like we know something here. It's just a guesstimate. But we all were talking about, you and I, on the show. It seemed like the Mag 7 are all getting beat up. The rest of the market was holding up the market. Oil's making new highs. Market's not making new lows. Oil was 117
on Friday or on Thursday last week,
and the market was down. Yeah, 20 handles, 20 points on the minute. I mean, it just didn't seem right. It seemed like, and Volatility was pointing to that there was going to be a big move in one direction or another, and now you had to put on some sort of convexity trade or put on some sort of delta trade and hope that you get the move right. That's the unknown that nobody knows. And then, luckily today, we've got to move. Now, what do you do? Is the question.
That's what I was asking.
Right.
What do you do now?
You probably look to do both sides. You probably are going to look to
sell some vol.
How do you do
correct.
that?
And I mean, strangles, iron condors.
Oh, I see. That's what you mean, both sides.
Yeah, like
okay.
Maybe reverse jade lizards now. I'm on option trades today. I've been doing a lot of jade lizards. I've been doing a lot of upside stuff in SPX. I went 9 day. I did a 9 day option in option trades today. That I don't usually go short dated on anything in there.
Yeah, I actually went
with long delta
after I closed. So I closed my oil position when I got home from pickleball.
Yes.
Which I had a little kerfuffle on the close as well. If you were looking at the follow page, I meant to close my shorty minis. I actually added to them.
Whoops.
And
well, that's great.
Offset a lot of some of the euphoria that I would have today. I will be euphoric for most of the day today. But I took off my oil position and put on an iron condor. To your point, I think that's kind of the trade now. Is like if you got, and we've harped on this the entire time. It's like we've been pretty nimble with our positions.
Yes.
Once you get your move, you take your money and run.
Yes.
You start fresh. You go. We're not trying to get every penny out of everything.
This is true.
So I rolled into a iron condor in CL, shorter duration, a lot less risk on, where, I can pat myself on the back and move on to something that's a little defined risk. I will say, because I was talking to Marty in the kitchen this morning and just talking about USO, because USO prior to this was like not really something we traded all that much.
That's true.
But with oil just going crazy, it is now, a staple. And if you look at USO, which is down today, but it's not really down as much as the oil futures. So oil futures are down, let's call it like 17% in the front, 18% in the front. USO is marked down about 10 to 15%. It's lagging a little bit.
Okay.
And because of how these products work, and this is the same with volatility products too. Like if you were short volatility in like a VXX or a UVXY, you're not going to get paid as much as you would have expected. And that's because of the way these funds are, the funds track the futures. They're not all in the front. So USO right now is about 80-20 June and May oil futures.
Okay.
So the front contract which is the May futures, is down 17%. The oil futures from, which is the M contract, is only down 14%.
Is that drag or like what is that?
Well, this is actually
just
drift.
like it's oh, okay.
Yeah.
So what this means is like, so they're weighted, USO is weighted about 20% to the front contract, which is up here, 80% to the back contract.
Okay.
Both of these have come down, but this contract has come down 18, 19, 20%. This has only come down like 13, 14%.
Right.
So the curve has come down and they've both moved lower. But USO, because it's weighted more towards the back, is not going to move in the same magnitude as the CL number that you're looking at now. That is the front contract.
How do I arb that?
There is no arb, but what it means for those products is that so long as we stay in backwardation, Mikey talks about this a lot with volatility. When you stay in a backwardation like that, the products are going to remain sticky. Like you're not going to get the big move in USO until the curve either flattens, which it's getting. I mean, it's flatter, but the back month is at 84. There's still about an 8-point backwardation. So every time they're selling out of the front, they're making $8 of value right now still. But until you get a flattening out of that curve or going back into contango, which it usually is, these products are going to stay sticky and actually kind of drift higher because there's a value there. So you got to be careful with like it. It just goes to the point that USO and these ETNs, ETFs that track futures have very, very unique components to them, and they're very, very hard to trade. So you got to be kind of careful with them. That said, if you were short units in USO, you're going to get paid big time today, which is going to be great. But these products are not going to move with the same velocity. That's the point.
What did you do last night?
No,
Sorry.
this is what we're supposed to. We're supposed to be talking about. There's no rhyme or reason to. Like I'm not.
I'm surprised.
I'm not in charge of you.
No. I get that. No, please, I got it. It's a good day. Don't ruin it for me.
Yeah, I know.
I'm actually surprised at the lack of movement that we've had after this huge 3% move in the market. Last night, when the futures opened, they were up around 50.
The gap and nap.
Yeah, you kids. 50 to 80 handles. They went up to about 115 handles, came back down to around 100 and 105 handles higher, and then sat up 145 and really didn't move that much for most of the night. And overnight, while I was sleeping, they must have drifted up another 40 handles. I'm really surprised at the lack of movement in there. Now, we had some good 2 times the amount of E-mini S&Ps traded yesterday that we did the day before on Monday. Remember?
Well, we were down like 50 yesterday, and then we closed up basically unched. Yeah, which was just like wild.
Today's going to be a huge volume day. I have to.
But also, it's going to be crazy. So you're going to get the start of earnings today. And you also have a lot of inflation data that's coming out this week. Like, can we slow down? Like, it's only Wednesday.
You feel
so
like you had a
month. I don't know what's going to happen, but earnings start now. So I guess all the companies reporting today are like, at least it's not, the end of the world.
Well, earnings are going to be a lot. I mean, listen, Delta Airlines is up $7. I don't think it's just because of their earnings today. I mean, it's because of the market too.
Right.
The interesting thing is going to be like who's going to sell today? Longs are going to sell today. Like you're going to cover. Longs are going to neutralize positions. Traders. I'm not talking about the hedge funds or the funds that just.
Has anyone checked on the JP Morgan collar trade?
But do you think that? Think about it from a fund perspective, or a new investor or a trader. Are you going to put money to work? Are you going to put more money to work now? Like I don't see.
Honestly, I think so.
Really,
which is a weird. Because I think there was so much discussion about this massive downside and World War III and all these things that were like keeping people. I think the fear and greed index was at like 7. It was like extreme.
Yeah, sure.
And we've been talking about it for a couple months. It felt like people were kind of pretty hedged for this. Like everybody was like, okay.
Well, volatility would tell you that they were hedging for that because volatility was so high. That means you're buying options on both sides.
And the put skew was off the charts.
Yeah.
Off the charts. You got, the war stuff, the AI stuff, the CapEx spend, this and that. It has felt like everybody's been sitting around.
Yeah.
And so I don't know if you get it today. I think today it's going to be kind of right here because you're going to have a lot of the long, people that were long are going to be natural sellers today.
Yeah.
But I think that, over the next couple weeks here, assuming things, kind of lighten up, I think you're going to have more upside. Like I think we're back at highs. Like I just think that's what's going to happen.
Well, we will get into it. Obviously, a lot happening in the markets today, so please keep it here, keep it locked. It is a wonderful Wednesday here at Tasty Live. At the top of the 8 o'clock hour, bringing you an options jive, how to trade directional without getting burned. Maybe directional.
This is actually option trades today classic.
Oh.
A basic primer on like put and call ratio spreads.
Okay.
Yes. So it should be a good one.
And it's Assume the Position Wednesday.
Ooh.
So we got What's Your Assumption? The bats are going to do viewer submitted trades. Hopefully you guys can adjust because obviously the market is at a very different place this morning than it was when viewers sent us their trades yesterday. So just bear with us. But we're going to do viewer submitted trades at 8:40. And then at 9 o'clock for cherry picks, we got Tom Preston in the house. He might call an audible because we are in unprecedented times. But he's supposed to be talking about currencies today.
See if he does that.
Yes.
Yes.
Okay.
But
Yes.
I guess. We'll see.
Fan
We'll see.
favorite though.
Yes,
So,
fan favorite TP. So, and then we got live from the trade desk at around that 9:20 time frame. Quentin in the house, counting down the top trending tickers over at Tasty Trade, and Mr. Ryan Grace in the house on the crypto side of things. New York Times breaking news saying that they have found who Satoshi is. So let's ask Ryan about that, the mythical creator of Bitcoin.
I don't believe that.
I was going to say,
I'm
this
just
would be
saying
the
the
first
New
thing
York
that the
Times.
Times would actually
Whatever.
make and
I'm
say
just
that.
saying. I just saw the headline.
Are you talking about the fake news media?
That's what I wanted
You
to say. but I
take
didn't
it
want
up.
to say it that-
You
that-
take it up with
that
Ryan
definitively.
Grace if they found Satoshi or not.
They
and
also found who the Easter Bunny is.
do with that. Do
They
with
also
that
found
what
that
you
too. They
will.
waited till after Easter.
It was Marco Rubio.
I heard it was Hexeth.
No, it's Marco.
It was
Marco's
Rubio.
the one that
He's so
doesn't.
sad.
Yeah.
He's so sad. And then, that is it. And Liz will be joined today by Fauzia. So always great. Star-studded cavalcade of stars on the Liz and Jenny show. You can tweet at the ladies, hashtag LIZJNY. But hey, let's get this show on the road. You want your daily dose?
Sure.
Let's go. Hit me with my theme music.
Our leading story, breaking news,
Coming
across the wire. Our leading story, top story, just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's April the 8th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
I'm ready for the news.
Oil prices plunge below $100 after Iran agrees to safe passage through the Strait of Hormuz during a ceasefire. Iran agreed. It came less than 2 hours before the 8 p.m. deadline for his threat to destroy an entire civilization. Again, I
hate that talk, by the way. I mean that's gross.
It's
I mean, you are by far obviously the most powerful nation in the world, because other nations are quiet while this is going on. I'm talking about China and Russia. I mean, they've been quiet. You don't have to act like that. That was kind of gross.
You go to your room.
The way you can hate everything about Trump.
Hate this timeline.
You can hate his delivery, but you can't really hate the result so far. I mean,
Yes, you can.
what do you hate? What do you hate?
I hate everything.
Give me an
about
example of what
I hate not going to Congress for authorization. I hate putting
No president has.
I hate putting the lives of young men and women in danger. For what? For what reason is
We've lost,
possible?
to quote the president, we've lost more people in Chicago last weekend than we have in a month at being overseas. I mean, really, you can't hate the results that's happening. You can hate what's happening, and I think we all do. I think we all do, but you can't.
Let's just talk about oil. What are you guys doing in oil?
So
They will be printing money.
Yeah. I mean, but
it's been a struggle.
This was a good day, but we're back to that. Like, we've been looking at the curve in oil and the kind of near term. Let's call it the 6 months ish out has been hovering around like 80 to 85, and the back has been in the 70s. It was kind of saying, you know what, this is kind of a short term blip.
I think June was in the 90s. In the 69 days, now in the 80s.
It's now in the 80s, but
maybe below 80.
Yeah, over the next 6 months, outside of like the front of the curve, was in like the mid 90s to like low 80s. That's kind of where I think that's kind of where we're at, where oil prices are going to be uncomfortable and high, but they're not going to be through the stratosphere.
The front moves twice as much to the downside as the back month.
The back was never, the curve was very, very steep once you got past like 6 months. And, you know, it could have gone the other way. It could have been, we could have nuked them. And this would have been, you know, we would have looked at this
even more, but it flattened out, meaning that the back. So the front month was very high. That's what you mean by a curve, and the back relative to each other. The front month was very high. The back month was low, still higher than most people were used to seeing. You know, just three weeks ago or a month or so ago. What is happening now is they've all come down, but this front month has come down more to make the curve a little bit flatter.
And so I think oil kind of stays in this range. Like maybe there's a little bit lower prices here, but I think we're in 85 to 95 is like our spot. Like I think it's high, it's uncomfortable, it's not like end of the world.
Well, here's the thing that no one's talking about, though, is like you're right, and I think it's high as a couple. But the second part about this that the Strait of Hormuz also controls is the fertilizer aspect, and because that's going to take a long time, and because planting is seasonal, I think the effects and ramifications of that we're not really talking about, and I don't think we've seen all of the fallout from that. End of my TED talk.
Sure. No, I mean, like there's a lot of things that go into that region. I mean, you know, I just think we've gotten to a point where everybody it was doomsday. It was 200 a barrel. It was, you know, like the end of the world.
Instant recession, depression.
Yeah, and here we are, like it's going to be high. It's not like through the roof high that, you know, everything stops. Like it stinks. Yeah. This stinks. I filled up my gas tank the other day. I was like, wow, this. A
confluence of factors. Chicago's airline fuel is the highest in the country. It's over $5 a gallon because a refinery went offline because it was for planned maintenance, it was in February.
There's always a stupid excuse.
No, but it's just below the war is why it's high, but it's higher in Chicago because in February a refinery went offline because they're like, we have 45 days of maintenance. So I'm just putting that out there. Hey, I do want to talk about currencies. The dollar drops maybe as the ceasefire prompts risk on turn for markets. South Korea's stock market surged, leading gains in Asia. But what are you guys doing in currencies, whether that's the euro
up big.
Pound?
I should have held that put. Damn.
Pound up big too.
Oh, let me look at my taste.
Euro's up, 125 ticks. That's about a 1%.
Ooh, sacre bleu.
Yeah, I got $76 in my Euro USD Tasty FX.
Pound is actually.
I'm gonna take those off. Let me do another one-click close right here for you. Look, New Zealand dollar, $100. Click. Got it.
I didn't hear the ding.
I don't get many.
You don't hear the ding. It didn't happen.
I know. I've told them that. I'm like, guys, you need to get.
I don't know how you can not have a ding.
Yeah.
Like it needs to be like some sort of like European ding, right?
Yeah, sure.
Like, you know, it's got to be something.
Something.
Yes.
All right.
Sorry for that.
No. Anything else in currency? Anything in South Korea? Yen?
So South Korea, the memory stocks are going to go bananas today. EWY is up $10.
Yeah.
Start the session.
Yeah.
I mean, I think today is going to get goofy in some names. I think the Mag 7 is probably the spot you should be. But some of these stocks, like your SanDisks, your Microns, your, AMATs, your ASML, like these stocks are going to go banana land.
Okay. Shifting to another commodity real fast, gold climbs. Again, after the ceasefire was announced, gold bullion climbed as much as 3% to above $48.50 an ounce, extending a 1.2% gain in the previous session. What are you doing in the precious metals?
I've got a long delta, and it's going to be wonderful. I mean, I've been long gold into the lows. We've
been playing gold to the long side. Listen, today we get paid. We've been struggling and looking for strategies that would benefit from a move higher. And nobody knows about a 3% move. We were talking about 0.5% move, a 1% move over a week. Yeah. Nobody's expected this. As a matter of fact, happening so quickly, you'll get paid nicely on your static-ish deltas, your diagonal trades and stuff like that that you have on. But you won't get paid as much on more dynamic trades that you might have put on, a call spread or a naked put spread. Or naked puts will obviously pay you, but that's more static-ish delta, not really dynamic delta. So this move is going to help a lot of people probably with larger size accounts that were able to do things with more omnidirectional, type of trades, and not as beneficial to those who have defined risk trades because the move is just too fast. Time has value, and volatility is still high. Matter of fact, volatility is upticking a little bit here. So I think
gold and silver are both in a pretty interesting spot because they've gotten up significantly cheaper over the last couple of months. They're still high relative to a year or two ago, but the whole narrative was that you had to sell gold, and there was all sorts of news headlines of Turkey selling 40 billion or whatever. You had to sell gold to get dollars because you needed, to pay for oil in other places, or there's all sorts of narrative around like kind of the transport inflation that we're probably going to see. If you think that the war is quote unquote over for the most part, and inflation is probably going to be sticky because of what happened, there's no better narrative for being long gold. I mean, that is both sides. You're getting inflation, and the need for dollars is going away. This would be prime time, in my opinion.
I don't have a story about it, but I just thought we should check in on bonds because they are ripping higher. Yes. And so let's just...
Bonds almost 115. Matter of fact, they traded 115 on the dot just a moment ago. Actually, 114.28. What a difference a day makes, because now you're in the 150. If you're in the 115 handle, I don't think they do anything with rates one way or the other. So we'll see what happens there.
Again, though, you're going to get your inflation data coming later this week, and then again, that's the Fed's chief indicator, PCE, whether you believe
you had
it
almost
not.
$3,000 move top to bottom on a product that usually has a $2,000 move all month, and you've had a $3,000 move in a week. Volatility is off the charts everywhere.
Something else that's off the charts, SpaceX is closing in on a $75 billion IPO that could rewrite the record books, but concerns are mounting that others looking to list in 2026 may find it harder to get deals done under the shadow of the space venture's headline-grabbing debut. Is SpaceX net positive or net negative for the IPO market?
I think it's unfortunate that, we don't at a certain point. I think there should be some sort of you have to go public if you're valued at something.
Sure.
When you get to $1 billion,
not a billion, but there's got to be a number where you got to say you can't have this not be public. It's too big. It's too big of an asset.
Sure.
To have the market not be able to have access to it, and for people to not have access to it. I think it's going to be, I think it's an interesting long because of it just being SpaceX and Elon, but it's a lot to stomach a $2 trillion, all of a sudden it's a ticker on our platform and it's a top 10 company in the world.
Immediately.
In fact, NASDAQ rewrote its own rules to accommodate that. Okay.
I agree with you there.
Yeah.
I didn't say anything one way. Okay. I was just saying that.
It's just unfortunate.
Yeah.
That this isn't that, people don't get access to this.
Agreed, but that's because there's so much public money out there looking for a place to go. Remember, the market was the place to get liquidity.
Yeah.
What are you guys doing in Tesla? And does this, of course, take away from Tesla? Like what now, brown cow?
Tesla came out at a very high evaluation too. I mean, I think it was $17 or something like that when it came out. I mean, it's $346 after multiple splits.
Yeah.
$17 was way different. It was a $10 billion company. Or whatever,
Yes, but it was a different market too. The market was probably half its market valuation too. So in capitalization, I mean, you can't we can't look back and try to. It's almost like looking at baseball players from the 50s and the 60s and comparing them to baseball players or basketball players today.
100%.
But your point is valid, and I 100% agree with you.
It's just like I think people, the layman is excited for this. But when you think about it from like a math perspective, like what is so you're buying this for, an upside play, obviously. Mm-hmm. But if it's at 1.7 trillion and it doubles, like you're playing for it to be a $4 trillion company. Like, is it going to be as big as NVIDIA is right now?
Right, yeah.
That's it's just a hard situation.
It's a hard situation. And Tesla was has actually been one of the weakest of the Mag 7.
Their delivery numbers disappointed.
It was down almost 2% yesterday. Yeah. Now it's catching a bid today with everything. It looks like it's going to be up around $15 or so, maybe a little bit more. But still, that brings it to $360, where it was 48 hours ago. Mm-hmm. Not, more room to run in Tesla if you're a bull in Tesla.
Yeah.
Intel is bullish on Elon Musk because they are joining Musk's Terafab AI chip complex project with SpaceX and Tesla to make processors powering the tech billionaires' robotics and data center ambitions. Intel shares jumped more than 2% after the announcement. I'm sure they're on the moon now. What are you doing in Intel?
Intel up with everything else?
It's up what?
It's up to it's up $3. But this would be a new closing high if it closes here. 55.40 and change is where it is right now.
Good job, Intel.
Yeah.
Bum, 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 bum.
I mean, this too a week ago was 45. I mean, $10 lower than where it is right now. So
everything's gonna be happening.
How's the IV in there?
Good. It's 78. Yeah.
Oh, okay. All right. That's
high
good,
IV. It does have earnings April 23rd. To your point about earnings coming out.
Yeah. It'll be interesting to see, like, across some of these stocks, how the calls react. Because I think obviously the Delta move is going to be amazing to the upside, but you're going to have I think a lot of the upside skew is going to get taken out more so than the downside skew. So I don't know. It'll be interesting to see where these open.
Anthropic announced the Claude Mythos preview and said it's an advanced AI model that excels at identifying weaknesses and security flaws within software. Microsoft, Amazon, Apple, CrowdStrike, and Palo Alto Networks and roughly 40 other companies will be able to use the model for defensive security work. Anthropic says they have so many guardrails on this thing that because it's super dangerous if it falls into the wrong hands. Literally the plot of my next movie. But what are you doing? Look at a PANW up almost $5 this morning. CrowdStrike up almost 14.
Yeah.
What's going on? Microsoft up 12 almost.
I think the AI.
It's about time for Microsoft. That's all I'm going to say.
It's about damn time.
But I think that's for all. Like you can put that on Meta as well. You can put that on your CrowdStrikes and your PanWs. Which I have thought was like the easiest one to kind of fade because
PANW.
What?
PANW is the easiest to fade?
No. CrowdStrike.
Oh, CrowdStrike. Okay.
I mean, both of them. I think this sector of cybersecurity, because all of this stuff is just a nightmare in terms of Skynet and all the other things that come from this.
Sure.
That cybersecurity is probably the one service that is the most undervalued in this situation.
Sure.
But I think across the board, things got really, and it's always this way in markets. It's like the pendulum swings in both directions too far. And I think a lot of these stocks, like a Microsoft, a Meta, you're even a CRM, which I hate and I think is like a silly company, but a lot of those stocks have moved in an incredible way that I think it's kind of the pendulum is kind of we discounted it way more than what it
Sure.
going to be. They're all going to be involved in this.
And not to be like a Debbie Downer, but like, yes, Iran does not have the capability to send a missile to America, but they can send Iranian hackers. Like they can, hit our infrastructure, our critical systems that
China
are
does that
online,
too, North
like that way.
Korea.
Right?
Say
Yeah,
anybody
sure.
could. I was going to mention
Sure,
North
right,
Korea.
but we're literally though bombing Iran right
Yeah.
now. So they have hackers,
Yeah.
and so they can do what they want. And so
They can send anybody can send biological demonic things to any country. I mean, this is a horrible time that we live in.
yes, it is.
Yeah.
And why is it that way?
It is that way because for 50 years we allowed it to flourish.
Hey,
That's
leaker
why.
battle.
Multiple
I'm not sure.
administrations.
Another thing we can blame the boomers.
I'm not sure
Yes.
I'm not sure what is true, but two reports coming out of here that pertains to Apple. Apple shares sunk yesterday on report that their foldable iPhone was going to be delayed. But then, so Nikkei Asia reported that Apple was facing engineering challenges for the first foldable device. But then another leaker said, no, the foldable phone is coming in September along with the iPhone 18. So I don't know. I don't know who's right, but Apple, of course, like all the other tech stocks, is up this morning. And so there you go.
Yeah, you had a chance to get long Apple in the mid 240s. It's going to be 260. So
Yeah, even
it's over.
I don't know how I feel about Apple. Apple was so weak yesterday. I mean, it did not participate with any rally.
Yeah, but
in the market.
it didn't have the same sort of downside as everything else because it was being treated as like a commodity. I mean, Apple just it has.
It's become the dividend-paying stock that it is.
Yeah, it is a commodity. It's a safe haven. It's a value stock. Whatever bucket.
Even if it is half a percentage point in dividend is what I'm trying to say.
Yeah, no, I don't even think about the dividend. I just look at Apple as like this company for the foreseeable future has basically, I mean, you could project their revenue every single year because everybody gets a new iPhone.
Right. Yeah.
You know, it just is what it is. It's like electricity.
Sure.
Electricity is not going to go away.
Yeah.
Apple's not going to go away, and I think that's kind of how it's trading now. An Nvidia, a Meta, Microsoft, they have more of like, speculation to them. It feels like Apple has become just this kind of, you own it. Mm-hmm. It's just like it's just a part of the world.
I'm okay with that.
Yeah.
Delta reported their earnings this morning, but they also announced, along with Southwest and United, they are raising checked bag fees $10 amid jet fuel price surges. The changes come as the industry faces a surge in fuel costs. Starting this week, Delta and Southwest are raising the checked bag fees. United also jumping in on that. The changes would bring the fee to check a first piece of luggage to $45 and $55 for a second bag on each airline. Your girl gets free bags with her United credit card.
Ooh.
Get into it. It really literally saves me hundreds of dollars.
That's great. Great.
What did you do in Delta, if anything?
I have some, I'm like kind of neutral Delta, actually. I put on the Strangle yesterday in May. That'll be kind of tested on the upside, but I have a call ratio spread. I'm a little.
You did it in May with 45 days.
Yeah.
I mean, it was kind of, not really
wishy-washy.
It was a wishy-washy how to participate. This $9 or $10 move is not what you were looking for.
Yeah, I have Jade Lizards and UAL and Love, so those will be nice.
Delta says their fuel bill will be $2 billion higher this quarter. Jeez Louise.
Unbelievable.
And they say they will meaningfully cut growth plans. So bet they wish they'd hedged some of their oil prices, their fuel prices. But
So I got emails from people saying, should I wait on buying my plane tickets to go someplace, whether it be Europe or
they're not
for
for your summer,
whatever, your summer travel. And my standard answer pretty much was the airlines will find a way to keep those charges high for years coming, whether oil goes to 120 or back down to 60. Like, I don't think anything is going to change one way or the other.
No, they had a chance and they took it.
Same with at the pump. The pump's not going down.
Pump, you might see a little bit quicker movement, but it'll be years before you get to that sub $3 again, at least here in Chicago. I agree with you there.
In other news, Fox Corporation said they will integrate Kalshi's prediction market data across its news and streaming platforms, reflecting a broader trend among media organizations to use market-based probabilities to complement traditional reporting. Kalshi also working on integrations with companies like Yahoo and their news tickers. So I'm just pointing this out.
Yeah. Interesting. I mean, I'm wondering how
I heard there was a front running trade on predicted markets. I don't think on Kalshi, but
there's that and everything.
Yeah, where they talked about the cease, nailing the ceasefire for some big.
Well, I'm wondering how the boots on the ground settled, because you had a guy on the ground there. We had the two pilots that were rescued.
Yeah.
Does that count?
Just like with hurricane insurance, when you have a hurricane, they tell you it's a tornado, and you're not covered for tornado insurance. They're going to find boots is more than two, and more than a team that they may have had hundreds trying to find them. They're going to say it's a platoon, which may be hundreds of thousands, kind of.
I just wonder how.
Sure.
I think it just goes to.
They will find a way not to pay.
That is like allowed. I think that's just.
I agree.
Awful, and I would not participate in it on just morals, but. It'll be interesting to see how some of those things, because there's so much gray area in all of this.
Yep.
In a heartwarming story, the Masters tournament kicks off tomorrow in the historic Augusta, Georgia. But amateur Brandon Holtz will go from a patron to a player. He won the amateur competition, and so that means he gets a bid to the Masters. But he went to the Masters every year with his dad, and then his dad gifted him his lifetime badges that he's had since like 2004. And so he's a real estate agent. He played D1 football for Illinois. Illinois
He's
State.
gonna make some great
basketball.
contacts.
He played
now.
D1 basketball for Illinois State, but he's just like, he's a real estate agent, and so he's playing in the 90th Masters. He'll step inside the ropes after 20 years of visiting the hallowed grounds as an excitable patron.
Doesn't an amateur make it every year?
Yes, he earned his place by winning September's USGA mid-amateur title in Scottsdale, Arizona. And so
it's a great story. It usually ends there, though.
Was it Adam Block or Daniel Block? The guy that was like the golf pro that filled in.
Oh, H&R Block? I don't know.
No.
I know what you're saying about. He was like an instructor. He's like a PGA instructor, but he was an amateur.
Withdrew and they needed a player.
Yeah, I know. I remember.
Filled in and came in like 5th place.
Yeah.
Like an insane.
Talk about a ringer.
Yeah. Cool.
Who do you like in the Masters? Who are you betting? I don't know.
Oh, I get my info from Mikey.
Okay.
So.
Because your bet's got to go in today.
Does he have some system there too?
We've pointed towards like Adam Scott as an interesting one. We're talking like lower down.
Okay.
Nikolai Højgaard.
Oh yeah,
another one.
You can't win betting on the chalk. You know what I mean? You don't get paid. It's almost like the basketball. You got to get that 16 seed to go a little.
But isn't Scottie Scheffler just the best of all time? Like, isn't?
Yeah, but he's been like kind of wishy-washy.
He says the same about you.
Oh, for sure.
Hey, finally today for my viral video of the day. This is crazy that Netflix is posting MLB clips, and it's even crazier that this is a White Sox highlight. I don't think I've ever in my life seen a White Sox highlight go viral. So I thought I would share this. So check this out. It's pretty good.
It would be his 10th stolen base.
Whoop.
No way!
Nice.
Oh, that's great.
He stopped short of the bag.
How
to
do you
avoid
do
the
that?
Tag. What a
air
sweep.
brakes.
If he did, it would be his 10th stolen base.
That's pretty amazing.
Like my knee hurts just watching that.
He stopped short of the bag.
I think that's awesome.
That's pretty incredible.
Yeah. It's a good job to that young man there. I don't know if the White Sox are good or not, but I know that the Cubs pitcher is Dunzo already, so that sucks.
Oh, that sucks.
Yeah, he needs elbow surgery.
Ooh.
So, yeah.
Brutal.
Hey, that's been my time.
Beautiful.
I'm going to get the
Good way to finish. We're
heck
going to
outta
take a
here.
quick 90-second break. Even the S&P is up 170. They moved about 15 handles in the last, since we've been on the show for the last 45 minutes. So we'll take a quick 90-second break and come back. We'll talk about the markets and a lot more, yesterday's action, and confirm and send. We'll be back in 90 seconds. Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, a look back on yesterday, which is going to feel like it was a month ago.
Yes.
But it's
totally different market. Well, it's
12, 14 hours ago.
It's actually the look back is interesting because we were down the entire session and rallied into the close, and we've had a lot of these days where it seems like if you just did nothing, you would have just thought there was like nothing happening in the market.
Right.
If you weren't watching it. So that was what it was like yesterday. But let's take a look here. Across the board, basically a flat day. Mm-hmm. The unbelievable S&P 500 basically unchanged here. NASDAQ as well. You had the Russell up, the Dow slightly down here. This was not the intraday action. The intraday action, you had volatility peaking, you had oil at new highs. This was definitely a little bit different than that.
Much different than this snapshot picture of the close.
Yes,
and in line with history being unchanged basically across the board.
It was an inside move, quote unquote.
It was an inside move. But if you look at it like a 1 day move with volatility, I think it was maybe pointing to about an $80. For a full 24-hour period, about an $80 move on the E-mini S&Ps, and I believe they moved about $95 top to bottom. So that is in line with volatility for the movement.
Yeah. The Mag 7s, when we look at them, it was a pretty mixed bag there. On the Mag 7s, you had Google outperforming to the upside, Amazon as well. Those are two that are going to be. I think Google's up like $15 this morning.
I mean, everything is up to double digits.
Amazon's
this morning,
up,
but yeah,
5 or 6%. Meta's going to have a huge session. It looks like it's up like $25-30. The weakest of the group was Apple, which was down a lot more than that in the middle of the day. It was down like $11, I think, at one point, which is about a 5% move. So the big move in Apple kind of rallied into the close. And then Tesla has been the weakest of the group. It's it's back down to it was under 350 yesterday. So you've seen some choppiness in the Mag 7 for sure.
You have, for sure. And it's been a tough hold either way.
Yes. When you look at the sectors themselves, so across the board, you got a mixed bag here as well. Semiconductors were relatively strong yesterday. You had energy moving to the upside, but energy has kind of front ran the move in oil. You've seen over the last week or so, if you look at ExxonMobil, CVX, they despite oil making new highs, they were down 5-ish%.
Yeah.
Like XOM went from like 170-ish to 155, 160-ish. So you kind of saw a little bit of that, like, profit taking stuff off the table into that move. Tech was strong. You had utilities, healthcare. UNH was one of the biggest movers of the group. So you had some healthcare stocks getting a little bit of a bid there. On the downside, you had some of the metal stocks kind of coming off the highs. Staples, your Walmarts, your Costco, stuff like that.
Mm-hmm. Yeah, I don't know what it is. Beautiful.
It was a mixed bag.
Yeah, it's a mixed bag.
Like it was a mix. That's basically the story. A mixed bag. Yeah. In terms of the biggest movers, Paramount on there, I didn't even look at that one, but you have a lot of the healthcare names. There was
UNH annoys me because I had mentioned that, and I wanted to do it for my option trades today, and the stock had rallied a couple of dollars. In hindsight, as you always say, it's moved $50 to the downside, it's moved $3 to the upside, and you don't want to put a play on there because you think you missed the bottom. And you're right.
Yeah.
On that one.
Yeah.
UNH annoys me.
UNH, Humana.
It's not great markets.
CVS. Yeah. I mean, but that was kind of a news-driven headline again.
Sure.
One that, unless you're positioned for it, it's hard to play that.
Yep.
You had a lot of the semiconductor stocks, some of the high-flying stuff like your Light and Coherence, Ciena. They're not on this list, but they were having big days like Micron, SanDisk, stuff like that. You had some of the cyber stocks like CrowdStrike, PanW, as Vanessa mentioned. You had Intel really strong. It was definitely like an AI chip kind of bounce that was kind of holding the NASDAQ and some of those names up.
Yep.
On the downside, a mixed bag here. I don't really take it too much out of this one. I mean, you've got like Dollar Tree in there. You have Axon, which has been kind of a choppy one. TTD is a stock that looks like it's going to zero. Like this list of stocks.
On this list of stocks, and again, playing it bullish or bearish.
I don't filter these, so I let this be whatever it is.
Sure.
I think it's interesting.
I don't think we have positions in any of these. I mean,
no.
I mean, they're obscure stocks. Is the point I'm trying to make here. Bullish or bearish. I don't think they have the greatest option markets in here either on any of these stocks.
But I think it gives you a little bit of like what sectors are moving here, and you see it's like a lot of the cyclical stuff. You got some of the industrial stuff in there too. So just a mixed bag here.
Yep.
For our heat map here, pretty mixed day. You got Apple in the red, kind of dragging some of the tech sector down with it. The defensive stocks like your Walmarts, Costco, Coca-Cola, these stocks have been super, super strong. Those have kind of taken it on the chin there. And you see it correlated with Apple, as I was kind of saying. Apple's kind of become that consumer defensive name versus the rest of the tech stocks there. You got some of the cyclical stuff. Tesla in there has been super, super weak, but across the board, a lot of kind of white-ish coloring here tells you it's kind of mixed bag. So that's it.
Good job. I don't know what else to say. I'm glad we went through that pretty quickly because it's a different market day after day usually. Yeah. And today it's been a nimble market. If it's been lower, we seem to be opening a little bit higher. If we've been higher, we seem to be opening a little bit lower in the overall markets. Yesterday, we did both, right? We went lower, closed unchanged, and now we're looking a lot higher. We'll talk about that and a lot more when we get to confirm and send in about 90 seconds. It's Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market here. E-mini S&P is 174.50. That's not the price of them. That's the net change, up around 2 5/8% here. You can see we are back at 68.50. Can we say that amongst friends here, where we used to stop on the downside from higher numbers? We would stop on the downside. We're back there now. Like I said to you earlier, I do not want to hear about the higher highs, lower lows.
Is Shark okay now?
Is Shark okay now? No, I think he hedged a little bit to the upside. But don't worry about him. He's making triple my return this year. He cries with 2 loaves of bread under each arm. So don't worry about him.
We're above the 200-day moving average. We're above the 50-day moving average.
Don't steal my lines. I actually texted him that, and he gave me a GFY.
Did he?
Yes, and rightfully so. But you know what? There's been studies proven if you tease your friends like that, you have a very strong relationship.
Oh.
It's good to do. NASDAQ up 842. That's 842 points. That's 3.5%. That's your leader of the clubhouse. Russell up 3.5%. Dow up 2 5/8%. Over $1,246 right now. 48,000. That's another round number. You were talking about 47,000 yesterday as a round number. Volatility in only by 8.5%. Now, I say only 8.5% because we were up 4% yesterday with an unchanged market. Volatility is still bid. Now, it is 21.95.
This is a Trump market.
This is a Trump market. Now, which we've done studies that last Trump administration, volatility was actually less than in prior years. It was volatility was overstated. It wasn't wasn't as volatile as the implied volatility was coming out to be. I think this year
higher. That's why
this one is completely. I think volatility was obviously way too low for quite some time.
Yeah,
in this administration, so it's hard to look at.
But volatility stays bid. Like he's too unpredictable.
The world's too unpredictable.
Yeah,
the tweets. You can now say that. I mean, we get our. I mean, as a boomer who has had. I mean, I got newspapers delivered to me. I know it's nothing that you've ever done in your lifetime, but I've had newspapers delivered to me. Our news now is really all on X. I mean,
it's the greatest advantage retail has right now is that there is no way the access to information. There's no.
It's a level playing field.
It's a level playing field across the board. That's the biggest edge, and the other side of that coin, which is also a huge edge for retail, is that you can act on it. Like the fund manager can't really just go and do something.
Sure.
Like, and they have to keep allocations, like there's things there's rules that they have to play to that you have dollars, you can go and do whatever you want, and you have access to the news happening in basically real time. That's why, that's why everybody's trading now. That's why Tasty exists and Robinhood exists and all these other places, because, there's so much opportunity.
Yeah. Agreed. Bonds are flirting with 115, 114.27. Big move in bonds higher. I mean, there is no outlier here, right? Equity markets are up. Bonds are up. Dollar is lower. Oil is lower. I guess if you were looking at anything, it would be, I think, volatility staying bid, as you just pointed out. Bitcoin up 3,000, 72.3. I think when we had Ryan on yesterday, it was 68,000. It's now at the higher end, if not through the higher end of its most recent range. Ethereum up almost 7%. Let's just call it twice as much as Bitcoin. Ethereum gives you a lot more bang for your buck, cheaper price product. It moves twice as much. It has twice as high the volatility as a Bitcoin. Oil down $20 to 92 and change. Been as high as 115, been as low as 60-ish in the month of March and April. And here we sit at 92. It'll be interesting to see, again, with the market. Like, I think, you have to take advantage of this up move if you've had any type of long delta and possibly neutralize it by selling out of the money calls or closing most of your short puts, or changing the unit size, from 3, 4, or 5 to 1, roll it up a little bit. Units are what's gonna hurt you on either side. But I think that's who the sellers are going to be today. I don't know if you get, I know you disagreed with me. I don't know if you get new money coming into the market. Right. What are you doing here in oil?
So I have an iron
/CL trading markets, right?
Yeah, I have an iron condor in the front. I went to make the June contract, the M contract. I did a stupid. I sold the put spread, the 70-67 put spread.
You sold,
and I bought the 100-103 call spread. So it's an upside play, but your break even is down at 70.
So it's an opening trade. I was expecting a closing trade.
I've already closed. I mean, I'm out of it, basically everything.
I saw you did
I'm
it
short volatility in the front, and I have a long shot in the back in the next contract, in the June contract.
I understand exactly what you're doing. I'm going to put it up there on the screen just so that everybody else.
I did have a 5-cent credit, so if we go back down to 80, 75, it's no big deal. It's nothing. You have risk below 70. I don't think we're getting oil back in the 70 handle.
Totally agree. Well, I don't know.
Not in the next 30 days.
There you go. Expected move for those 30-ish days is about $12, which gets you into the 80 handle, low 80s, high 70s if you were looking at.
Well, that's the front contract. That contract would put you at like 72.
I'm giving you the M contract, $12 expected move.
Yeah, the M contract's at 84.
That is correct.
Yeah,
that is
so
correct.
It puts you at like 70.
Yep.
I don't think we're there.
Gold up 147. We've been playing that to the long side. It's been a hard hold. Yeah. Gold volatility is good at 69. Getting back to oil, it'll be interesting to see what OVX CGI CGI trades at. What do you think volatility is going to be in OVX?
Ooh,
that would be the options on 98. Just call it 99. 98.80.
Did we do that? I think we did that last week for what's your assumption? Iron condor and gold. I just took off for like $200.
Very, very nice. Yeah, bought it back at 7.
What do I think OVX will be at? Mm-hmm. It closed at 90.
98. That's just 99. Whatever.
I think we're at 85. 85 or 80. 80 to 85 is my.
Yeah. I originally said lower, but I think you're right.
I wouldn't have been able to do that stupid trade, and stupid is the super.
Just two spreads that are in the same direction.
Yeah, you wouldn't have been able to do that far out of the money. $15 out of the money if volatility was going to be that much lower.
Silver, just like Ethereum is to Bitcoin, up twice as much as gold. Almost an 8% move there. Almost $5.70. Nat gas doing the complete opposite all the time, although oil and nat gas are both down. But a big move in nat gas, 11 cents, 275 there, continues to go lower. Every stock is higher today, so I'm not going to point to that. And we'll see what's going on with opening in just about 25 minutes. But let's get to confirm and send.
Yes.
Wednesday, April 8th. It's going to be an interesting day for sure.
And if oil vol comes in, that stupid trade could be profitable just on that. Like if we don't go much lower and oil vol contracts.
Yep.
What do you mean when you say something has stayed bid? Like this market.
Yeah, like volatility. I mean, it's a great example. Down 8-9% today on a 3% plus move in the market, depending on what you're looking at there. Let's call it a 3% move. You want to average them all. Yesterday, markets were unchanged and volatility was up by 4%. That's volatility staying bid. Relative, you would think that volatility would be down twice as much as it is right now. That's staying bid. So staying bid just means usually it's volatility-related products, not the overall stock or the market itself. But sometimes we will say that. Yeah. We will say, the market looks bid because, in my eyes, if the market goes lower, volatility should go higher, and volatility goes higher like yesterday, but the market doesn't go down. It just seemed like something was weird in the market. We were going to have a big move in one direction or the other.
Yeah.
Next one, please. On last call.
Liz, excited to see if I get this right.
Okay, on last call, Liz and Tony were talking about by Tony I mean me, talking about a large trade going through. I assume this is what commonly known as unusual options activity. My question is, if you can't tell anything from these trades, why are there multiple services that interpret these trades? Great question. Go ahead. You can. She was talking about a one-day SPX trade at 6,600, and I think SPX closed at 66.7, and we had a rally.
The round numbers are always going to have the most volume just because they're the round numbers. They're there for the longest period of time, and also just from
this was a 0 day.
Yeah,
so it really was.
Yeah, but it's always like that. It's just like, why go to the 65.95? Like people are going to round numbers. That's just like psychology. In terms of like what the trade is, there is, some subjectivity to it. I mean, you can look at like where the price is traded at relative to like the time that it was traded. If it's closer to the ask, it's probably a buy. If it's closer to the bid, it's probably a sell. So, there's some grayness to it, but yeah, I mean, from a liquidity standpoint, you're going to have most liquidity at round numbers. It's just like how.
Agreed. She was talking about a 0-day trade, having, the open interest or the volume in there was, in the hundreds, and then all of a sudden it was in the tens of thousands, that somebody bought some options when the market was significantly lower, maybe even ESPs were maybe 25 handles lower than that. And our discussion really hinged on, you don't know that somebody bought them because somebody had to sell them too. You can't have a trade without a buyer and a seller. Yeah. So there was a trade, at a large trade there. Now, if you really thought the market was going higher, they made 16 points on SPX on a 40-point move on the E-mini S&Ps. Now, that's a nice return on capital. But if you really thought the market was going to go significantly higher, there were a lot more intelligent things to do with the same amount of money that you could have done. So unusual option activity is a great thing to talk about. It's a nice thing to know. I have no idea. I haven't been able to, in 40 years, figure out a way to make money from the information.
Well said.
Next one, please.
What do you do when you've used 100% of your buying power and then see significantly better opportunities? Would you stick with the positions you have, or would you close some and some to get into better ones? If you would choose some, or if you would close some, how do you decide which ones to close? Choose, close, lots.
Now let's assume you're in a much smaller account and you are using, most of your buying power all the time. I'm talking about that much smaller account, and every one investor's floor is another investor's ceiling.
Yeah.
I start with $5,000. I'm not poo-pooing anybody's account here because we all have to start somewhere. But let's just say you're under $25,000. You don't have a margin account, and you're leveraging by using options, and I think it's the right way to leverage. And you're putting most of your capital to work all the time, because really, I don't think you should have, 25 to 50% would be a very wide range of the amount of capital you should have in a larger account, and even 50% would be huge in my eyes. I think you're kind of stuck. You're probably going to have mostly defined risk trades.
Yeah.
You kind of made your bet. Unfortunately, the market didn't cooperate. Now, if you have a couple of winning trades and you see a better opportunity to put that capital to work, I might close those. So how do I choose? I might close those winning or smaller losing trades to have a higher, better probability of success, or more convexity, if that's what I'm looking for. With the trades that are positive, I would probably leave the losing trades. You?
Yeah, it's a tough, as you said,
a tough one.
Everybody has capital limitations, regardless of how much money you have. There is a number where you're at max. I think closing out of winning trades is the quickest, easiest one.
Yeah.
If there's positions that you've been stuck with that are smaller losers, or you've made some money back, and there's not a lot you're using too much capital relative to what you can make back on that position, or what the upside of that position is. I think you got to kind of dig into your positions and see where you're kind of over using capital, whether it be winning or losing trades. But this is everybody experiences this issue.
Agreed.
It's a tough one.
Next one, please.
No easy answer.
No easy answer. In short, some /CL.
I'm short.
Oh, I'm sorry. I'm short. Some /CL calls that expire next week. These options are tied to the K contract. So I'm glad that they understand what options go with what future. That's the biggest thing to look at. And they obviously understand it here with this question. I want to roll them, but the M contract is trading at a significantly lower price. That's that curve that we've been talking about earlier this morning. I'm confused about how to roll these since the underlying contract is rolling over. So what would you do?
So I would just take the money and run, because you're getting absolutely bailed out today.
Yes. But let's assume that you didn't get bailed.
So just from a rolling perspective with futures, we generally go to the delta rather than the strike, because the futures trade on a curve. So your short 120 call in the K contract is a way different position than the 120 call with oil at 84 in the M contract. So you adjust based on delta. That'll put you in the same amount of risk relative to the contract that you're trading. That's how you roll futures options that trade on a curve.
Yeah,
I can't go to the same strike.
Definitely can't go to the same strike. I think you have to go to the same delta.
Yeah.
So if you're out of the money call, or you're in the money call, or whatever call you have,
delta, you go to the
20 delta, whatever that might be. So the 20 delta yesterday for your calls, and I'm just extrapolating out and using make-believe numbers, was 130.
Mm-hmm.
You may have to go to the 110 call in the new M contract. It's just the delta. That's how I would play it.
Cool.
Let's take a quick 90-second break. Went a little bit long here, but we've got a little bit of an option jive coming up next. We'll be back in 90 seconds. Even the S&Ps haven't moved since the last time I quoted them.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
Really
you,
do
Rob.
appreciate it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It's options. Jive.
Nicky, it is time for an option jive. Go.
Let's do it.
The markets really haven't moved. Maybe oil's got a little bit softer, trading 92, about $1 off of its lows, down 18%. The markets haven't moved. Even the S&P's at 175.
How to trade directional without getting burned. So this is one of your favorites. We like to use put and call ratio spreads to act on a long or short bias, while also having the potential to profit even more if the underlying were to continue to decrease or increase slightly, depending on which you're using. So we call this, and did I come up with omnidirectional? I think I did.
You and Mike.
It was either me and Mike.
No, your show. 100%. I absolutely stole it. I love it. But I trademarked it. That's mine. Possession's 9/10 of the law.
That's true. That's so Sosnoffian of you. To everything.
That's one of the meanest things you've ever said. And Vanetta's tried to say a lot of mean things to me, not only today, but days in the past too.
I didn't go against.
That's okay. I didn't never expect it from my own son. Jesus.
So generally speaking, when you talk about your positions, be bullish or bearish, you look at where your risk is and your delta on the position. If you're doing a put ratio spread and you're in the same expiration, you're going to have long delta. So traditionally, you would say, I am bullish. I have long delta. You want the stock to go up. With a put ratio, you do this for a small credit, you benefit from the up move, but your max profit is going to be against where your position is, and that's because you have a component of volatility, you have gamma in there as well, so your delta can actually change. It becomes omnidirectional as you get closer to expiration. If the stock were to kind of chop and drift lower towards your long strike, you'll actually have short delta at a point in time. And so with these trades, they're omnidirectional trades. They're very high probability trades because of the credit you're getting. The credit is what you keep if the position stays out of the money. It's generally a small credit. You're talking about on a $100 stock and you're going $10 wide on a put ratio, you might collect 25 cents.
That's correct.
And that value is value you'll keep if that position stays out of the money. If you drift closer to your short strikes, you can make up to $10. It's a high upside potential with a low probability of realizing that huge upside potential. But it's an interesting trade because it allows you to have a kind of dynamic gamma position, a dynamic volatility exposure there, while also having some short time decay, which is always something that we want to have on our.
Yep.
So ratio spreads are named because they require us to buy some amount of options and sell more than that amount against the long option. So generally speaking, we do this 1/2. You've seen us trade this 1/3. That's going to depend on like how much capital you have available. Are you okay being naked extra units? You can kind of skew these however you see fit. On a ratio of whatever you're comfortable with, but it's generally speaking, you're buying one, selling two against it. You're synthetically naked an extra unit on the downside. This goes to kind of how we've been trading oil as well, and USO and CL and MCL, selling units. When my dad says that, it means basically you're selling those tail options against that closer at the money long option.
Yes,
you can do this on a different duration too. I call that the crab trade. It's essentially this, but moving the long option a little bit further out in time. And so you get an even higher exposure to that gamma and volatility component that is, in my opinion, a positive to this sort of trade setup, because you get that kind of asymmetry to it, or convexity.
Very good, but it's an expensive trade, and that's why you'll notice that I do a lot of broken wing butterflies, which are ratio spreads with a defined risk tail to it, so it uses less buying power, especially when I'm doing option trades today. But you can modify that to your own account size. So
yes, you could do this 1/3, 1/4, 1/5. I mean, there's you could do this on any sort of ratio you want as well. I mean, it just depends on your capital.
Yep.
So we generally do ratio spreads for credit. I say generally because, it depends on how you're looking at this trade, right? The 10-cent credit or 10-cent debit, it doesn't really matter.
It's not the play.
It's not the play. And there's always going to be value to that long spread that you're buying, right? So that closer at the money option is always going to hold some sort of value. I talk about this with like diagonal spreads. If you're buying a diagonal spread, the max risk is the debit you pay. The probability of you losing that is going to be contingent on how long you hold the trade. And obviously, if you get a huge move against you and you're totally directionally wrong, you have the potential to lose all of that. But that long option is always going to hold some value. If you do this put ratio spread for a 10-cent debit, you're probably going to have 10 cents of extrinsic value on this trade. Like, you're probably going to scratch this trade.
Yeah.
At worst case scenario.
So you Delta's king. Yeah. Right. And if you're doing a trade like this for a small credit like that, it probably has basically no
one delta, two delta.
Yeah, no delta to it. Yeah. So you're putting on a strategy here. You want it to go into the middle of your tent here. That's what you're looking at here on a best case scenario. You're doing it for that strategic
Which is going to be against your delta, though.
You're
going to be long delta, but really you want like a slow drift lower.
That's correct. And if you put on a ratio spread for $3, $4, $5 credit, you're going to have 30, 35, 25, 40 delta to the trade. You're doing it for that credit. So it's an omnidirectional.
More of a naked put in that case.
Synthetic naked put.
Yeah.
There you go. Or synthetic naked call if you want to get short.
Yes, you can do this on the call side too.
Next one, please.
Traders can set up ratio spreads as a function of the delta exposure.
Here you go.
Or what strikes they wish to be their max profit target. So going further out of the money, doing this for a smaller debit is what you're seeing here, is going to be more of an omnidirectional position, whereas going closer at the money for a higher credit is going to be more of a delta position, a more directional position. So there's a lot of it's an interesting trade because there's a lot of ways you can do this. It's a much more subjective trade than iron condor or something like that, where it's really dictated by how much capital and risk you're willing to put on.
Exactly. How much directional risk you want to have on.
Yes. Since we do the spread for a credit, our probability of profit, which is our POP, tends to be really large. You look at these trades and they're going to be 80, 85, 90, 95% probability of success. And that's because most of that is baked into that credit that you get. So if you do this for a 10-cent credit, it's going to be a 95% pop because 90% of that is you just keeping the credit. There's really small probability of hitting that tent. And that that holds value, but it just is something that you have to keep in mind that, it's a really high probability trade because there's a very low amount of value to it in most of the occurrences.
Yep. Good one.
So we use
wrap it all up.
Yeah, and ratio spreads, like I do this a lot where I buy the risk in. So I put the ratio spread on, and you put it on for $1, and you put the put ratio spread on, and the stock rallies. That value, decays. You could probably take a 50-cent winner or 70-cent winner, whatever the case is. Or you can buy in where your risk is on the downside and leave yourself this lottery ticket butterfly. That butterfly that you create, you leave value on the table. You leave that 50, 70 cents that you could have just taken off the table, as a closing trade. You buy that option and you turn it into a 5% probability of reaching an asymmetric profit target.
Yep.
$5, $10, as opposed to the 10 cents, 20 cents, 30 cents that you could take from taking the trade off. So it's just, it's a flexible trade.
It is, and that's why you coined it omnidirectional, and that's why I own it. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P's up 178, NASDAQ up 8 and change, Dow still up 12, 1,300, Russell up 90. We'll be back in 90 seconds.
Turn on these machines.
Oil down.
Turn them on.
Turn those machines back on.
Turn them on.
90 seconds.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son, and you know what that means. Time for the opening bell here in less than a minute. Even the S&Ps have moved about 3 handles since the last time that I quoted them. NASDAQ up 800 and change. Russell up 86. You can see it's about 20 handles off of its highs. Dow up 1260, 100 handles off of its lows, I guess I should say. Volatility down only 8.75%. That's $2 and change. Bonds up 111. Bitcoin holding on to its gains, 72.6, which is $3,500 move there. Oil is the big news for everybody. 93 and change, about $2 off its lows, about $16 off of its highs. I'm gonna let this market open here in about 15 seconds, and we'll see what's happening. Volatility, bid relative. I've been talking about it all morning. I don't know if I'm going to talk about it much more, but it certainly is bid relative. If you have any resting orders, I would cancel them right now.
Yeah,
and resubmit them.
don't do that.
Should have said that a little bit earlier. I apologize. Here we go.
And we're off.
Spinning out of the turn. Let's go to the quick buckers. I mean, if you had to guess out there, what would you say? You would probably say oil-related stocks, and you would be right. You probably wouldn't have said Costco, but that is in there, down about $12 or $13.
Well, those are the staples, defensive.
Yes, yes.
People have been hiding in Costco and Walmart for the last month. If you look at a chart,
yeah, and they're still got paid. I mean, it's $1,000. It was under $950 not too long ago, although it is down, $20 off its highs. But yes, totally agree with you. XOM down $11, XOP down $9. All the volatility products. Market really. I said it yesterday. It seems like it's stair stepping down and rushing higher.
Yeah.
I said it yesterday. I'm not just pointing it out today. I said it the day before too. It just seems like the volatility is really to the upside, and you're seeing that so far today.
And I think you got to kind of sit for a second.
Oh, I think you have to sit, let markets get tighten up. MU up $33, Meta up $26. These are huge numbers across the board here.
These are just USO calls that they were $10 yesterday.
Yeah, they're $1 and change now.
I'm not even like looking at the price. They're just coming off.
Well, what are you going to say? Pennies,
20 cents?
one way or the other.
Yeah, just take the money.
Yes. Don't look a gift horse in the mouth here. And you should be doing a lot better than us at home because you can look at pricing and take care of everything that way.
Yes.
You should be doing better than us.
Okay.
Give me some more. I know you're doing your stuff there. I will let my stuff go so that you can do your stuff. Let's take a little bit longer look at what's going on here in the market. Let's see what those markets look like. You go to SPY just to do that, and you go to the May options here, and you look. They're about 10 cents wide, so quite tight across the board here. So in SPY, you can do what you want. Let's take a look at Tesla for a second here. You're looking at May options, and Tesla, they're about 20-ish cents wide, 15 to 25 cents wide. So you certainly could do whatever you want there. Let's go into like a Delta Airlines that had earnings and see what's going on there. Here is one where you're going to have to be a lot more selective with your pricing. Markets are $60, $80 wide here. So be careful there. So it is subject to liquidity, and you do want to watch your pricing.
Yeah.
You've had a lot of, I would go to your diagonal spreads if you're looking at those type of trades to close or manage. You went to some of your oil already, which I think is the way to do it.
That was my biggest position.
Sure.
Let's see.
Yes.
Going through my stuff here.
Okay, I totally understand. Even the S&P's up 160. It's really kind of funny here. It's not too much to talk about because we've been absorbing it all night long. Even if you look here, it doesn't look like anything is really moving across the board. We're looking at the net change of things. Like I said, I think it's time to look at closing trades. I'm not thinking about really opening a
lot of the
trades.
Like if you've been short puts or stuff like that, like those are.
Microsoft up $10 and change. Nice move there finally from Microsoft, which is good. I'm going to look to close something in there that I've been working for quite some time on option trades today. Let's see if I can get filled there. Maybe I did, maybe I didn't. Nope, working order. Again, this would be the one where if you had things that were not cooperating with you, now would be the time to take a look and do something with them. Even the S&P's up 168. What else you got?
Well, I just closed out of some long calls I had in the queues. Diagonal spread and hood. I sold calls against the.
And they left some cash in your account for doing this, right? Delta Airlines, you closed that, it looks like.
I closed some puts. I have some short Delta now because I put that strangle on.
Microsoft markets would be a good example of markets that stink. Watch your pricing in there.
Yeah.
And that hood is a hedge trade, correct?
Yes. Well, I closed out of a diagonal spread that I had. I mean, the stock's up $6.
Yeah.
And then I sold calls against it in May. I'm long shares. I'm long shares at like 75, so this move is great, but I sold the 85 calls against it.
Beautiful. Good job out of you. How does Daddy do it?
There is just a lot happening.
Yes, there's a lot happening across the board.
Yeah. Take some closing this Jets. I mean, the biggest problem now is that I'm going to have like nothing on.
Yeah. Well, that's what happens. They leave you cash, but your positions you now need to look for more positions.
Yeah.
Right.
Yeah.
Give me some more. You're all good.
I gotta do something.
Even the S&P's up 170. Not too much movement there. NASDAQ up 800. I guess off of their highs of 250 and change by almost 100 points here. Still up 3.25. They were up around 3.5% earlier today. Russell was also up a little. Well, now it's back up 340. It was up about 3.75% at one point today. Volatility hanging in there at 2170. I think you can place any bet you want to. I think volatility is still bid. Bonds 114.20 off of their highs of 115. Bitcoin off of its highs of 73, 72.2. Ethereum off of its highs too. Oil hanging in there, down around $20, just rounding here. Gold up 129 in the middle of its range. Let's take another quick look at what's moving here. MU still up $34 and change, about $3 off of its highs. Same price last night. Meta up around $30. These are 5% moves. These are big moves. TSM, 7% move, up $23. AVGO, up $5, up almost 17, 5%, up almost $17. Still all oil related. And volatility related. Some defense stocks, Netflix, one of the few ones that's down in the NASDAQ. That's all I really see so far. Yes. I know you're going through your positions here. It's hard to...
I mean, a lot of these puts are they're just worthless at this point. So...
I gotcha. What else do we have sitting here?
Wow.
Wow is right. Wow is right.
Some of these numbers are just
huge.
Yes,
totally agree.
I mean, incredible.
Totally agree.
Okay. I think I got to do.
There's
a lot here.
There is a lot here.
There is a lot here.
There's a lot here to do. You have a lot of positions on, and you're looking to probably close all of those, right?
Yeah, I mean, I'm taking a ton of risk off the table.
Yeah, and I think that's the way. I think that's the way to do it, right? I mean, I think you have to look to take the risk off. And you've got to move like this. Beautiful. You close some of that risk in VST. You close some of that risk in SPY.
My deal with your...
You close some of that risk in the Qs, just to give an example. Meta. Love, you said you were going to close that.
I just closed the puts.
Some long delta in there. Jets, you're getting out of...
the stock was up $2. What do you...
Yeah, no.
What do you do? Sit with it?
No, I don't think you should. I don't think you should sit with it at all. I mean, I think you need a nimble market. Just to give me, he says the stock is up $2. That's a 10% move. I mean, you're 2%. $2 move is usually happens in 2 weeks or more if it's all in one direction. So yeah, no, you definitely should be looking to close those positions.
And a lot of stuff, like I have some in the money calls too in USO that I'm rolling right now to just at the money, and I'm rolling risk out to May in USO right now.
Yeah, I think that's probably the prudent thing to do, right? I mean, you want to kind of take
the markets are not great for in the money stuff.
Yeah. Taking a look around here. Jesus. Been doing some of my own stuff here. Sorry, ladies and gentlemen. I do apologize.
All right.
Doesn't make for the best show.
I have
even the S&P's up 160. NASDAQ off of its highs by about 140 handles. You don't usually say that and still say it's up 3%. 1 million SPY options have traded in the first 9 minutes by my Taiwanese sources. So I think there's any advantage one way or the other. I don't know where you can see it. But good job out of everyone.
Okay.
Talk to me, Goose. Yes.
Okay. I
understand.
My whole
I understand exactly what you're doing.
Yeah. Thank you.
Yep.
So I'm reducing. I mean, I was short oil into this move. So I'm rolling out to May. I'm in the. I've traded the CL contract, but I'm in USO with units on the upside. I mean, I'm selling extra units, but I've taken off half of them.
Yep.
I mean, we've gone from 10 to 5.
Yep.
Is like what it's been.
Totally get it.
I mean, and there's just stuff that's just some of these calls went from nothing to big numbers.
To something in a quick period of time,
very
right?
Quick.
Mm-hmm.
Very, very quick.
Yep. That's fair.
Yeah.
What am I looking at now? Even the S&P's up 164, Russell up 86. We can take a quick 90-second break. We can come back with what's your assumption. You can take a better look at all of your positions. I can push all of those through also, which would be nice.
Yes, we can do that.
Okie dokie. If you have any questions, my email is bat@tastylive.com. You can send them to me.
Yes.
Nick can get to his when he can, either after the show or.
Yeah. I mean, today you got to be taking risk off the table.
I would think so.
This is if you're in the boat where, you were kind of getting squeezed leverage wise, and then you get a day like today, and you have stuff where you're naked puts. And you're back to a scratch. Like I have a Microsoft short put where I'm keeping it on, but that was a $300 or $400 loser yesterday. It's basically a scratch right now. You got back, you felt some pain, stuff like that. You can look at those positions and be like, okay, you know what, gift, I take it.
I had the same thing in Microsoft. I actually squeezed it, and it's costing me a little bit of money. I haven't been able to do anything with it.
Yeah, you got to do that.
Yep.
So.
Good job.
Cool. Good job.
Let's take a quick 90-second break and come back. We've got more Tasty Live immediately following these messages. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more. From Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Looking for market insights you can count on?
Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
We are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with a What's Your Assumption? Woo! Woo! Go.
Do it.
Do it to it. So far, so good?
Yeah.
Okay. All right. Beautiful.
What's your assumption?
What is your assumption for the rest of the day here?
I think we're going to stay here. What do you think?
Yeah, I really don't know.
I mean, volatility is continuing to contract.
It is.
I think we're going to stay here. I'm not.
It would be a first where we have a move that we've sustained, whether a lower move, we were always rallied. This would be a higher move and then go from there. I mean, I'm cautiously optimistic. I reduced some of my long delta as you did.
I'm flat.
Mm-hmm.
I have no delta right now. It's unbelievable.
Yeah. Okay.
Okay. What's your assumption? Let's see.
What is your
got
assumption
for us today?
Let's do it.
Nike bullish, bullish overall, but I don't think the rally comes easy. More interested in collecting time value here. Maybe a short put or Jade Lizard.
Okay. What do you think about
Nike up $1? I actually have a leap call at the 50 strike with Mikey Butler.
Okay.
So I'm with you there.
Your boo.
My boo.
Mm-hmm.
Okay. Ugh. What about just selling the puts?
Sure. Yeah. I have no problem with that.
Maybe you do like the 45 strike puts. It's a covered call.
Mm-hmm. Mm-hmm. Yep. I would do that. Here you go.
There you go.
Easy.
Covered call.
Covered call in Nike. I have a little bit of
synthetic covered call. Short and in the money put. At the money put.
I think, and I should know this. I do. I have a Nike position on. A $1.20 move higher. Could use more. Put it on after Nike had that big move down after earnings. Pretty much scratch on the whole trade. I'm actually down a couple of bucks on the trade. So I need more out of Nike. More out of you, Nike. You're in at a better price than me.
Cool.
Next one, please.
Circle.
Moving today. It sure is. CRCL, right?
Long-term bullish Ivy rank around 25 isn't great, though. I do have a little bit of
Circle only up $2 and change here. I mean, it is a almost 3% move in step with the market, but it certainly hasn't been one of those market leaders, right?
Yeah. Let's do. We talked about ratios.
Mm-hmm.
I talked about how I like the crab trade.
Yes.
That's what I'm thinking here. A little bit longer duration. I'm thinking June the 100.
Okay.
And then sell 2 of the 120s.
Okay. I like it.
You're naked an extra unit on the upside. So you have some risk up there.
Nothing wrong with that.
642.
Awesome.
Cool.
Okay. Good job out of you. Next one, please.
CVX or XOM. I have some short delta in XOM right now. I should probably just take that money.
Now neutral. I don't know if you're.
I'm like neutral.
Yep.
Okay.
CVX down $11. XOM I think is down around the same, $10 and change.
All right. They're looking to sell some premium. I think I can get behind that.
Why not?
180, 200 in May.
Okay.
Bang them out.
Beautiful.
There we go. I did that at 673.
Okie dokie.
200 kind of near the higher end of where it traded. Where'd it get up to? 210 for a couple days there. I did that at $6.70 credit. So you got break evens at like 175, 205.
Beautiful.
206.
Beautiful.
74, 206.
Good job out of you.
Cool.
So far, so good. PayPal. How do you like the markets in PayPal? Every time I look at them, they surprise me at how good they are. I have not looked at them in a long time. PayPal only up around 86 cents. Market's about 10 cents wide, maybe a little bit wider than that. Market's pretty good in PayPal. Ivy rank of 71. Earnings May 5th.
40.52.5.
40.52.
I'm actually long stock here. But if you remember, there was that buyout rumor and the stock rallied like $5.
Yeah, when it went, that was like earlier in the year, wasn't it?
Yeah.
Yeah, like it went from like 40 something.
I put on that call
45.
ratio spread.
It's been sitting here at 45. Good Ivy rank.
I think I'm looking at the 42.5, 50.
Okay.
30 delta on either side.
Okay.
293.
All right.
52 was like kind of where it fell off a cliff,
Mm-hmm.
which would be my break even.
Okay. I like it. So far, so good.
I can get filled here.
What are you looking at?
Trying to get filled.
I don't blame you.
I'm going to go to 280 and then I'm going to let it sit because these markets have been moving 10 cents. I'm going to let that work, see if we get filled.
Okay.
I'm in at 280 credit is what my order is for the 42.5, 50.
I like it. I like it. Even the S&P's up 150. NASDAQ up 3%, was up 3.5%. Russell was up 3.5%.
Yeah, volatility getting bid a little bit.
Volatility bid.
Not
huge, but still 22. It's down 8% with even the S&Ps, or at least the NASDAQ moving by 0.5%.
Yeah.
Okay.
EEM. I got into one of these last week. 30 to 68 days out, pretty neutral on EEM. Could see a small bounce on headlines, but the broader emerging market risk is still there. EM up like 5% today, actually a huge move. I have a tiny little diagonal spread. I did a $1.32. It's at $1.71. It's June, May. Maybe I try and, I don't know, let's see. So you want to be neutral here.
Okay.
Ugh.
I don't have a problem with that.
What about like a call ratio?
Sure. I like it.
It's kind of junky.
Yeah. That's going to be the only problem.
I'm going to do it for a small debit. We talked about this with the set. I did a 26-cent debit. I did the 60-63 call ratio spread.
25, actually. You got price improved. So good job out of you.
Yeah.
Good job out of the Tasty Trade platform.
Yes. So small debit on that trade for the ratio. Neutral position.
Beautiful. Good job out of you.
Oh, there's my PayPal. ETH, medium term, bullish. Prefer ETH over Bitcoin at these levels. Still cheap with more upside potential. Grab it around 15 to 16 ETH.
eBay. What do you think of eBay?
ETH.
Sorry, ETH. I apologize. ETHA. Ivy rank of 8. $17 stock, up $1 today. I hope you put this on yesterday. Right?
Yeah.
Mm-hmm.
Ugh.
Oof.
Oof.
Oof. Oof.
Medium term.
Medium term.
Buying calls.
Just buying calls
I'm
into
long
a
stock.
6% move.
I'm long stock.
Already.
I don't want the downside risk.
That's what you
I
want.
already have the downside.
Got it. Okay.
Couple bucks.
Okay.
In
All right.
ETH.
Okay. All right. I'm okay with that. That's all right with me.
I think I still have those in iBit? No, we're gonna put those on an iBit too.
Okay. Fair.
A little cheapy shot.
Cheapy shot.
Yeah. Because I have the downside.
Cheapy shot is good.
All right. Next one. Disney.
Next one, please.
Ew. Up $2.
See you.
Yeah.
Mm-hmm. Yeah, Disney's not my go-to here. How are the markets in Disney?
Cautiously bullish. 100 to 105 area. It's been tough to break. Leaning towards a jade lizard.
I mean, I like it much better than naked put if you're looking at it from a long point of view, right?
Mm-hmm.
I definitely think that's probably the play.
Short put call ratio spread.
Short put
long
call.
delta, neutral long.
Okay. All right.
I like it. We talked about ratios today, so we're going to do a lot of them.
Mm-hmm. Okay. I like it.
Risk is down. So I did that at $1.30. Risk is down below 90 and above 111.
Perfect.
That's where my spot is.
Perfect. Good job.
Banging them out.
I think you have to. I think that's the play.
Yes.
Good job out of you.
Cool. Next one, please.
$1.30 credit on that, by the way.
Uber. Up $2 today. High IVR and decent price here. Hard not to sell some premium. What do you do?
Uber, I would hope they put this trade. I hope they put all these trades on yesterday.
Yeah.
Uber up $2. It's a 3% move. I'm.
What do you think about you don't like it?
No, go ahead. What do you want to do?
I was looking at the 70, 82.5 strangle.
In May, earnings May 6, 70, 82.5.
Or do the 70, 80?
I think 70, 80. I mean, just because of this move with the stock higher, I think you got to be more neutral-ish than anything else.
398.
Okay, beautiful.
All right. We're banging them out.
We are banging them
All
out.
of them.
Yep.
I won't say no today.
One more, please. Oh, that's it.
Oh, that was it.
Oh, I thought it said 9 up there.
Oh,
snow. There we go. Snow. SNOW. Up 2%, $3. Snow. I mean, it's not. I mean, 145. Its lows. Its highs are in the 200 something area. So definitely not. You didn't miss anything here, even with a 2% move higher. Here is a product that has horrific markets, and I would probably, for that reason, abstain.
Yeah, I tried to do a ratio. We're gonna pass on snow.
Okay, I don't blame you.
Beautiful.
How many we got now?
Did pretty good.
Ooh, look at you, 9 out of 10 there. Put a lot of money, not a lot of money, but put a lot of trades on after taking off a lot of trades. I mean, you've made almost 50 trades today already with the E-mini S&Ps really not moving too much one way or the other throughout this whole thing. Let's take a quick 90-second break, and I'll try to get my composure and everything else in line here, and we will come back with the man who needs no introduction, Mr. TP in the house. We'll be back in 90 seconds. It's Tasty Live.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. 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 Baby, your love is too good.
Nikki, we are back, son, and you know what that means. All this means nothing, this 3% move in the market. We've got Mr. TP in the house. How are you, brother?
Fan favorite.
Fan favorite.
Good. Yeah, getting whacked in this rally.
Oh, no, TP. You didn't listen either? I warned you guys. I warned you.
Yeah, I know.
He's Batstradamus over here.
Wait, how do you say it again?
Batstradamus. Like Nostradamus.
Batstradamus. I like that.
Yeah.
I like that.
Yeah, well, when we do a square pool or something like that, I always put my name as Batsterd. So Batstradamus works too.
I think we need to get him a robe, Nick. What do you think? Like a dark gray robe.
He did those.
And he would.
Yeah, he did the what do we call those? Trade hacks. The trade hacks where you had the robe and the whiskey and the cigar.
Yeah.
Like, you got
a little.
When I was
but
cool.
a little bit more austere. Like it's Bat on the mountaintop.
Yes.
Like the storm clouds and the lightning, but he doesn't get wet,
Exactly.
And you approach him and you say, "Oh, what is it?
Oh, whatever. Great one.
Oh, great one. Which way are the spoons going?"
Yeah.
Exactly. I wake up and do that every morning, TP.
No, I had been wrong for multiple days.
Years.
I said it yesterday. It's too big. It was too.
I've been short since 2008. Okay. So all right. Now I certainly did not predict any of this. It's not like I got a phone to the White House. But here's I think is what's going on structurally is that the President Trump is not going to go into the midterms with a quote unquote forever war hanging around his neck or $5 gasoline. And just like a trader, just like any one of us, you get a trade that you don't really like.
Yeah.
Okay. It's a loser, maybe a little loser. As soon as you see a tick of profit, you take it. I take it anyway.
Yeah.
I don't let that stupid thing run. And I think that's kind of what is going on here is, yeah, as long as he can spin it as a win politically, he's going to take it. He's going to take it.
I mean, that's easy to say today, right, TP?
100%.
Yeah, okay. It was hard
And,
to say the other day.
You know, and I think as far as the Iranians go, yeah, when those B-52s are taking off from England and flying towards you, that's a pretty big motivator. And so, all right. And this, guys, the bottom line is none of that matters.
I was going to say, who cares? Exactly.
There is way too much money tied up in oil that's not moving for this to continue. That's the big problem.
Yeah.
There's way too much money.
Yep.
Yeah.
Agreed.
For sure.
So, I think the bigger point is, I don't think I see this rally as a little overdone. We're only 6% off our highs, or so, a little under 6%. You know, up from 7,000 or what are we? 6,600 or whatever now. We haven't crashed yet. And like I was saying last week, I'm bearish short term, bullish long term. Okay. But I just think this is a little bit overdone. A little bit too much happiness about whatever the ceasefire is. A little bit too much happiness with the crude oil. Crude oil, by the by, the skew is pointed towards the call side in CL right now.
Still to an extreme. And in all the products, USO, all of them, yes, very much so.
And that's why I think, we're having a sell off in crude oil, but back to your point, I don't know if any. Yeah, of course, it's terrible. War is terrible. People dying, it's horrible. I get it, but I do think there was people. I think some people were getting sick of $40 crude oil. Needed it a little bit higher, you know. So okay, you know, let's squeeze it a little bit. Let's play the game. Let's, you know, withdraw our insurance, you know, for the tankers and stuff like that, and that jacks the price up. Simple as that. You didn't even need a war.
Other administrations didn't need a war to jack it up. You're 100% correct.
Thank you, Tony.
Right, it's
Tony.
just pricing. I think the play here was volatility was so. The market wasn't going lower. To your point, we're 6% off highs. We're nothing off of lows either. I mean, now we're in the middle of the range. What do you want to do now? Volatility is still elevated at 22. I think you should be doing both sides. I think you probably, like TP, should be leaning a little bit short here. But I really think it's a two-sided trade because I think we're going to have volatility to both sides. I think you let the market beat you at this point. I don't know. Like where the market's like, I don't have any conviction right now. The play was doing something over the last couple of days and getting direction right. Now, if you got direction wrong, you roll up those puts and you'll be able to save yourself some money because volatility is still high at 22 here. So either side of the coin, whether you got it right or you got it wrong, there's still opportunity abound everywhere.
Yeah.
You are getting paid to take risk right now.
Yep, you certainly are.
There's going to come a time, maybe this summer, maybe this fall, maybe next year, who knows, when volatility, when the VIX is back down to 14, and you're going to be thinking back to the springtime of 2026, thinking, oh, those were wonderful times to get paid. This is when option traders get paid.
Yep.
And if you want to make a directional bet, awesome. Sell a call spread. Sell a put spread. You want to be neutral? Sell an iron condor. You're getting so much more credit right now for the same amount of risk. You know, I hear people say, well, it's a little too risky for me. I don't want to trade. You can't do that.
Agreed.
We've been doing this long enough to realize that when you stop trading at this time, there goes your year.
Yep. Yep.
Okay.
Yep, right.
And on the floor, that's kind of, you know, when the orders are coming in, that's when you're going to jump on them. And it's the same thing here, folks. If you are not taking advantage of the higher implied volatility, whether it's in the S&Ps or gold or crude oil or whatever, folks, please use defined risk strategies. Just get in the game.
Yeah, for sure.
Agreed.
So here's what's interesting. I was looking at these interest rates recently, and I personally am bearish on bonds.
Okay.
Just because I think, and the other big thing too, guys, is nothing has changed structurally in the economy from this. Interest rates are still relatively high. Inflation is still a real live thing. The crude oil at 92, it doesn't even have to be 115. Crude oil at 92 starts making things more expensive, right? And that is putting pressure on prices, putting pressure on inflation. And I think personally that's bad for bonds. Yeah, I've been wrong on bonds. They're up today still. But what I looked at for the cherry picks yesterday, and what I want to talk about a little bit today, is the shift in the yield curve from the light green line in the middle was December 31st. Okay, so we started the year right in the middle of the dark and the medium green lines. Okay. Before the shooting started, around February 25th, I think they kicked it off the 28th, whatever. It was that medium gray line. The interest rates had actually dropped a little bit. And that's when we saw the rally in bonds. That's when we saw, and I remember us talking about this, guys, that's when we saw the dollar crashing. Not crashing, but the dollar was sharply lower.
Sure.
Yeah.
Interest rates were moving down. People were thinking, oh, maybe I can buy that house now. Maybe I can,
No.
Oh,
Gotcha.
Sorry. Nikki, can you grab one end of the rug? I'll grab the other, and we'll just yank it right out from under you. Because as soon as they started shooting missiles, we get to that dark green line. And what's interesting about this, guys, is it was up. Interest rates were up across the board. Yeah, they saw the biggest jump around the 1 and 2 and 3 years, but the 10s and the 30s were up too. And that was a big shift, and that again drove the dollar higher. So and that's what it pushed bond prices down. Remember that when yields go up, bond prices go down.
Right.
And so it's just across the board. Why did the 10s and the 30s fall down the most? Their interest rates, their yields didn't jump up that much. They don't have to. They have so much duration. They have so much sensitivity to a change in a 1 basis point change in the yield that they drop sharply, even with a relatively small increase in the yields. So this is what you saw. I looked at it today. It's the same green line. It's the same green line. Things have not, the interest rates haven't dropped. So let's go to the second slide, and this is what we're looking at in the currency markets right now. Just like last month, we saw low interest rates push the dollar lower. This is the UUP, the ETF, the currency basket for the dollar. It's got things like the pound, Canadian dollar, the Aussie's not in it, but yen, things like that. And it's been rallying ever since. So interest rates go up, dollar goes up. No great surprise there. The question is, in looking at some of the Fed funds futures, for the likelihood to see the probability of a rate hike at one of the upcoming FOMC meetings, vast majority of the probability is unchanged, right? Low single digits for a rate cut or a rate hike, but the rate hike used to be 0. Now it's like 2%. So the possibility of a rate hike and keeping rates strong is there, and that's what's kind of keeping the upward pressure on the dollar and against some of these other currencies. They're up today a little bit. Let's go to the next slide, and we'll see the relative performance of some of these majors. And like I said, the Aussie dollar is not in UUP, but I like trading the Aussie dollar sometime, and it illustrates an important point. Where's the next slide? There it is. So starting from January of 2026, these are the percent changes of the currencies. You have Canadian dollar, euro, British pound, yen, all down over the past 3 months. Aussie dollar is actually up a little bit over the past 3 months. Why is that? Well, partly it has to do with higher commodity prices. And Australia's tied to, a lot of commodity exports. So that's been helping keep the Aussie dollar up a little bit. But the yen is getting crushed. The yen is that purple line. It's down the most. And again, that goes back to some of the structural things happening in Japan. Interest rates are persistently low. I guess she's their president or prime minister or one of those things. She wants to see a cheaper yen to boost their economy. And again, the global economies aren't doing so great. We've talked about Oracle laying off a lot of people. Volkswagen laid off, I think is laying off about 50,000 people over the next few years. The economies are sort of stagnating. So having a cheaper currency isn't necessarily bad, should help some exports. So what I was looking at is a couple of trades in the yen, and we've talked about this before. I've been a yen bull for a while and have been getting punished on it. But as we go to the next slide, the volatilities are relatively strong. We had that spike when the dollar was crashing. When the dollar was rallying up back in the mid to late. The intervention.
Yes.
Is that what we're calling it now?
Wasn't that it was like we had like a 4 or 5% down move in the market. That was when vol exploded.
Yes.
I think that was did we get a 30 handle vol?
Forward slash VX got into the high 20s, 27, 28.
I don't think it did.
VIX may have gotten into
the VIX, I think, because I remember it was crazy in the overnight session.
The highs were made in the overnight sessions.
And then it was basically
VIX got up to 35. That's VIX.
35.
Yep. VIX.
The cash VIX.
Yes.
That was the carry trade unwind.
That's right.
The death of markets.
Mm-hmm.
So the point is with that, Nick, is it was that sudden shock. Oh my God, they're starting to shoot at each other over there.
Yeah.
And then it started to slink back down. I know, Tony, you've been trading the VIX futures options pretty successfully recently. And so that's, again, I don't think trading VIX futures is everybody's cup of tea. I would trade VIX using defined risk trades, particularly from the bullish side, whether you want to buy a call spread, sell a put spread, something like that. But trading, I don't ever want to be short VIX futures. And I'm not a big fan of just being net short VIX at all. Mm-hmm. But if you wanted to trade it from the bullish side, I'd sell a put spread or buy a call spread. Either way, you're probably going to get rewarded on a call spread a little bit faster. So, but this is what happened in the currencies, and the volatility across the board in some of these currencies is still very high. Their IV ranks, which I don't have a slide for, unfortunately, but the IV ranks are very strong. Yen, I think, is, if I remember, it was like 65% or something like that, or at least 50%. The things are the volatilities are very high. So as we go to the next slide, what's on the next slide here? Do we have another one? I can't remember.
This is the last slide.
That's the last slide.
That's the last slide. Thank you. So here's the point. As I look at the yen futures options, the skew is pointed towards the upside in the yen. That is enough for me to consider selling a put spread in there. Selling out of the money put spread in JY, you get a decent credit. You get, like I said, guys, you get rewarded for taking risk when volatility is high. When volatility is low, it sucks. You have to step in front of, nickels in front of steamrollers. Now you're picking up $1 in front of steamrollers, okay? Right. And so that's how you get rewarded. So I was selling a put spread in yen. I was selling a call spread in the Aussie dollar, only because I think these are two contrarian trades. That's all it is.
TP, you've cursed me. I've followed you into the Japanese yen. I have sworn off the Japanese yen for the last couple months here, but I am with you.
Selling the puts.
I'm an enabler. I'm an enabler. If we were in a 12, if you go into a 12-step program there is no thing, because I don't think trading is like negative. I think it is a net benefit to society and the family and all that. So I don't think you need necessarily a 12-step. But let's say you went into some meeting or something, it's that TP. It's that TP is just encouraging me. He's always bugging me. Nikki,
he's so convincing. I'm short the Aussie dollar too.
Come on, Nikki, just do a trade. It's not going to hurt. What could go wrong?
It doesn't take them a lot.
And so the point is, you're using defined risk strategies. Folks, that is the name of the game. When volatility is high, if you're just starting to get into futures options, please, first of all, you got to open up a futures account. There's no cost to do that, and you can trade it. It is, I don't know, what's the word? It is completely visible next to your equities. In other words, you see it on your position statement. You trade a futures option, it's right next to your SPX and IBM options. Okay, so it's all mixed together. It's not like you got to go from one account to the other. That's a nice thing about the platform. But if you are not yet trading futures options, okay, that's fine. Open up a futures account.
My one caveat would be don't do Japanese yen as your first trade.
It's
not from the long side.
You can. Yes. I mean, there's a lot of other things. To trade. I'm bullish on the grains. I'm bullish on soybeans. Sold put spread in soybeans. It's stuff like that. It lets you trade. The futures are very product focused. In other words, okay, you want to trade grains? I could trade, John Deere. I could trade Mosaic, the fertilizer company. But it's not the grains themselves. That's the advantage. So that's what I got for you guys today.
Good job, my friend. We're going to take a quick 90-second break as even the S&Ps are up 153, NASDAQ up 690, Russell up 80, Dow up 1,200. Hanging in there off of their highs by about a half a percentage point across the board, maybe a little bit less. Volatility hasn't moved. It's 22. Bonds have gone a little bit lower. TP's 114.17 after flirting with 115. Bitcoin gone a little bit lower. It is up $2,500 overnight, but it is off of 73, 71 and a half, a little bit more. Oil caught a little bit of a bid, $3 off its lows, down 16.5%. It was down 18% to put it in perspective.
Where is it at now, Tony? 95?
93, I'm sorry, 94.40, almost 95 in the front month.
It's rallied a little bit off the lows.
Let's take a quick 90-second break. We'll come back. We got more Tasty Live after this with the guys from Tasty Trade. Back in 90 seconds of Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live, that's right. But this man, Tasty Trade World Headquarters, you're a friend of mine, ever popular. Q, what's up, brother?
Fellas, how's it going? I'm doing
good.
well.
I mean, you are relatively young, especially somebody who's pushing 60.
The Social Security over there.
What am I, 64? I'll be 64? Yeah, yeah.
You were 62?
62. I'll be 64, July. Yeah. Wow. Oof. That's old, right? Your mother's already there.
Not yet. In May, she'll be there.
Yes. I've seen 2%, 3% moves, but I've seen more of them now through your trading career than I had ever seen in the past. Is this the norm?
Yeah, I would say, like, to me, I'm very desensitized to, like, these moves. Like, 100-point move in SPX moves, whatever, that's not as big to me, you know, especially, like, as the index has gotten bigger. You know, it's not, 100 points is not what it used to be, you know, at 5,000, what it is at 7,000, or whatever you want to call it. Right?
That side of it, I think, is the hardest to grasp. Because there were times where 15-point moves, 20-point moves were, like, huge for us. Not too long ago.
Yes,
the market has gotten significantly bigger.
Well, then I remember that, I forget like shortly after COVID, it'd be like the market only moves like 20 points each day, you know, and now it's like we move 150 and that like makes sense. Well, obviously with like the tensions, you know, ceasefire, whatever, whatever they're calling it, I don't know. But yeah, I mean, like obviously we were expected move last night was 100 points and we're up 150, which is, you know, sort of to be expected for something like this, right? And so, yeah, I mean, when we see right now with volatility where it is, when we see like 70, 80-point moves, that's not anything crazy to me, for sure.
Doesn't seem like it, right?
Yeah.
I mean, it should seem crazy, but it's not.
Yeah, I would agree. Yeah, but I mean, with volatility where it is, I mean, it seems like these bigger moves are sort of like being priced in already, whether it's like inside or outside the expected move. It's like we're expecting, we're not expecting like 20 points like yesterday,
No. Volatility still.
It's certainly, it's not your father's market. Is what it comes down to. I mean, things are ever evolving, and it's not my market anymore. It's you guys.
Well, now, would you say that has to do anything with like the more active retail traders, like democratization of the markets, or do you just think that's like the way things are now? Sort of, volatility not really going below the lowest we've seen volatility in a while is like 12 or something like that.
Yes.
And it used to go into like the 8s,
Yes.
And so do you think that's like a function of like electronics, whatever, or is that just like that's just what we're seeing now?
Yeah, I don't know. I'm not smart enough for that to give you the why. I will say, as the numbers, I think you hit on it from the very beginning, as the numbers get bigger, I think volatility has to stay elevated to support those bigger numbers. So I think it's just the stick.
Yeah.
The stick was so much smaller back in the day, and you move it didn't move as much out here. The stick is so much larger now. You move the same kind of movement, you get much wider swings.
The relative moves, though, you went through 08 and 2000.
Yeah.
I mean, those are different than what we've experienced, in our bear market crashes, whatever you want to call it, corrections, whatever you want to call it. But in the moment, it probably felt the same. You probably didn't have a different.
Oh, most definitely. It felt a lot.
It felt crazy.
Yeah.
But it's the same like that.
Yes.
Markets don't change.
Markets don't change.
I think the players and the the kind of outside the market changes, right? The news,
but it seems like markets today are less time sensitive. Like 40-day options.
Things don't happen on a 1 year time frame. They happen on a 1 week.
That's correct.
Time frame.
That's correct.
Yeah, but that goes to Q's point of like access to markets, access to news, liquidity. I mean, there's so much money in the system.
Yeah, it's so much. Yeah,
there's just those dynamics have changed so much. I mean, we had to call him to place a freaking order.
Yeah, right. Like my job would be a lot busier.
If you called me, you really got in trouble because you met a market maker and we had horns, and tails. So
now you got penny-wide markets at your fingertips.
You were calling Frankie in the chat room is who you were calling. He was coming to me.
Oh yeah,
if there were same amount of people in the market as there are right now, but you still have to call, my job would be a lot busier.
Yeah,
I wouldn't be coming to hang out on the show for 5-10 minutes every day, and our trade desk would be 10 times the size. We'd have like 1,000 people on the desk or whatever.
Yep.
It's like if it was the same. So I wonder if that has anything to like. I feel like there's no definitive answer whether that has
there is no
definitive volatility
answer.
or not. But it's really, and that's what like makes it so exciting, right? Is that like anyone can participate at any side either. If you want to buy oil or go short oil, you can do so. You want to be omnidirectional, you can do so. You want to be neutral, you can do so. And that's what's like so attractive about the markets.
Totally agree. Good job out of you.
All right.
Well, let's get to your list, my friend.
Let's get to the list. Top 20 symbols going through the system. At number 1, no surprise, USO with a 57. NVIDIA 6. Tesla 17. Amazon 53. Micron 65. SLV 51. Microsoft 83. GLD 61, Meta 57, Intel 82, Apple 42, Google 49, TQQQ 51, SoFi 43, AMD 53, IBIT 34, Palantir 31, Robinhood 46, SNDK 65, and Broadcom 23.
Nice little list you got there, my friend. Good job. I'm surprised. I'm not surprised that oil is the leader in the clubhouse and Tesla is not with the oil.
Tesla's reversed its whole move. It's back down below 350.
Crazy, isn't it?
Crazy. It did not get any love.
No, it did not. It did not. I don't think they like this whole SpaceX thing, or
No, I think
to the person, I forget who it was.
I think it's spreading out
you can concentrate the Tesla fervor into one spot. Now you got SpaceX coming in. It's going to spread out that.
Yeah, no, totally.
That base.
Yeah, totally agree. I mean, to the person who said, what do you want, SpaceX or Tesla? I think that right now with the pricing of Tesla, because SpaceX isn't out yet, he was right. I think you want SpaceX, right? I mean, it seems to be working out that way.
Yeah.
All right, let's let you go. Get back to the trade desk. Appreciate your time. We're going to bring in our next victim. Oh, I got you, my friend. I know who you are. You're my man, Ryan. What's up?
Are we so back?
Back again. Well, I'm back for day 2 here. First of all, I can't believe that you're turning 64, Tony. You look a lot younger.
Oh,
thank you, my friend. That was very nice. That was very nice of you to say.
I was surprised sitting over there to keep my mouth shut. The mics are hot, but
Yeah, the previous chair was looking a little decrepit. You've done good. You're working out. You're eating right. It's good.
Good skincare routine. I'm assuming.
Yeah.
You're
Thank
glowing.
you. Yeah, thank you. Yeah, I'm trying. I'm not gonna lie. I let myself a little go there during COVID. Was a little, kind of a lot of debauchery going on there.
It happened to all of us.
That's okay.
Yeah. Old men, get your tea checked. That's the key. That's the key to Fountain of Youth. What's the key to Fountain of Youth with this Bitcoin? 71.3.
Can you comment on the Satoshi thing? Vanetta brought that up. I feel like we go through this every single year.
I feel the same way.
It's like a deja vu loop where you get this. I mean, New York Times comes out. Oh, we found Satoshi. Like, all right, yeah, sure.
Yeah.
I only believe Scottie Pippen.
What's his
He sees
view?
Satoshi in his dreams.
What I find fascinating is who you ultimately find out is like a big Bitcoin bag holder or a big proponent. I don't mean bag holder in a derogatory or negative sense. I'm a Bitcoin bag holder. But yeah, I didn't think Scottie Pippen was a pro Bitcoin guy, but he is, which is amazing.
Is he the creator of Bitcoin, Scottie Pippen?
No, I don't.
No, no.
I think there's like 3 camps. Either Satoshi has passed away, one of the early cypherpunks. He's still alive, which I think is what the New York Times article, is that who it was?
They said they know who it is, allegedly.
They have. He's been like in the list forever.
Yeah. Or it's like you also see
CIA.
Yeah, there's
CIA.
that camp on like Twitter that like when you really find out who's behind Bitcoin, you'll never want to own this.
Yeah.
It's some product of the CIA. I don't know. I mean, we can watch the wallet address. If that ever moves, you've got some problems.
Yeah.
But does it matter
Yeah.
at this point? I don't know.
Yeah. No, I don't think so.
Well, maybe if it's a CIA, it might.
Yeah.
But
That would be interesting.
That would be a coup.
Yeah, that would be a coup.
That would be a coup.
It seems to have reached escape velocity.
The evil empire is actually the creator of the thing that was
supposed to
going
free you
from the evil empire.
Yeah, that would be
a total FU.
Yeah,
that really would be.
Well, you can short it if you want.
That's true. That's
yeah,
true.
you got the futures. You
There
can
are
certainly
ways
do it.
to
You can
do
certainly
that.
do it in size too, right?
So we're feeling better today, guys? I'm feeling a lot better.
I think so.
I'm feeling good, even.
I feel good.
Yeah, I think so.
For now.
I think so.
Yeah, for now.
For now.
Until the next crisis comes in the next couple weeks.
And by the weekend.
Yeah, by the weekend, everything moves quick.
Everything does move
Yeah,
quick.
you know?
Everything does move quick.
I mean, we just got out of World War III. It took like a month, but it was,
Yeah, it took like a month, but it helped. It seemed like it, at least, right?
Yeah.
Oof. All right, my friend.
How do you feel about
What do
this
you feel
market?
about that?
What are you looking at? What is interesting you?
I mean, as we talked about yesterday, no matter where you were trading, you had an opportunity to sell premium, to sell volatility. If you want to take the other side of this event risk, right? The event risk being, of course, that we're going to hit that 8 p.m. deadline and then all shit's going to hit the fan, to use that technical term. And so I want to take the other side of those trades. I think you guys do as well most of the time, not to put words in your mouths. But I think you also have a chance to reload here. So you got the massive volatility crush that we live for. You're seeing that across oil. You're seeing it in gold. You're seeing it in the VIX, of course, and other areas of the market. But I don't think that anything has really changed, right? You have a 2-week ceasefire. If you start to look at some of the details that are emerging, there are different outlets that will track tankers that are moving in the Strait of Hormuz. You get, on the ground kind of insights in some sense. I don't know how much has changed. Are ships going into the strait to refill? Like there's a lot of complexity to this. And so a 2-week period maybe buys you some time for further negotiations, but we'll see.
I'm with you. You were actually talking about it holding up here today, and we haven't gone anywhere. I mean, we've sold off the highs.
I mean, we're 30 points off the highs into it.
30 points would seem like a lot, but not lately, right? I mean,
we're right in the middle. We're at 6,800. It's been, for 2 months we stayed between 68 and 6,900. Like we're right back there.
Yes.
First 2 months of the year was
coming from highs down. Now we went from lows higher, lows higher. Yes.
But we're in no man's land. Like
we are in no man's land. Why I said both sides, maybe with a little bit of short delta.
If you did nothing from the end of December,
no big deal. No big deal.
I know, that's what I'm saying.
Yeah, you took massive heat to get back to no place.
Yeah.
Right? I mean, yeah.
I think you have a chance to put on some strangles, some iron condors here. A simple way to express that short vol view if it's going to continue to compress in the short term. But I also look at this as an opportunity to reload on some of those trades that when you look at that 1 month, 3 month kind of performance, you want to be on the right side of that. So for me, it's looking at the move in rates. Obviously, nobody's bigger than the market, so I'll see what happens.
Yeah.
But I like being short tens here, seeing if we see, ahead of CPI at the end of this week. You might have a setup there.
Like via notes? Or what do you look?
I just trade it small, man. I'm in the 10Y future.
Oh,
so
just
just scale into that, and that gives you a way to purely express a view on the yield. Obviously, you can do that, but in terms of just a straightforward trade, looking to go long 10Y. Selling out of some things as well, covering some shorts. Yesterday, fortunately, but I think you have a real opportunity in oil still. You're at extremes in many areas of the market and you've seen a pullback. I still think that you probably have a bullish oil environment.
Yeah.
If that's not true and price really breaks down here and you're sub 90 and pushing into the low 80s, you have to rethink that. But I think you buy the pullback, in my opinion. In crypto, not much has changed. We can look at the correlations in a second. This is all moving on the same thing short term as we've discussed.
Yeah.
Nice to see Bitcoin move from 66 back up to about 72 over the last week or so. But we've been here before.
Right.
Vols come in a little bit, but again, not much has changed. Got some numbers we can run through if you want to take.
Yes, let's look at expected moves here. Is volatility expanding today?
No, it's coming in a bit. So you're seeing the same thing.
Even on the upside. Interesting.
Yeah, seeing the same thing across the board here now that kind of unknown has become known.
Yeah.
We'll see how long it lasts. But yeah, implied vol is back to 45. So you got a low IV rank there. But again, if you go back to February 5th, you had about a 96% implied volatility. So your IV rank is going to be skewed by that. We'll roll out of that period here shortly, at least on the 3-month rank. But implieds come in. Ranges look a little bit better, of course, with the higher price. So you're now pushing back up towards the high end of that actual price range that we've been in, which is about 75, 76. Have not been able to break above that. So I think you continue to look at that as kind of the quote unquote resistance here short term. But nice to see the bottom move up a bit as well. So 67 to 76, ETH. 2281 to 2438, still not above those levels that we've traded into either. And running into the same thing here, you got the pop and sellers showed up right where they've showed up before. The previous high in there from a couple of weeks ago when we thought maybe we were going to see a bigger move was about 23 and change. So not there today. Maybe we'll get there. The 1 week, 1 standard deviation move does imply that, but I think that big kind of $2,500 psychological level is key here for ETH. That said, if we jump to the next slide, kind of stick with ETH for a second. ETH has been outperforming on a relative basis for now. So if you kind of look at the 3 majors, let's call them, in terms of largest by market cap, that's going to be Bitcoin, Ethereum, and Solana. I don't think you throw any money at Solana right now. It's just not performing or outperforming versus the rest of this stuff. I own it higher, of course. I'm not looking to put any new money into that at these levels. the trend has to change. The price performance has to just simply get positive over a 1 month, 3 month period for me. But ETH has been trading versus Bitcoin a little bit better. We'll see. Still down on a 3 month basis, as you can see here. The rest of this stuff, it just isn't the time. And I think that's the same thing when you look at other areas of the market in equities that have been popular places to play, and that's been high beta tech. This is all the same thing. You talked about Tesla reversing the move. This just isn't an environment where long duration, and not that Tesla is profitless, but profitless tech and some of those things do well. There will be that period, but it's just not today. So I think when you get back to crypto here, you stick with the majors, and right now, if it's ETH over BTC, that's kind of interesting to me. Volatility coming in there. One last slide for you is just an update on our cross-asset correlations. Point being, short term, all the same thing. If equities move higher here and this bounce has some legs, I would expect Bitcoin to probably push up into 75. We'll see what it does if it gets there. You do have a positive correlation, though it's not extremely strong, positive correlation between Bitcoin and equities over the last few weeks. Not much of a correlation over the last month. And, really just kind of some noise when we look at this versus other areas of the market. You certainly had that outperformance in gold if you go back over the last few months, and that just, kind of disastrous move in Bitcoin. So you're going to see a strong inverse correlation there. But aside from that, I think, again, it's the same thing. If volatility pushes lower, Bitcoin probably holds up and moves higher, as well as the rest of the market. If you see anything reverse here, I would expect Bitcoin to right back to 65.
You agree?
I want it higher.
I want it higher too, but I think that's because we just sit from the passively long view here.
But I agree. It's just not. It's not sexy right now. It's just not.
The market is though. Like all markets are. Equity market.
Everything else.
Everything
besides
else is.
Crypto. Crypto is just. It's not. But
Maybe
you don't
we
have
need low volatility in the market for crypto to be sexy.
Yeah, which I think reflects what really drives Bitcoin. When you think about, okay, what's the intrinsic value here? People will argue over whether it's worth anything or it's worthless. But what we tend to see is on the margin, when you have a period of very low volatility that tends to be driven by lower interest rates, quote unquote money printing, some of those activities out of the Fed, you've had those periods of time. You certainly look at the response in the market post the COVID stimulus. That's when this thing can do the crazy stuff.
Yeah.
But until then, there's probably less of a reason to get excited about it. And we're definitely not in that environment with rates still where they are. So that'll change at some point, I think, as the cycles ebb and flow. But today I kind of dollar cost average in and just tell myself 10K ETH is inevitable.
Let's take a quick.
I hope so.
Quick 90-second break here. Even the S&Ps hold on to their gains. I think you can't say it any other way. Up 2%, up 139. They are about 50 handles off of their highs, significantly off of their lows. NASDAQ up 600 and change. That's a 2.5%, a little bit more, 2 5/8. It was up around 3 5/8. So that's sold off about 1 percentage point from its highs. Russell doing the same as the NASDAQ. Dow probably, I don't know, the strongest of the group, maybe? I don't know, up 1,070. It was up around 1,200 or so. Maybe having an equal size. They're all moving in tandem with each other. I don't think too much to read there. I think you could definitely say volatility's bid. 2250 and change. If I told you the market was going to stay up 2.5% for the first couple of hours of the day, I don't think you would say volatility was in 5.5% when it was up 4% yesterday. With no movement there. So you are getting paid on your directional delta, but you're really not getting paid too much on your short as much as you would on your short theta decay. That's why I talked about this morning, maybe doing both sides. Volatility is still high. Let's take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny and whoever after this. Peace.
Peace.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at Rising Stars at tastylive.com if you would like the chance to share your trading journey and inspire others.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
everybody, and welcome to the Liz and Fauzia show. I am honored and delighted to have one of my friends, one of the best traders I know, and I'm honored that she is joining me today, Miss Fauzia. Can I say your last name?
Yes, of course.
Timberlake. Miss Fauzia Timberlake. I didn't know if you wanted to remain anonymous, but yes, I am absolutely honored to have you with us today. For those of you who are new, Fauzia has been with us since almost the beginning, correct? And she is also a follow trader on the follow page and one of the best traders I know. So we are going to use this entire episode to get as much knowledge out of her brain as we possibly can because she's generous enough to give us 1 hour of her time.
Thank you, Liz. I'm so excited to be here. I can't believe 2 weeks in a row.
I know. You were on with Jenny last week and you were such a crowd favorite. We had to bring you back again.
Thank you.
Okay. I'm also going to say where people can find you. So Fauzia is the creator of the Women of Tasty Trade on Facebook. It is actually, when I say this, it's not a Tasty Trade affiliation. This is something that you have done and you are in charge, you monitor. It is a wonderful resource for people out there because I think when you're starting trading, you like to bounce ideas off each other. You guys are a great support group. It's idea generating. It is profit generating. It's been a real joy to watch it all come together. So she is the Women of Tasty Trade on Facebook. And then also, we'll talk a little bit later because I don't want to pile it all in, but you are also going to be debuting on another podcast on Sunday or Saturday.
Sunday morning.
And we will go over that later.
Okay.
But Fauzia, I know you were on with Jenny last week. So we kind of kick off the show a little bit doing a market mover segment that'll be pushed out onto YouTube. Okay. So we're gonna start with that right now. So I'm gonna give another little introduction. My name is Liz Deerking. This is the beautiful Fauzia Timberlake, and we're gonna go over her view or her trading strategy, kind of a skewed butterfly-esque type thing, right, Fauzia?
Mm-hmm.
All right.
Well, that's kind of the name I gave it, but feel free to give it a funky name like you always do. Zebras and lizards. So come up with one.
We absolutely will. So I'm gonna kind of give you the platform or the microphone, and I will take the platform and follow your lead from the skewed butterfly.
Okay, so let's start maybe with the ES.
Okay,
or pick a underlying of your.
No, ES is great. I love it.
Okay, so let's say the end of the week. So like all butterflies, we like to keep it short term, right?
We like to keep butterflies short term because they don't open up until the end. That's
exactly. So April 10th, would that be? Yeah.
April 10th, 2 days from now. Wow. Okay, right. 2 days from now.
So this one is directional. So you get to choose. Do you want to go up, or do you think we might fade this rally a bit?
Okay, so let me ask you, if I think, so I'm picking a direction.
Yes.
I would like to go up.
Up, okay. So we can start at, say, 6,800 on the call side.
Buy it.
And then go to 6,850 twice.
Sell two.
Yeah. Now, unlike a regular butterfly where you would now go to 7,000, we go to 6,875.
So you'd go, I'm just going to show this real quick.
Yeah.
The regular butterfly would be 6,900, right? So
and what would it cost? Just note that down. It would cost 13.
Yes, and because it's even the S&Ps, you cut that in half. So it's actually going to cost $655.
Exactly. And the maximum potential profit is $2,500. Not profit, but value is $2,500, right?
Well, max profit, yes. The total with it. Right, with what you paid for. But if you paid 13, your max profit is 1,800. I just don't want to confuse people there.
Yeah, I just look at the value. Okay.
So regular butterfly, love it. This is traditional butterfly.
Right. Now, instead of going to 69, let's buy the 6,875.
So I'm going to delete this leg and buy the 6,875. Okay.
So we're paying a bit more.
Yep.
But notice there's no risk to the upside. Yes.
Okay, so just for fun, I'm going to delete this leg. I'm going to go to the regular butterfly, and we're going to look at it on the analysis page, and then we'll do both, if that's okay.
Yeah.
Do I have anything else in ES? No, we don't. Okay, so this is what a traditional butterfly looks like on the analysis page, where there's this high peak right here.
Yeah.
And this is where the product is trading right now. The reason you're not making money until it gets up there is because we paid a little bit for it, right?
Exactly. Right.
Okay.
Yeah.
So a low probability trade, and you can see that because you're paying for it. It's got a 23% pop, and this is because you're paying a debit for it. It's very. I mean, I do like butterflies, but now I'm going to clear this out, and we're going to go into the Faia version.
Now, I should add here, Liz, I just chose that one. You can always make it narrower and pay less. The regular.
I like what you're doing here. Okay, so then you're paying a little bit more. Like you said, we're paying a little bit more.
And again, you can choose the width of that second wing as you wish. But just notice the wings are not of equal width. The further away wing is narrower than the closer wing.
And by doing that, you're eliminating all the risk to the upside. So as you were talking, I was slightly adjusting the strikes, because if we're at the 68.75, I just wanted to see how far I could pull it before that green bar goes away. So I didn't have to do any math to find out where it goes. But so I pulled it all the way up to the 68.85, and you can see that then there's a little bit of risk to the upside. Not much, but a little bit of risk to the upside. So, but I'm going to take a look at this now on the curve view. Take a look at this. Okay, so once again, we're paying for it. So this is this.
The maximum risk is 1,700.
The maximum risk is 1,700, and that's to the downside. That's if it stays right here. But if we get a little bit of a push higher into this range, you can get, wow, this is pretty good. And then anywhere to the upside, you get to keep that overage, which is $380, and you can see that with the P&L.
Yep.
Pretty good.
Yeah. And again, you could start this anywhere you like. The general thing to remember is that the leading wing, right, the closer wing, should be wider than the following wing, for lack of a better expression.
I really like this trade. We're going to have to come up with a fun name, but for fun, can we do the put side as well? So if someone's, let's flip the cards over, because, we talk all the time on this show. Options give you the option, and people can put it on in different directions and still maybe be a little bit right, even in the next 2 days, because we've been getting two-way markets. So you could be able to take this off. So let's pop it into the put side too.
And maybe you can try a narrower one, a less expensive one this time, and maybe one that starts deeper, a bit more in the money, and that way, it immediately starts making money. What do you think?
I see what you're saying. So by pulling it into the money, by pulling this put into the money.
Okay, yeah.
68.10. So let's go $40 wide. We'll go 40. Let's try 40 by 20. So if I was going to do 40 by 20, that would be here. I'm going to sell two of the 67.70, right? Is that $40 wide? Yep. And then if I went 20 to the downside, I'm going to buy $750.
There you go.
Okay, so this is, to your point, you're paying less, right? So
look, the pop is higher.
The pop is higher.
Obviously, because we're in the money.
Because you're in the money a little bit.
Yeah.
So let's take a look at this on the analysis page just to show everyone how this works. So now, if this is to the downside, now you could have done the same thing with the calls where you could have shifted it in the money. That's how that's how you're getting the stock price to start in the money.
Yeah.
But here, you can take a look at this. Anywhere to the downside, you're going to take $500 in profit down there. Your peak gets you $1,500.
Yes.
Now, and take a look at the low drawdown here. Now, anywhere to the upside of this, you're putting up 400, and you can only lose 400, and it's $500. It's bouncing around. I'll lock the price. So
yeah. And notice that we have room for it to slip a little.
Right here.
Yeah.
Faia, how long have you been doing these?
Oh, I don't know. I think maybe a year.
A year? So is this how you use the shorter term options? And do you typically use ES?
No, I'll do this for earnings. I'll do this for anything, wherever you use a butterfly, right? But remember, we're being directional. So that's the assumption. You're being directional. You're spending a little bit more. So Dr. J does regular butterflies all the time for earnings.
He does. He was on the show yesterday, and I was actually just thinking about him because he did a big wide butterfly in Delta, and I actually think he was directionally right, but might have lost money because I think it went outside the butterfly to the upside.
So you know what?
Regular butterfly. If this wouldn't have lost money.
Hey, we should send this to Jacob.
We should send it to Jacob.
And let him analyze it to death.
So I like this, Faia. I like it actually. We're in a really interesting environment right now with even the S&Ps having an IV rank of 50. So this market has been a very, very, very whippy market, right? So we still have that high implied volatility. I like what you're doing where you're doing it for earnings, but you are directional with them. And I was just thinking, putting my own kind of spin on this. Have you ever done it in the cash settled where you let the butterfly go exactly to the end? You know, like SPX or XSP?
I think I almost always let it go to the end. But Liz, here's another thing. Compare the break even of a regular butterfly. You know, break even is where we basically don't make any money and we don't lose any money, right?
Right here. 6,800 is our break even on this one.
But no, of the regular one.
Okay, so if I'm going to take it to the regular.
40, so you would move the 67.50 to.
There we go, right? 30. No, I need
40. You want to move it to 30 right here. So the break even there on the downside is where we're concerned, right?
Right.
Yeah, is where right there, 67.35, right? Now turn it into the skewed one.
Bring this back up to 50.
Yeah. And there's still value. I mean, this thing has value all the way.
I like it, Faia. We need now the fun part. We need to come. Can we call it the Faia?
No. No, you want some funky name. You'll come up with it, believe me.
So one of my favorite things in the entire world to do, and we've done this multiple times, is to sit with experienced traders and come up with things that fit their risk reward profile. You sat down, you took a butterfly and you said, okay, what can I do? I want to create something where I'm not going to lose to one side or the other. You can do it for earnings. You're still taking advantage of that high implied volatility. You're premium selling and you're doing something smart against it. That's why I always say options are a thinking man's game. You did such a wonderful job putting your own kind of personal spin on something like this. So yeah, I'm gonna put one in. So which direction would you put it in? Are you going upside or downside? And zero pressure.
I think I would go downside to Fridays. Yeah, I was listening to TP this morning and he thought this rally's overdone. So, and the other thing is,
it's a good hedge to the rest of it too. I have a slightly bullish portfolio in this account. And we're bullish by chance, not by choice, right? Because things had gone down so much. So by the nature of how we trade, we're bullish by chance, not by choice. So I'm going to put a downside one in. I'm going to kind of make it a little bit smaller. So here I'm going to go, I'm going to try to bring it in a little bit. We'll go, we started at 68.10. So I'm going to go 68.10. Yeah, $30 wide is fine. And then
that's $40 wide.
Oh, thank you. Thank you. I was told there'd be no math today. There we go. $30 wide, and then I'll go 20 to the downside.
Oh, notice how the break even moved when you made it narrower. See, it's a little bit. That's
a little bit, but not much, right? So here, given in this one, this is kind of a low commitment trade. Take a look at this risk reward profile, Faia. Yeah. Our max profit is 1,200. Our max loss is only 300 because we narrowed that wing, and our buying power effect is only $483. Look at it on the curve view, and I'll ship this.
So here's another thing. May I add?
Sure.
So what I do when I buy these things, or just about anything, and it's a common tasty trade practice, is I pay for it. In this case, I will pay for it either with a put spread out in time.
Oh, you mean finance it with something?
Finance it.
Yes. Okay. I see what you're saying.
Yeah. So this is, so I'm not that bearish on the market. Actually, I'm net bullish, but in the near term, I might be bearish. I put this on and then I go out to May or something and sell a put spread in the ES that covers that.
Okay, so I kind of like this. We're gonna go through this whole process. So then I'm gonna go back to the table page. We don't have anything else in ES. I'll keep an eye on this with TP on Friday. We'll see what he has to say about it, or it'll come off. And then we're gonna open back up ES. Go to the trade page. Oh, that's Boeing. Sorry about that.
Yeah.
Yeah.
Honestly, May seems so close now. Maybe go to June.
I know May does seem close.
May 29th is the end of the month, is it? Did I see that?
May 29th is end of month.
Yeah, 51 days. Okay. Up to you. Up to you.
So 51 days. Now, the problem here is there's $25 wide strikes. So, but you're getting a decent.
Well, 25 is $1,200.
Yeah,
so.
$1,200. It's 25, and this is close enough to financing it. We spent about $5. So I'm gonna pull.
There you go. There you go.
I'm gonna pull this up a little bit. Hold on. Okay,
No, go to the round number, 6,500 and 64. That one is good. And then if we get an upside move, you can always sell a call spread on the other side and without using any more buying power.
Fazia, I love it. I love it. All right, so we're gonna put a little bow around this. We can continue to talk about that. But if you like this video, comment down below and give us a little like button, and or jump over to the YouTube chat where you can join. And Fazia and I are live as well, so you can watch it on the website or the YouTube chat if you like more videos like this. Thank you very much. No, Fauzia, I like this a lot. So we've got both of those in. I'm just going to show flip the cards over, what it looks like in here. So we've got our very near term skewed butterfly, which I do like putting it in, and I like the risk reward profile on it. And we've got the put spread to finance it.
So can I share one more thing?
Absolutely.
I changed the order by symbol to custom.
Right here?
On the right-hand side of the top line of the positions headline, where it says stock. Yeah, move over to the right, a couple of columns. Right there. Change that to custom.
Okay.
Okay, and then I take those 3 legs of the butterfly, and then and say group positions, use the group positions, and say skewed butterfly right there.
Oh, Fazia, look at you.
I love it since they added it. There you go.
And then just hit enter?
And and then for the other 2 legs, you could group them and say financing skewed butter. That's how I keep track of these things.
Okay, hold on. Jenny is going to be mind blown when she gets back. Financing skewed. I don't think I spelled financing right.
Whatever, it doesn't matter. Just it makes sense only to you.
Paid for. There we go. I love it. Look at that. So then if I changed this back, will it go?
Yeah, it goes away. You have to have it in custom to see it.
Okay, I'm going to leave it in custom. But then I just want to I'm going to open up this. It just doesn't say anything. So we custom. Perfect.
Yeah.
Is that usually how you do it?
I do. And another thing, Liz, I keep track. I know we can go to the chains and keep track of our net credits. I know we can do that. But what I do is I just put it in the comment, in that grouping.
Oh, in that comment? So
in that grouping. So when I open it, I say, because if I've rolled it a couple of times, it'll say something else, right? So I just say, net credit $10.
Interesting. That's it. Well, and that
not now, only when you alter it.
No, when you're changing it, if you're going to roll it or change it or do something like that. That's impressive. I like it, Fazia. I learned something new today. So you're very good at the platform. You've been doing this for a very long time. Can we talk a little bit about your background and how you got into this?
Oh, into options?
Yes, into options. Just because the newer viewers. I mean, I kind of know your origin story, but you're by trade an engineer.
Yes, I worked as an engineer for many years. I was also a stay-home mom for many years.
And that's beautiful grandchildren now, beautiful daughters and beautiful grandchildren.
Yes. And then when I was home is when I started puttering around with stocks and the markets. And I have to give credit to my ex-husband here because he's the one who said, hey, you're home now, so figure this out. Yes, which is not very common, at least in those days. And so I started learning about markets, and I lived in the Northwest, and the .com boom was starting. In the Northwest, there was Costco, there was Amazon, there was Microsoft, all these companies coming around, and I became very aware. And then I switched careers, became a financial advisor, didn't really like that at all, and then went back to school to study to become a financial planner. And that's when I found Tasty Trade just accidentally. Someone in a restaurant said, "Hey, have you seen that show?" And I never looked back, Liz. I loved it. I used to call in every morning to talk to Tom. Get in line on that phone, right? It was so exhilarating. And so I just feel like a part of this family, right?
You are a part of the family. You've always been a part of the family. But don't you think it's fascinating I always like the origin stories of people, because I think once you learn options, it really does expand your horizons into doing things. Look at what you and I just created here with the ES, with the skewed butterfly that was financed by something else. Somebody is going to say those are very complex trades. And a newer viewer who's just watching it now is, I'm sure, very confused. But Fazia and I both know that it's not that tricky, because you're only working with 4 components, right? You can buy a call, sell a call, buy a put, sell a put. That's it. And then you can kind of layer them on top. It's not that tricky once you kind of get the basics. It's almost like learning a different language. So I love that your brain, we have a lot of engineers. This leads toward a very critical thinking, people that like to think about what they're doing instead of just blindly following. So you're in good company.
I tell people when I'm coaching them, I'll say that it's not rocket science. Yeah. It can be learned. Just you need to take the time and be patient. Get your Greeks down. Greeks are really important, at least to me, right? And then a few things, right? Like the butterfly, well, if it's short term, because it really only opens its wings, those things, right? You accumulate that knowledge. It's sort of a building block. And watch the Liz and Jenny show.
There you go. Good luck. So we now are your. I only have to ask because I was asking Dr. Jim, and it's very, very poignant on my mind. If you were going to teach somebody one strategy, the first thing you would teach them, what is it? Because this I think this is it's different across the board. But if you were going to teach one new person one strategy, what would it be?
So I like the strangle.
I love it. Out of the
strangle. It's kind of like give it a runway, set limits on both sides using probabilities, and wait for the premium to come in.
And you get to see both sides. I guess that's putting your feet in the fire right away, because you get to see how a call works and how a put works. So I like it.
Yeah.
All right, Fazia, let's jump back in the platform. Okay. We are going to be taking live tweets. I know we also want to go over some an actively managed Jade Lizard, which would be fun. But I wanted to get your thoughts. I mean, given the trading environment that we're in right now, what are your thoughts on the implied volatility and everything that happened last night? Were you doing anything into last night's move?
This market has been really difficult because it all depends on what one person says or writes, and things move in a big way. So last night, I was hoping against hope that he would take it back.
Right.
And he did, which meant I realized that the markets would just shoot up and out of the stalls. Right? And so that's kind of how I went. However, I didn't expect oil to fall as much as it did. Now, I don't know where it is right now.
So oil is now here. We'll take a look at it if we want to pop in the platform. Oil fell a lot. It's down 15% right now. I've seen it down. I think it was down more than that. This is just the FPL contract. I think it was down more than that. The low of the day, and you probably can't read that, is 91. So it's come up from the low. 91.05 is the low.
Okay, so that's good, because I think I have a short put at 95. So, It's hard to say. It's so, I've never encountered a market like this, so we're all learning day by day. I'm, something that I do for the zeros, can we talk about that?
Oh, I love zeros.
Okay. Is I will do a broken wing butterfly on one side and I'll just sell a call spread on the other side. I call it a combo trade for lack of anything better. So like yesterday, it was a call broken wing butterfly in the ES.
In the ES.
On the outside, yeah.
You know what? I don't want to. Oh, I guess we can do it. We can do it in 0
days. We can do SPX.
No, we can do it. We can do it in 0 days. I was just saying I didn't want to cross streams, but we're in the 2-day on the other one, so that's
well.
Fine.
Let's do SPX. Let's do SPX right now. And
so call broken wing butterfly. So
no, so how much is it as its max value? 140 up right now.
It's up 141, right?
No, but did it go up higher? And
no, I think it's been up higher. Yeah, let me look. I will give you the height. The high was 67.93. So almost 40 points higher than this.
Okay, so don't start at the money on, I'm saying go further away to the expected move, right?
Okay, so put the shorts at the expected move?
Yeah.
I'm making it narrow. You can tell me if you want it wider than this, but I'm just going to break it by 1. Do you take in a collection?
Yes, of course.
Okay, so I've got a minimum.
No collection yet.
There we go, 20 cents.
Yeah. I think we're sort of, right, you can do that. So the break even is at 67.95, right?
67.95.
Yeah.
The expected move for the cycle is 67.85. I can adjust this. I was just throwing
Right, yeah. And then I'll set a put spread of that. What's your buying power, 15?
Yes.
Yes, so I'll sell a $15 wide on the other side.
The buying power, you can't put them in you can't put them
I know, right? You got to do it in 2 steps. So maybe, you know what, put call spread here because it's done its thing and do the puts broken wing on the other side.
Put the put broken wing because
yeah.
So kind of taking a look at this. I'm going to make it a little bit smaller because this is
as you wish.
This is a smaller account size. So
okay,
here's 1 by 2. So I'm going to put this in until I can get a credit.
Okay.
Look at that. This can be a very narrow put broken wing butterfly.
Okay. So after this fills, then sell a call spread on the other.
So this is a little bit easier. So we're collecting 50 cents in credit on the 67.30, 67.35. That's the spread portion, and then we broke a wing by buying the 67.20. So we're taking credit for it. What I like about this, Faia, I'm going to show this on the analysis page too, just because I like it. Oops, sorry. So you have this peak here. Now, granted, it's a very expensive product, so that peak is, pretty narrow. But anywhere to the upside, we get to keep our 50 cents.
Right.
That's why.
And if it comes into that, what is that called?
The peak. The.
We'll give it funny names.
No, so Tony from Mexico gives it something, and I can't. remember.
Yes, he gives it a name.
Yeah, he does. But so I'm going to ship this, and then once we get filled on that, we'll put the other side in.
Yes.
Okay. Now, so that's working. The SPX is working. We will put something else in. Now, did you want to talk about actively managing the Jade Lizard?
Yeah. So I noticed and I realized that you and Jenny run a show. So you're, in and out of positions quickly. I'm the exact opposite. I just go on and on and on with it.
Well, I think that's a good way to trade though, Faia. And I'm glad you noticed that too, that running the show, we do want to get in and get out, get out because we need to redeploy the capital. It's a smaller account. But to your point, a lot of times with my trades in my accounts, they're on for... They're in for the long haul, right? So rolling and keeping and rolling and keeping. And if it's working, I'm not closing and rebating my hook. I'm staying with it.
Right. So last week with Jenny, we put on a Jade Lizard in SPY, and I think it was a May expiration. So we can look at it.
You know what I can do? I can go activity, SPY.
No, I know what it was. Yeah.
14 days.
It was the 60.
It's right here.
Okay.
right? So I can actually hit copy order. Do you want me to copy the order?
Sure.
So then we've got it in, and I'll go to the table page. So here we go. And now this is your exact strikes. So you've got, it's pretty far, pretty underneath. So you've got this 65, 55, 60, 60. So
which is now in the money, right?
Yes. And then you've got the put spread to the bottom. So you guys collect, and I'm gonna, hold on.
682. It comes up right there.
682. And it's currently trading for $5. So it would have been.
And we understand why, right? Because it's the $5 widespread is in the money, right?
Correct.
So what I would do in this case, if I continue to feel bullish, I would move up my put spread, and that improves my break even because I'll collect some more money. I leave the call spread where it is.
Okay, I'm gonna take.
So just clear that, yeah.
So you would legitimately be. Hold on. What you would be doing would be closing this and moving it up. So I'm gonna clear this all out. So clear.
Right.
And then I would be buying the
600 and 570.
Buying the 600, selling the 570. So I'm buying it back.
And come to the expected move, 650 maybe. If you want to be comfortable, come up to 650.
Oh, yeah, come up to 650. I didn't know if you would iron fly. You can come all the way up to the 650 and how much?
And then 620.
So you're collecting an additional
$3.
Yeah,
right?
Additional $3.
And we had 8.
You had $7 in collection already.
7 and 3 is 10. So now the new downside break even is 640, which is what delta?
The 640 delta is, let me change this. I've got open interest open. The 640 is a 22 delta.
So if you're comfortable with that, do it. I'm comfortable with it. I feel like we've got 37 days. We're coming from a market that was pretty shot down, right? So this is what I would do. That's what I do.
So, and I do like this. So it's very similar too in that you could take the entire thing off and recenter it as well because you are profitable. So especially when it's so far in the money right now, you could take your $100 and say, okay, well, I'm going to move my call spread up and put another put spread on. A lot of times I'll do that with mine where I'm closing the whole thing and then just kind of readjusting. In the same sense, I'm doing almost identical to you is I'm bringing up my put spread because by now the put spread would be up higher.
Right. The thing is, it's already worth marking 5. That means even though we have 37 days left, I think if you just looked at the width of the call spread by itself, it would be marking a lot less than 5. Right. So, so we have, like you said, many choices. As I feel like, yes, even though our trading commissions are very low, if I can avoid more.
Well, and every little bit counts when you're doing every little bit counts, right? Did you see the new? Sorry, I don't know if I saw this yesterday for the first time. Did you see the new promo Tasty is doing with commissions? They're giving back, and I don't know if we have the art card for it. So, but they're giving back double the commissions for a month. So if you yes, it just came out yesterday and I don't want to put words in everybody's mouth. I wish Laura could pull up the art card. Oh, there it is. You get a 200% commission on rebate. I'm sure that's this big for you to see, but I was shocked when they did this. So every dollar, say it's $1 in, they're going to give you back 2 up to a certain amount because they want people to try the platform. Now, that's for a month. And whilst I agree with you, every little bit that you do, any kind of edge that you can give yourself is a huge advantage. So I agree with you there. But it was just funny that you brought up the commissions when I was like, wait a minute, we're getting a rebate.
So when there's duration, and then the opposite side of this is if SPY had fallen, what I'll do is and you guys taught me this, is you buy the call spread, which is probably worthless by now, right?
Yep.
And bring it right down to the short put or, right? Collect more.
Bring it right down to the short put. So you can take that call spread all the way down or widen it if you wanted to.
If you wanted to, or the thing is that you maintain the characteristics of the jade lizard because there's still no risk to the upside.
And
so if that thing goes shooting back up, you still have only that $5 to pay, right?
I love it. How often do you use the jade lizard?
A lot. A big lizard also. I haven't seen you guys do a big lizard recently.
It's funny, Fazia, because my original intent, but I really do thoroughly enjoy using my guests' knowledge, and you are an amazing trader. But my original intent with you was to do a big lizard, because I know you're so clear of the concept, and I love that you use the verbiage, because the jade lizard is, eliminating risk to the upside and giving a sweeping range. But the big lizard is very similar to the broken wing butterfly. It is technically a broken wing butterfly on one side, depending on where you put your strikes. But you and I both know that when you say broken wing butterfly, that's why we've got to name yours. We don't know where we're putting the strikes. You don't know if it's downside, upside, things like that. But when we say big lizard, you and I both know what we're doing.
Yes. Do you want to do one in, say, Microsoft?
Yes.
Microsoft's been shot down like nobody. We're crossing earnings. Yeah. I don't know.
Oh, we are crossing earnings.
Their earnings are always good, but let's not cross earnings.
Do you want to break all the rules and do it in the 16-day?
Oh.
Let's take a look. Let's just take a look. We'll take a look. This will be pretty.
Let's do the straddle at 380 because I love the round number.
I like the round numbers too. Okay.
Now we're going to have to buy a leg, right?
We will.
Buy the 385 call. That's
385 call. Ooh, we've got lots of credit here. So we've got 380, 385. We're selling that straddle. We're buying the 385. Fazia, I love that you can set up a big lizard. That's why we name them. So there's no risk to the upside here. Lots of capital is at use. We're using $7,000. So Fazia knows that we've got almost $6 to play with because this is a $5 wide. So in yours, you like to collect quite a bit, don't you?
That's by the 360.
360 round numbers. Oh, I sold it. I was like, wait a minute. Okay, perfect. So.
And do you like your buying power? I can't see it.
This is great. The good news is it's $1,000 buying power effect right now.
Perfect.
We've got 16 days in this trade. So I'm absolutely fine with that.
$390 to make.
Yes. So if it pins at 380, meaning if Microsoft stays right here and just time passes and elapses, we can make the full $8. That's not going to happen because I couldn't hold that if my life depended on it. But if it gaps up, you collected over the $5, so you've got $3.90 to make, and your break even is right here at it's about a 35 delta. I'm completely comfortable with this because I'm bullish Microsoft.
There you go. So we picked a good one.
Let's take a look at this on the analysis page. I wish this was moved. There is a peak right here where you can make the full amount. That is just about where it's trading right now. But anywhere to the upside, you get to keep 380. To the downside, it's defined risk, $1,000.
And it can slip a little. I like the fact that we've given it room to move a little bit down.
We have given it a little bit of room to move down.
Yeah. So yesterday would have been perfect to put this on.
You know what though? But even when you look at this, Fazia, I mean, if I covered up that this was Microsoft, I would be shocked at this chart.
Yes.
It's Microsoft.
I know.
So even though you've got the little blip right here, it only brings you back to, March 24th.
I know. And another stock people mention has a lot of upside potential is Google. So
hopefully we can get filled in this. So that is working. I haven't taken a look at Google in a long time. Do you trade Goog with an L? Why is that?
With an L.
Yeah, I do with an L too.
G-O-O, yeah.
G-O-O-G-L. There we go. First day with a new set of hands. Okay, so now this looks very different. You got the gap up today, but it looks very different than Microsoft because
I like Microsoft for being bullish, right?
I do too. too.
Yeah.
Do you know what, Fazia? I'm a little bit. You know how sometimes you make trades out of fear. I'm still long Microsoft, but right before the end of the day yesterday, I closed I had a bunch of positions in Microsoft. So, I was bullish, I was selling puts and doing things of that nature. And I took off a couple of my bullish positions just because I was trying to lighten up because I didn't know what was going to happen last night, if we were going up or going down. So I took a little bit of profits off and I was so mad I took off Microsoft when everything skyrocketed, but
it's okay.
You live and learn, right? And you can always put it on the next day. I might have lost a little bit of profit, but I was taking off my dynamic delta, not my static delta. So
Right.
that was kind of helpful. I figured I could only make $500 in that position. Is it worth the risk of having it on if it would gap down wildly? So I closed that. But what are you doing in Google?
Oh, I don't have a position, but I just mentioned it as a potential. But now that we looked at the chart, I would go for Microsoft over Google.
Yeah, I kind of agree too. I'm gonna penny this position down because we did break a bunch of the rules. Let's see. We'll go. I'm good with that. We're still getting 860 over. I'll let that percolate. Now, I want to keep an eye on time, but I want to show something to the viewers because we were talking about this. Now, Faia is extraordinarily clear of the concept of all of these. But here, if you go to the tastylive tastylive.com and go to shows and then come all the way over here to strategy series, this is the Liz and Jenny strategy series. We've walked through and kind of, I'm slower talking in a lot of these, and you'll see we've got the big lizard right here, and we've got the jade lizard that we talked about. And then we've also got, which here's my segue into this, the zebra, the zero extrinsic back ratio. And that was named by a viewer, and it is a stock replacement strategy. One of my favorites. This has been one of our favorites that we've come up with. I like the lizards and the zebras. And the reason I'm going towards this zebra is because the amazing Faia is going to be on premiering on YouTube. And this was a Norwegian site. Norwegian?
Well, he is from Norway.
From Norway.
The gentleman.
And you will be on Saturday, correct? Saturday. It
Well,
will
we
air, it
filmed
will air on
already.
Saturday.
It's not live, and he said that's what he mentioned. He said I'll put it up on Sunday.
Okay, well, I will be your number one. I'll be your first viewer. And I will like, comment, and subscribe, but I'm very excited. So
I noticed that he did something on zero DTEs.
Oh.
Yes, that guy. Yeah.
Yeah. The zeros are a game changer. I know. Now, Jenny had mentioned, I'm going to go back to this. Jenny had mentioned that you don't trade the zeros that much.
No, I do. I just, when I'm coaching people and that's all they want to do, I feel like as a beginner, it's not where you should start.
It's not?
No. You need the duration. You need time to figure out how things move. But that's just me. Maybe I'm a little scared.
I actually think that's good. Now, I was asking because my daughter is getting her account in May. She'll get it May 3rd. And my son, who's 19, he's a freshman at the University of Kentucky, has had his for a while. And I was telling Dr. Jim this, and I know you coach a lot of people. So their personalities are so vastly different that I think I'm going to start her with more durational trades, kind of similar to probably what you do. But with my son, he and his friends needed the instant gratification. Okay. So the way to hook them was by using the zero DTE SPX. Sure. So every day I've got him putting in, and today was a little bit tricky because we were up so much in the beginning, but I've got him putting in a put spread at 9 o'clock our time, give or take. And I've got him just literally, Faia, I think this is bad parenting 101, but I taught him, I was like, you open it up, you open the 0 day, and you see this little orange bar right here, sweetheart? I was like, you see this little orange bar, sweetheart? You sell the one right underneath it, and then you skip a strike and buy another one. And so he's been putting them in for about $4 today. I mean, it's later in the day.
Yeah.
And then immediately putting a good till closing order in for 25%. So it's technically to take $100 a day. Now, he's not keeping that because there are full losses sometimes, but he's been doing pretty good and he's averaging, I don't know, $20, $25 a day-ish. So today he's got it in, and I'm going to show you the strikes that he put in today because I've got his account over here. Oh, he went smaller today. He went with the 65. It's almost right here. He went a $5 wide today. So he's still out of the money on a day like today.
That's great. That's good. I mean, like you said, it's the personality of the trader and what keeps them engaged. At the end of the day, if you are not engaged in one way or the other, this is not a fun exercise.
I know.
Right?
And I'm sure you have such a vast array of people that you've taught that it was very eye-opening to me watching him because he really couldn't grasp because I was like, okay, you go out 45 days. And it's kind of for him like watching paint dry because you and I both know when you're selling premium 45 days out, you might make a couple dollars and then you might lose 10, and then you might make a couple more, and then you might lose 10, but you got to have the patience. And so he didn't really have that. And I was like, okay, I've got this.
Good. And does he also speak fast like you do?
No, my daughter does.
Oh,
but she's my methodical one though too. So I'm gonna probably have her be calling you for advice soon.
There's another one that Mike does. Mike and Nick, they're also some of my favorite traders. He does one at the end of one day for the following day. He puts it at the expected move, and you can verify with him exactly. And I think he makes it $10 wide.
So is he doing both sides or just the puts? Do you know?
Both sides.
So, and will they do it later in the day, or do they do it
just like in the last hour or so of the day?
That is not a bad play.
Yeah. So another one for your Jacob guy.
Yes, this is not a bad play because it still affords you quite a bit of premium.
Yeah, I believe he does it $5 wide and positions it such that he collects $2.
Oh, so you're really not risking that much if it does blow outside.
Yeah. So move it. You must collect 2 though.
So you got to collect 2. But I will try this at the end of the day, and this might be something. Faia, you also were texting me yesterday. Speaking of the 1 days, if I put this in right now, I can get filled after the close. We were talking. Yes, I did not realize that because I don't usually trade 1 day SPX. So I know in the past I knew SPX traded until 3:15, but the zeros close exactly at 3 o'clock.
Yes, they do.
But if you put something like this in the 1 day, you could get filled on it right after the close.
You could. It does get a lot. It's not as active, so maybe the execution of a fill is not beneficial to the retail investor. I don't know. Another question for Jacob or Dr. J. But Mike fills them on the show, or he talks about it on the show, and I fill mine while the markets are open.
While the markets are open. So is this something you typically do too, the 1 day where
I've been doing it with him and in a smaller account for my daughter, and it's been good. Again, there are times like today, maybe I haven't looked. It blew out because, the market had such a big upswing. But again, like you said, there'll always be a few losers.
There will be a few losers, but what I like about trades like this, and so do you trade your daughter's accounts?
Yes.
So when you're trading your daughter's accounts, what I do like about this, and I think it does create, and you're probably more versed in this than I am because you help so many different people. So the account size does matter, right? It really, truly does. And so my mindset is I've always been trade small, trade often on this show, but my accounts are a lot larger. But it really forced me to kind of hone down a little bit when he opened his account because his is very, very small. I mean, my daughter's is going to be small. My son's is small. They're 18 years old. Right. So I keep looking at the drawdown because I don't want the drawdown to be too much to take them out. And that's why I looked at him today and he did the $5 wide instead of the $10 because he was definitely scared of the SPX today. But this isn't a bad drawdown because you're making I made it $10 just because there's only 10 times. Yeah. But you're making 50%. So if you are closing this or letting it go till expiration, it would only take one winning trade to offset a loss.
I believe, and again, you can verify with Mike, that he closes it the next morning.
So no matter what happens the next morning. So would he, and like I said, I like this. Does he put a closing order in or does he wait until what the open is?
I put in a closing order for 50%.
50%.
Yeah.
50%.
And then for the most part, it fills. Every once in a while, it takes a little bit of time. But talking about this, I think there was a rising star, if I'm not mistaken. He came up with the Monday to Friday. Do you remember that?
Oh, this was in oil, correct? And you wanted to do it in gold.
I did that. That was all of last year. But this one was an SPX. You open it on Monday. You buy the 16 delta puts and calls. So, right?
Okay. So you're buying if you open it on Monday, are you
So today's Wednesday.
Today's Wednesday, so
and the duration is for Friday. But let's pretend we do it for next Friday. So what's next Friday?
The next Friday would be the
April 17th.
April 17th. And we're going to do the regular April, not the AM.
17th.
Oh, 17th, 16th, 17th.
Right,
There we go.
Yeah. And so buy the 16 delta on both sides.
Fauzia, I love this. I could talk to you for hours and hours and hours and hours. Okay, 16 delta on both sides. Okay.
Okay, and then 25 and make the wings $25. So you have to
$25.
No, closer in $25.
So should I go to the two?
April 17th, same duration.
Okay.
And just come in $25 to do your
Oh, okay.
Right.
So $25.
So you come into
95.
$68.95, right?
95. Okay.
Oh no, I would bring that down. 69 and 69.25. I've got this thing. Yeah.
Oh, I love it because you are a round number person. Okay.
Yeah.
Okay, and then to this, I must have cleared. No, it's down here, the 16 delta. And then here, I'm going to go the 50 for you. And then we'll go to the
75.
75. There we go. Okay.
Something is.
So I'm selling the nearer term. I'm just selling an iron condor.
Oh no, I think something's not right. Yeah, you want to sell the 69, right?
There we go.
So you should get about a 58-60% pop, which we did.
Yep.
Right. And he was a rising star, and he talked about this. And I did it a lot last year, and it was good. But then while preparing for your show, I thought about this again. And so I ran a back test. And I remember I talked to you, and you said Jenny was the back test.
Oh, yeah, Jenny back tests everything.
Maybe I didn't back test this correctly, but it did not do well in the back test. So I don't know. Another one for Jacob.
There you go. I know Jacob's got a lot on his plate. I like this. But so it's pretty interesting with this. They're all kind of versions of this same trade, but I do like the fact that people are going nearer term. And I do sort of like, the Monday, Wednesday, Friday setup of doing these things and then putting an order in to close it. Now I just, like I said, in my heart of hearts, and this is me, I get very nervous to the upside because most of my major losses, Fauzia, have been to the upside. It's been a short naked call that has come to haunt me for life. So, I don't mind a trade like this because your drawdown, once again, isn't that bad at 1,600 if we gap up wildly.
Yeah.
Yeah, so I don't mind these trades, but like you said, the proof is in the pudding. Sometimes when you back test it, it'll turn out that it doesn't work that well.
Yeah. This is my first time trying back testing anyway last night. And I even excluded this year. So I back tested up to December 31st, 2025.
Yeah.
The previous 2 or 3 years. And it still wasn't good. So I'm going to have to find that rising star segment and see.
Were you ever on the rising star segments? You were, weren't you?
Yeah, right in the beginning. Yeah.
I'm going to see if I can find it right now because we are going to close the show with that. I'm going to see if I can go to, hold on. So then I'm going to go to rising stars.
Yeah.
Let's see if we can find it.
Gosh, that was so long ago.
So this was in the very, very beginning. Oh, this might take a while. I wonder if I put your name in.
No, you could try.
Let's try that because I did Dr. Jim yesterday and he came up.
Just go down a bit more, I think, because the dates are getting... There I am.
There we go. Look at this.
And then I came back in 2019.
Look at this. Okay, and then you came in 2021 with Rolling Trades with Vanetta. So this is amazing. So December 7th, 2015, August 19th, 2019, and April 12th, 2021. This is fantastic. Now we're going to pop this one up right next to it.
Okay.
All right, Fauzia, this was the fastest hour of my trading day. I want to say thank you from the bottom of my heart for joining me. And do you think we can kick Jenny out again so you can come back?
Well, let's not use the word cake.
She does like her vacations, so we'll let her vacation and you can
Send
come
her
back
on
again.
vacation. Yes. And you too. And then I get to come twice.
Absolutely, absolutely. All right. Well, thank you very much, Fauzia. I love it. I've got the trades in. I'm not filled in Microsoft yet. I will actually make sure that we wind up getting filled on that so we can follow that one as well. But thank you very much. Everybody out there, remember to trade small, trade often. Laugh with us, learn with us. Watch the Liz and Fauzia show.
Bye, everyone. Bye. Thank you so much.
Thank you. This was great.
Yes.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade. Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade. Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
by side. When we are side by side.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal, and it is Glenn's day. So we got Glenn Freiberger here. Talking the markets, Tasty FX.
Always fun with you guys on Glenn's day.
What's up,
There
man?
you go.
How you doing? What's going on? What's going on in
Good.
the world? What's happening?
You know
Talk
what?
to us. Talk to me, Goose.
We're
Goose.
we're safe for now.
For now.
Yeah. Woke up. A lot of
Important
green
caveat.
candles.
Yeah.
Said,
So
you know what?
many.
I can do it
Last
today.
Last night.
Yeah,
Get
right.
up.
It's fun, right?
I can go.
Yeah.
So yeah, happy to be here.
Where were you guys last night when? What tipped you off to everything that was going on? What was your first?
I was at the driving range with my friend. We were having some beers.
Hashtag Masters Week.
Hell yeah. You know it. And I was like, oh, it's past 8 o'clock. Let me see. At first, I was like, let me go on Twitter and see what's happening on Twitter. And I was like, why would I do that? Just go open the Taste Rate app.
So you didn't see
look at
anything
markets.
until later.
I didn't see it. I looked at like 8:30 or like 9 o'clock at night. And I opened the Taste Trade app and I just went to the watch list and it was like E-minis are up 150 points. NASDAQ's up 700 points. I was like, oh, so this is over. And then I looked at crude. Crude was down like it is now, 18 points, 19 points. And I was like, wow, this actually played out as you might expect. The backwardation in the crude oil market went to 8 points, which is cut in half. We're back in contango in the equities market, futures, vol futures. And now the question is, does it hold? Where were you guys?
No. Where were you?
I was at the gym.
Hell yeah.
What time?
Project Pump?
Yeah.
2026?
Project Tone.
Project Tone. Okay.
Project Body Recomposition.
Yeah. Well, the
Or
other day,
retooling.
you said that you were going to hold off on eating all the rice at K-Fire. Did you do that?
I did against every one of my
Oh my God.
ancestors'
You're hilarious.
advice. Did let
It's 25.
some.
What are you
some-
worried about? You know what? Never mind.
Just trying to level up.
Where were you?
I was
At the gym.
I was in the locker room.
What time was this?
5:30.
Okay. Yeah.
So, and I had done when I left here, I'd turned on Twitter notifications for First Squawk. So, open phone and was just trying to, similar to you, I was trying to deduce, saw some good news, but was like, okay, I can't read any of this without knowing what's actually going down. Taste Trade platform.
Yeah, it was the same time for me, 5:30. So I don't know if you guys know this about me. I like video games. And so one of the video games I like playing is the college football. Now, you don't need to buy college football for every single year. You can just buy 1 year. And I love playing the dynasty thing. Like, I'll play for like 30 seasons. You know what I mean? Like, this is what I like to do. I love to develop. So I was playing that. That's my way of relaxing. And
with Miami.
I've played with them many times. I'm on like.
So are you the quarterback? Did you make your own player?
Yeah, I play everybody. I play everybody. Actually, I haven't made any players in this one. I like just playing with the team. So it's fun because you can play with the team and then you can move to other teams if you want. I like that. I'm in year like 2040. I mean, that's just kind of how I like to do it. So anyway, I'm playing that and alerts. Again, alerts is what tipped me off at like 5:30 something, 6,700. I was like, what? And I was like, oh.
Platform's broken.
I was like, whatever. And then 67.50. And I'm like, wait, what? And then oil below 100. What? shit, I gotta go look. I gotta go look at some stuff. And so, I did go on
So I
Twitter.
called a
started looking
timeout?
around.
Yeah.
Yeah, it's crazy. So yeah, that's what it was, the alerts. That's why I love the alerts, man, because they just come to the phone like, oh, wait, what's going on? This is an area where I care.
Not like I did anything, but it's fun to look at.
Yeah, I didn't do anything last night. I know I was looking around. There was nothing to be done.
But there was still
in my case.
sleep. You're like, hope it holds.
I did think about getting short NASDAQ against my year-long trade, but I was like, nah, I don't want to do that. And I was just, whatever.
Why fight the fun?
Yeah, especially since I was already pretty deep in the money. I was like, nah, I'm good.
Yeah. And it appears we both have, look at this. We have to scroll to look at our trades today. Why don't we start with you first and talk through your adjustments? You have a lot of adjustments here.
Oh, yeah. Yeah, I do. Let's see. What have I done so far? Jeez.
What haven't you done?
Yeah. So, short put spread in Microsoft. Sorry, not Microsoft. Short put spread in Morgan Stanley. Just close that. Simple. The strangle in SLV, I rolled that out to June and made it, I guess, a little bit tighter. My thought process there is I don't think the moves are going to be quite as big, and there's still some high vol. So, yeah, changed it to the 65.80. I had some VIX calls, just closed those out. For a loss is cool. Meta was a super bull. Was able to take a gain on that. This is where you can see my thought process. That's where around 9:42 is an hour in the trading day. After around 10:30, I'm like, I think I need to get a little short, just a little bit. So SPY, short call spread. Qs, short call spread. IWM, short call spread. All up against previous highs that we haven't even seen in a while. Then USO decided to roll down the put spread on a Iron Condor. I'm still short the 140, 150 call spread on that. Then SPX, it was time to manage a few things here. The two bigger trades that I had been leaning with was I had a super bear where I'm short the 6,600, 6,610 call spread. So, that's in the money, whatever. But I decided to roll down the put spread. And so that's what that was. I was like, let me roll down the put spread to the 6,600 strike. Like we just said before we started the show, if for some reason we're down 200 points, cool. I'll be able to do something with that. I had a super bull trade. I was debating whether to leave this on, but with this massive move, and I still have some long deltas in other places, I took it off. So this is a Super Bowl. I was able to take that for a $1,300 gain. Big gain on that one. CVX, this is where I was like, you know what? Let me look at some of the things that are moving today and see if there's anything to be done. And obviously oil names are down, and this vol is pretty high. So I was initially just going to sell a put, but I decided to sell a strangle in both CVX and XOM. Downside is essentially both of them. The downside is essentially, and if you just look at the expected move, the downside on both of them is right around like February levels, which was before all this crap started. And upside is essentially near the upside of where we've been. And Palantir is like the one name that's down today as far as tech. So if this rally continues, I just put on something. I put it in June. I'm going to have to deal with earnings, but whatever. I just put on a Super Bowl in Palantir. It's down today. Maybe if this rally is for real, this thing catches legs. And the 165 strike is essentially, I think it's around the 100-day or so, 200-day moving average. So if that starts to run, it'll catch fire near there. Is that what is that? That's the 50. No, it is the 100-day. Yeah, 100-day moving average. So if it really starts to run and it catches fire, it's going to have to get through 165. And I got $15 upside. And then, just close this call spread that I had in GLD. Yeah, it's been a busy morning.
Nice.
Been a busy morning.
Couple things. Exxon, that was interesting. I was curious. I still don't really know how much of a laggard a name like that'll be to all of this exposure. It was interesting to see that it took a pretty big chunk out of that. I'd almost expect commercially you get a little bit more runway for those to stay elevated, but where you structured that sounds pretty reasonable. Mm-hmm. Also, USO, has that been your play through this whole thing, or what would be the reason for trading that over futures options, just size?
I have those too. I got iron condors. I got an iron condor, 2 iron condors.
Do you think about them differently?
No, not really.
Perspective?
Not really. It's. I mean, it's definitely the same trade, but it's some of the highest vol on the board. I might as well participate. Yeah. So I have 2 iron condors in CL, but that's for another time. Mike, what have you done today?
I did some stuff. So first things first, MES position. So I had the 6,700 straddle, and I've said all year I will not have upside risk in MES, especially now with the market ripping higher and us going from backwardation to contango. That kind of clears the path for us to move up higher if we stay in contango. So I went to end of month May. So I bought back the May 15th, just rolled it out a couple weeks, and I went with the 6,700, 7,100. I moved the 6,700 straddle to a 7,100 straddle. So we always talk about let's just pull up a random stock. We always talk about rolling the untested side or rolling the tested side. What we don't really talk about a lot is the fact that if you want to shift your delta, like let's say I have a 35 straddle in LUV, just random selection here, $7.50. If I don't want upside risk, this is a bearish position, obviously, because you want LUV to collapse towards 35 your straddle. If you want to shift this higher, you can literally just move it. So here, I'd pay $7.50 to buy back this bearish delta 35 straddle. Instead, I can move it up here to the 45 straddle or the 47.5 and collect small credit or have a small debit, whatever. You're literally just shifting your delta here. So I'm going from a 35 straddle to a 47.5 straddle in this case, picking up a small credit, and now I shift my bearish delta to bullish delta. So I've done that in like DraftKings for the year-long trade, but it's something I think that isn't talked about enough. When you're at a straddle, if you don't want to go inverted and you don't want to have downside risk, just move the whole thing up. So I did that for a small credit. I did that for 30 points, but ultimately I've picked up $2,300 in credit received so far with all the rolls, and this credit received translates to 461 points beyond the strikes. So I now have the 7,100 bullish leaning straddle and 400 points of wiggle room, 460 points of wiggle room beyond this. So my break evens are down at like 6,600, 6,650, and 7,550 to the upside. So huge range here. We're looking good. I can manipulate this however I want, and we'll be okay. Even into the big sell-off where I was taking downside heat, it was still a profitable trade. So feeling good now with no more upside risk since I shifted it higher. And now if we keep creeping to 7,000 and beyond, this trade will just continue to look better and better. And if it happens over the course of a month, I'll have the ability to buy back the straddle and move it out to a strangle later in time.
Nice. Interesting. I'd never thought about that.
Yeah.
Redelting.
Yeah. Just shifting your delta.
Redelta.
I think it's especially applicable to long-term trades where you're not trying to like get out for a scratch or get out for a small profit. But if you're just trying to maintain certain deltas, if you get a day like this where all of a sudden I go from in the money on the put side to deep in the money on the call side, that's my only option if I want to get rid of bearish delta, is to just shift the whole thing higher. Southwest, this was a Jade Lizard, closed for 84-cent winner. SPX, this was an Iron Condor that was in the money until today. 8 days left, got completely bailed out. This turned into a $315 winner. We placed this one of those days on the SIBO floor. IBIT, the short put that Ryan got us into, long-term June cycle, 30 strike into that big sell-off. That was a 50% profit, so I just closed that risk, removed the buying power. United Airlines, call diagonal spread, closed a 70-cent winner. SLV, it's the same thing as you. I bought back my May 87.97 strangle, and I rolled it to June and down to the 87 straddle. I picked up $350 to do that. So this position's looking good too. I now have the 87 straddle with $2,000 in credit received. So my break even is below the current price of silver, which you love to see. And then crude. So I've had these. I had an Iron Condor here 79.80 was the upper bound. And then I threw on another short call spread, the 98.99. The 98.99 is now out of the money in one day. And the 79.80, if we get another move like this, which is possible, that'll be out of the money too. My downside put spread was trading for a penny. So I was like, I need to just get rid of this just in case crude comes down from 95 down to 75. Like if the whole curve collapses, I did not want to have that put spread on for literally no reason. So that was it.
By the way, remember that your trade inspired a trade. I did close one thing last night. So if you remember yesterday when you showed that, I was like, 100. I was like, what if, if this thing de-risked a little bit, well, it'll come back down 100. I'm going to sell that call spread. Remember that call spread I sold yesterday?
Oh, yeah, the 100.
Yeah. That was the first thing I'd looked at. I sold, I think it was the 99-100 call spread yesterday. Yeah. And when I saw oil in the 90s, I was like, oh, I'm closing this thing. So I was able to close. I sold it for like 70 cents yesterday.
Yeah.
I was able to close it for 35.
Yeah, great. I think it was like collecting 750 to risk 250.
Yes.
Yeah.
It's great.
Very nice trade. Yeah, that's it. And then I open my Tasty FX account and I cry.
Yeah.
This
can't all be good, Michael.
This dollar franc position was a scratch.
It was.
And I was like, I'm too stubborn for this. Has to be green.
One shining
now
moment.
It's a $250 loser, and we're back to the drawing board. However, we are still picking up pennies every single day.
I was short dollars, so it was actually pretty awesome. And I had gotten aggressive recently. I was at like 15 micro lots of the New Zealand dollar, the Aussie dollar, those two in particular.
Nice.
Yeah, I made out like a bandit. So
pretty.
I actually just reversed some of those this morning, and now I'm just right now just 5 micro lots of. I'm basically long dollar via New Zealand dollar, Aussie dollar, US dollar, franc, euro, and pound. So small right now. Let's just see what happens. I don't know.
All right. You're surfing.
Yeah, I've been surfing.
Mike's stuck.
I'm drowning.
But yeah, let's. I got some slides if you want to go into that first. Just
Let's do it.
I wanted to give you a little bit an ambitious title here. What does peace in the Middle East mean for the U.S. dollar? Not quite there yet, but taking this time at the start of a 2-week ceasefire and ongoing negotiations to kick off on Friday. The Strait is open, allegedly. We'll see.
Allegedly.
But is this the start of, lifting the veil of what's guided price action across all markets for the past month and change now, and revisiting where we sit if we look granularly within dollar markets and what the key questions will be as we move on to kind of second order effects that we've covered before, but just want to revisit right now and give some, some frameworks for thinking about this from the lens of currency trading. We'll fly through this, but just want to go around the horn with various dollar markets on the next slide, starting with the most liquid pair in the world, most traded currency pair, Eurodollar. And here on all of these, I've denoted with a horizontal line where we were at the start of March or the Friday before the start of March, that weekend gap, the onset of the conflict with Iran. And we'll see various kind of different graphs, all dollar pairs, but the level of retracement and where we currently sit. Eurodollar firmly within middle of the range, not yet back at where we were pre-conflict. This kind of mirrors a little bit of equities in terms of how much they've retraced. We're not all the way back, but definitely a huge, across the board, huge dollar move to the downside as a lot of this fear and uncertainty has been lifted for the time being. But I also wanted to call out that it's back right above its 100-day moving average. Why do I say that? Not for any sort of technical indicator or reasoning, but really to give you a wider sense of how this market has traded over the past 100 days. Here we're looking year to date, January till this second week of April. And you can see that we really have been around this 117 level, but that average really being pushed up by that couple day flashes above 120 in this euro-dollar market, and the stark drawdowns offset by the stark drawdowns below 115. So a lot of chop here in this market, and we'll get into at the end why the future of this pair could equally be very two-sided as we look to rates. But comparing it on the next slide to its neighbor, pound dollar is almost all the way back. So it's been able to not get as banged up because you could say that it had, in a different world, with a different chart, you could say that, pound's already been gaining some strength. Not the case. We were at our lows to start the week, to start April, and just the 2-day move from last night and today has brought us all the way back. So pound being a little bit more resilient with its insulation compared to the euro area of what the potential inflation shocks will be from these energies.
I was going to ask you.
Exactly. So this one just hit less hard. Still had that U.S. dollar flight to safety that pressured this pound, but in terms of expectations around lasting impact, not as great for this pound. And if you were just wanted to trade that kind of difference in isolation, could also look just to that euro pound pair outright and take the U.S. dollar component out of it completely. On the next slide, we're changing hemispheres and going over to the Australian dollar. And this one, while mapping very closely the days that were risk on and risk off, very guided by risk sentiment, was able to hit new highs in March throughout the conflict, breaching that yellow line there. And it's nearly back to those levels. We'll see what kind of role metals play in this as well. But as we can see from January 2026, a big boost from a fundamental perspective for this Australian dollar. Got shaken out farther than I thought it would. It was holding in around that 70-cent level for most of March before sliding much further. But a more solid picture here for this Australian dollar compared to, on the next slide, their neighbor, the New Zealand dollar.
These are all my friends. These are all my friends.
Jamal's trades.
He's like, I've already smashed these.
New Zealand dollar still needs a bit of a hand after dipping below 57 cents here, which is very historically low for this pair, for the New Zealand dollar in particular. A strong bounce, no doubt about it, but still a lot of room to run. Perhaps our most hampered pair. And you'll see that as well in the currency cross. If you were to look at Aussie, New Zealand, taking out that US dollar component there, you'd see the Australian dollar outperforming throughout March. But today, New Zealand dollar putting in a little left hook back. And lastly, want to look at a very popular pair, arguably second most popular pair behind euro dollar, USD JPY, the Japanese yen. Similar bid on last night, but this one's very interesting that we're still pretty range bound to where we were in the latter half of March, not meaningfully breaking through 158 and certainly not back to 156, which is where we started March. So a lot of different pictures for this US dollar story, depending on what kind of exposure you're trying to garner, as well as, the idiosyncratic risk of something in particular like Japan. But a lot of, from a financial market aspect, pretty strong day for Japanese assets and the bid in treasuries. Good for Japanese yen as well. But this still has a lot of room to go as well. And so when we get out of this conflict, of course, we could see that change, today, tomorrow, risk sentiment sour once again. But if it doesn't, we're looking at on the next slide, one of the main drivers of currencies overall is the interest rate landscape. And this has been one of the primary second order effects of what does elevated oil prices mean for economies, inflation. How do we curb that in a vacuum? Raising interest rates. But what we have here is a pretty interesting spread of expectations for 2026. We've got the Fed expected to hold, but dipping back into rate cutting territory. Not one full cut priced in for 2026, but no longer, as two-sided. Can we hike possibly? Whereas every other major central bank is looking at more hikes this year, and you can see Bank of Australia has already put in a couple of those hikes, so 2 more expected from them. But that European Central Bank still at above 0.5%, above 0.75%. So that's 3 full hikes expected from them this year. Bank of England, 2 hikes. And this is where you can start to formulate your thesis for how currencies might behave in the future with this backdrop, because this is already priced in. So we're looking at the numbers. It's interesting. But what we're really looking for is the reactivity, the rate of change. We see U.S. dollar coming down strongly today. And so that's playing into U.S. dollar weakness. But then you also have the question of action versus inaction. This is not, a very straightforward inflation up, we're free to hike. You have the aspect of growth to play in, and how that manifests for currency can be two-sided. We can have taking euro for example, we can have a European central bank hike into inflation, but if the growth standards can't meet kind of the demand of what a higher interest rate brings, then that can get you into stagflation territory, and that's not good for the European economy, and by extension may not be perceived well for the European currency. So you have a lot of variables here, but I think the main takeaway is it might be easier for central banks to do nothing than hike aggressively into an environment where you don't know if your economy is strong enough to support the inflation shocks from a supply side, and if hiking rates will drop that inflation quick enough so that you can respond quick enough. And if you are of that thinking, then the U.S. would be much better positioned to sit and wait where they are, whereas markets now pricing in a big return to interest rate hikes. And so that can help you contextualize what dollar market you're looking at, where you can see, okay, our euro dollar halfway back to where we were at the start of the year, but that's already baking in the expectation of their central bank being able to hike into that, which in theory is good for a currency, a higher interest rate for holding that currency. And so you could see a world where, even though we haven't retraced it all the way, if the U.S. comes out ahead in terms of not having to do as much to combat these inflation risks, we could see a retracement of the U.S. dollar, regardless of overarching risk sentiment. And then you get the actual dynamics, the historic dynamics of currencies that you could probably continue to see. Australian dollar, New Zealand dollar be more risk sensitive, whereas without this geopolitical conflict in the background, something like euro dollar might move more freely with these interest rate expectations and growth numbers, the regularly scheduled economic data points. So that's what we're looking at if the conflict is behind us for the US dollar.
Love it. Well, while you were giving us the overview of the important pairs moving, I got long the New Zealand dollar, US dollar pair.
You like that chart?
I do.
It was lagging.
You said it's got room to run. I smashed it. And then I also got long more of the New Zealand dollar against the Aussie dollar. So I'm short the Aussie dollar, New Zealand dollar pair. So doubling down on New Zealand dollar.
Nice.
With a little bit of a US dollar short hedge against my other
lean
bullish US dollar position. So we'll see.
Yeah,
These are probably going to fly around, I assume. If we continue these 100-point plus moves in either direction, we're going to see some volatility in these currencies, I would imagine.
Yeah, and I mean, the currency markets might even be more interesting after the fact as, we get less snappy from just risk sensitivity and more of these actual consequences for economic data points. Those event risks, I think, continue to stay elevated from a volatility perspective, even if we won't have as much ad hoc headline risk, which, is fun and all, but time for a change, maybe. No more war headlines. I'd enjoy that.
Big move in the dollar. I mean, this is the lowest level since March 10th.
Oh, there you go.
Everything's kind of going back to March time period.
Yeah, so looking at this
early March
weighted dollar basket, what are we back below? Oh, yeah. I didn't even see it down there. It was so disconnected.
Yeah. It's actually catching a little bit, barely, but
similar to, the how elastic we were at. Oh, Nasdaq's back. We're getting back there, but yeah, still, 0.5% in equities, that where we were at the open. Haven't retraced. Wild moves all around, no matter what time horizon you're looking at.
Yeah.
15-minute, daily.
Yeah, someone in the chat asked about the 5-minute SPX chart. Have we seen anything like it?
That's a bull flag.
Yeah.
I gotta tell you, I
no
am,
flagpole.
I am. I don't know what to make of the whole thing. This with what's happened in the last 12 hours or so. I guess it's more than 12 hours, 5:30, whatever. 15, 16 hours. But the fact that we've held up here is interesting to me. We've stayed here. There hasn't been this big turnaround. There's no fade once the market opened. A lot of times we have a big move before, like overnight or something, and then as we get closer to the market open, it goes the other way. We haven't seen that. I do find that interesting.
I was actually thinking, because we were pretty strong into the open, sold off immediately. I was thinking, for at least 15 minutes, we can test new highs. But really, I was surprised to see immediate selling and then that kind of vibe over the next hour. I thought we would just continue to chop lower, but getting a bid back.
Yeah. And we are now in all of these futures contracts I have on the left side here. We went from a 1.5 backwardation yesterday to a full contango. 2165, 2217, 2222, 2260, 2265. So the market has priced out backwardation completely in all of these contracts, which I think pairs to that sentiment of we're sitting at these highs and
okay with it.
Parted.
Seas parted.
What's really insane?
No, the seas are open.
The seas are open. Yes. What's really crazy is if we go back to the daily chart, like if we just snap back to 7K plus, that would be crazy.
Yeah.
Wouldn't be surprising because that's just how these markets are moving. Like markets are moving so fast these days.
Let's caveat.
Yeah.
Crazy and surprising, very different.
Yeah. But like another day like this, we're right back at 7,000.
Yeah, I mean, this is the area where, you make adjustments and you got to have a little bit on either way. As much as I've gotten some short delta on, I got some long stuff still, believe it or not. I mean, I still do.
Yeah.
That's why I was closing a couple of long things. I'm like, I should probably like the Meta, even though I just looked at Meta. God, that thing's up another $10 for where I closed my Super Bowl. But I mean, there's certain things you just got to close. I could take a $300 gain on a Super Bowl. That's pretty nice. And I have others. I have an ABGO Super Bowl. I just put on the Palantir to replace, further out. You gotta do some trades today, man. I mean, this is a gift. Yeah, for sure.
Can you give me a 1-second description on your Super Bowl Super Bear I get
He
it.
wants more. He wants to learn more.
I get it from a
you ready for this?
direction standpoint.
The FX guy wants to learn
You
options.
ready for
I love
this?
it. Yeah.
We could look at this one. So we actually both had this on the 380, 370 put spread. So let's say you pick up 440 in credit. You give up that credit. You say, no, we got to spice this up. And you buy a call spread with some of that credit. So when we got into this trade, and this is what this looks like at expiration.
And you'd get in this all out of the money, or all
So
the
that's
strikes
the
above?
real interesting part. The trade is not hard. It's a matter of and Mike, might be different than me, but it's a matter of where you feel the stock could go, right?
Yeah.
Like that's really what it boils down to. You don't get crazy with it. Like obviously we could pick our call strikes like wherever we want. Right. But the number one thing is trying to get a credit. But I think the art of it is not only getting the credit, but figuring out where the stock could actually realistically get to within the time period that you're choosing. That's the real part of the sauce.
This is really like more like how we set it up initially.
To stay on the credit side.
Yeah, you stay on the credit side so that you have this neutral profitability zone. That's what keeps your probability of profit above 50%. But you give up your linear profit potential with your just put spread here, and you replace it with positive gamma explosive opportunity. Like there's no way you're selling a put spread that gives you 1.5K in max profit. So like this is just a simple. It's a swap. So you're swapping your credit received for your debit call spread here, and that's how you get that theoretical P&L that really moves if you get a rally at Microsoft. One cool thing about this trade, which is what we did too, is we put this on and then the market tanked, but you've already sold this call. So I initially sold the call that we sold for, if we look at this here, order chains, we had the 373.80, 425, 440. So 10 point wide to finance a 15 point wide call debit spread for 70 cents.
Oh, interesting.
But then at the bottom of the market sell-off, I looked at the short call that I initially sold for $600 and change, and it was only trading for $1. So I bought back that call to just free up that upside. So you're basically getting more long delta, but you're
loading the
$1.
slingshot.
Yeah, you're only paying $1 to load the slingshot. So now I have the put spread with just a naked call at 425.
You are an artist of position management.
It's all just credits and debits. That's all it is.
And in this
Accounting
case,
101.
it's like, first of all, you need Microsoft to climb a couple of hurdles if you just look at the chart. Like it needs to get above 412 and change. And then eventually, if it gets above that, so a lot of times we'll see things are explosive. Like, I guess the best way to describe it, and again, we got it up against 425, but the best way to describe it, I think, is in terms of SPX. So like the Super Bowl that I had on, I sold a put spread to finance the call spread, and the call spread was 6,700, 6,720. I knew for a fact we got to 6,700. Market was going to fly.
Yeah.
That's exactly what happened. So that's the kind of thing you want to do. You want to. It's about obviously collecting the credit, but you want to structure the call spread, not in crazy areas. Like you want to put it in areas where you feel the stock, the ETF, whatever it is, can get to, and that's I think the real secret of the sauce.
Yeah. So I think if you were setting up a new one in Microsoft for June, for example, we'd probably sell like right at the money here, 350, 340. Maybe you bring it in a little bit if you're bullish now. And then all you're looking at is your $3 credit. And then you just set up a vertical spread at or just outside of the expected move here. And you can do a 10 by 10, so 10 point wide put spread to finance a 10 point wide call spread for 50 cents. I think we went a little bit further out to make it wider. So like a 424.35 for 50 cents. And that's how you really get that gamma exposure if we were to just isolate this trade. And then look at the Theo. If you get a move up to 400, 405, you're making 500, 600 bucks with no changes in IV or time or anything like that.
I mean, to be fair, we put on the Microsoft. I'm looking now. That was in February. February 23rd. So that's why it was actually structured where it was.
And you give this one more time. You were looking
Yeah, it
at
was a
70
long-
days.
Yeah, it was a long. I mean, when a stock is struggling like the way Microsoft has been, you do want to give it a little time.
Yep. So yeah, that's the Super Bowl.
But you could do this because you do it intra week.
With SPX, yeah. I have, yeah.
So it holds.
I wouldn't say intra-week. I try to go, especially more recently, it's been like at least a week out.
Sure.
And it's usually been on a Monday
There's
or a
not
Friday.
any huge considerations for like this only really works long dated.
No, actually, I feel like it might be a little bit harder sometimes long dated to, because I mean, there's more. It just depends. Sometimes upside's a little bit more expensive, and you can't necessarily get the appropriate credit that you want to the downside. So there is I would say, I don't want to say limitation, but there's certain terms that work better than further out terms. It's a little harder to do further out.
Yeah, and I think for SPX specifically, it's interesting because SPX is such a big product that if you sell a 10-point wide spread, like you have to hold it to expiration to get that value. But if you're using the spread to finance a debit spread, you create that dynamic delta, and now you can make a lot more with the same risk. So, yeah, it's ultimately just giving up a little bit of that credit to give yourself that higher upside profit potential and create some asymmetry in what normally would be more of a linear payout.
Sure.
As we sit here, I'm eyeing up the idea of a super bear in SPX again, but I don't know if I'm going to do it right now. I've already told you all the different short delta stuff I got on. I don't necessarily know if I want to.
Which one are you looking at?
I'm looking at something around 6,800. I'm looking at for April 17th. Just right now, this is aggressive, but it's like 6,800, 6,810 versus 6,775, 6,760. I mean, that looks great right now, but what if we go up another 25 handles over the next several hours? It's like,
I have a half pipe in here.
You know? It does.
The anywhere but here.
Yes.
Half pipe.
Yeah. So yeah, 50 cents. And if you look at the Theo, if you get any downside move, you're making $500, $600, $700, $800. And this is just on a move that's like 70 points lower from here.
Mm-hmm.
So not too crazy. But if you just sold the call spread, you can only make $200, $150 on the same move. So that's the power of it, is it gives you that gamma exposure.
And in terms of knowing when you're wrong, do you find it easy, or it's
I mean, it is what it is.
It's low enough where you just let it ride?
Yeah. Well, so I would say, like, a lot of times, if and when I do these, like in this situation, I really do need to analyze how much long delta I have if we get up and above 6,800 that can offset this loss. Again, this is like, if I collect 50 cents, this is a $950 loss, right? So it's like, will I be upset? Like, for example, the super bear that I started off with today that I adjusted, I mean, I lost on that, but I had a Super Bowl that I knew I was going to make more to cover that. So I do need to estimate how many other long delta plays I have if we keep going up. Like Mike said, we could slingshot from here to 7,000. So how many long deltas do I really have? I really need to analyze that. I like this trade right now because I feel like, the market could fall. That's why I like the trade. But does it really work for the portfolio? I'm not sure yet. Because again, I did put on a bunch of short delta today. I did close out some stuff. So I really need to analyze. I don't know how many more real long delta plays I got, especially after some of the stuff I did today. But part of this, the whole thing that really makes me feel like it, honestly, is that makes me feel like doing it and like it is the year-long trade. And I'm still kind of long deltas than that. Like and not that long though. My short put is at 25.5. So it's not like I can get carried away. So honestly, I think I probably have enough short delta, and I probably just talked myself out of this trade. But it's interesting to me because of this massive move we've had today.
There you have it. Super Bear, Super Bowl.
Thank you.
Yeah. Thanks for coming
Very
on.
informative.
Yeah, it is. It's nice. We're violently long and short in TastyFX accounts, as one should be. But only 5 microlots per position.
There you go.
It's small, digestible. Speaking of digestible, did you secure some ribs? Are you off the? Oh, you're off the ribs probably.
I'm off the ribs
because you're in tone mode.
I'm in tone mode.
Yeah.
But I did crush a lot of grilled chicken, and if we were sitting closer, you'd know onion for this. So we'll go back for round 2.
Love it.
Fair.
Thanks, guys.
Thank you.
Yeah, man.
Happy rest of your Wednesday.
Absolutely. Likewise.
For those who celebrate.
Everyone should. at Glenn Freiberger, if you want to follow him on Twitter, give him a shout. E-minis haven't moved at all, which is insane, all things considered. Up 170, NASDAQ up 750, Bitcoin's up 2,400. We were joking with Ryan this morning in the chats because Iran wants payment in Bitcoin for the Strait of Hormuz. So like, that's like their penalty. And he's like, there's a use case. Which is always funny. But yeah, I mean, these markets are crazy. But there's nothing too surprising here. Even though this is a crazy move, like the dynamics of the market make a lot of sense. Crude oil, backwardation getting crushed. We're down at 94.99 now, and the next contract we're at 87. So this was like a 15-point backwardation yesterday. It is now a 7-point backwardation. And I would imagine you see this collapse even more as conflict gets more depressed. And then I think the most surprising thing to me is just the fact that vol futures went from decent backwardation to just complete contango into this move.
Yeah, I would say so. I mean, seeing the contango, one of my other alerts that went off was VIX dropping below 20.
Yeah.
That happened at 8:35 a.m. It has bounced back, of course. But yeah, seeing those two things, I'm like, ooh, this could be, it feels weird to say over, but I mean, those two things to me, or three things, oil dropping as much as it has, seeing VIX and it's not in backwardation anymore, basically in contango, kind of flat, and seeing VIX drop below 20, tell you.
Yeah. I think the market is telling us that if it's not over yet, it's pretty close. And I think that was hinting at that last week when Nick and I were on last call. We were like, this doesn't make any sense. E-minis were down 100 and they went to flat with oil up 15%. And we were just like, the only way that this could make sense is if the equity market is front running the end of this thing. And we're catching bids and we're not staying depressed, even though crude oil is flying, just because like that's the only dynamic that could have been like a narrative that made sense.
Yeah.
And now we're seeing that come into play.
I mean, yesterday, it felt like we were still like in serious no man's land, and it was. And now we're not. I mean, we the other thing is got at 6,800. We basically held that area. And I think if we hold this, I think you're right. The market is front running the fact that it's over. I wonder. I guess the next big thing is, are we going to slingshot to 7,000 or are we just going to slowly grind up? I'm playing for the slowly grind up. That's why when I sold those call spreads in the big ETFs, the Qs, the SPYs, et cetera, it's up against the highs from basically before the conflict, like not all-time highs, but it's up against like those type of highs, and that's why I'm like, as much as I like the Super Bowl, this is like not up against like the 7,000 type of highs. It's just up against, so if I'm going to sell highs, it's going to be up against the highs before the conflict. That's what I tried to do with that strangle in CVX and XOM, those against the recent lows and upper highs. That's what I did with the Qs and SPYs and those type of ETFs. I think I'm done selling for the time being.
Yeah, and really, like, if we get another day like today, we'll be at 7,000 tomorrow, which is wild.
Yeah.
Gonna pop over to the YouTube chat real quick, see if we've got any questions. Got about 5 minutes left here. We'll do some rapid fire. Bullish on Amazon for earnings. Calendar at the 250 strike for May 8th, May 1st, or June, May 1st, or both. I think you could do both if you wanted to, because this May 1st, May 8th, or May 15th is really cheap. It's less than $100 for either one of those. So I think if you want to just throw that on just for a cheap upside shot, makes sense. And then May 1st, June is going to be more expensive, but you have more conservative time on your side. Just the fact that you can hold this June call for a lot longer, still very cheap. So I think both could be the answer if you have $500 that you're trying to risk. Let's see.
The Junes aren't that bad, actually.
Yeah, really not too bad at all. I'm above 7,000 and below 6,000 in the SPOOs. That's where I'm taking my chance. Yeah, that kind of goes in line with what Jamal was saying. If you're at these kind of extreme levels, if we just look at movement over the past year, 7,000 was where we hit that ceiling, glass ceiling there, and then 6,000 we haven't seen since summer of last year. Pretty wide range, but leaning bearish into this move to the upside for sure. What else we got? Anything? Closed all CL6, CLK6, opened some covered calls and short put verticals in the CLM, selling premium. Yeah, I mean, if you look at this curve, we got 94, 87, 82, and then it flatlines in the 70s. Interesting to see these back months not really drop. These have been at 70 for this whole week, pretty much, and last week. It's been around 69, 71. It hasn't really moved. So all the premium and backwardation is in these first 3 contracts. So yeah, 8 days left, 94. If you played for a contraction in that cycle, you made out like a bandit, but still some risk premium priced into the 36-day. Totally viable here. And 85% IV. Much bigger number than these back months.
I think I'm done trading. Well, I mean, I still have a iron condor where the upside is like the 90, 91, I think, or something like that. I'm done trading the April for now.
Yeah.
I would be interested in if we stay here at 6,800 and oil still drops a little bit more, I'd be interested in maybe buying a call spread in the June contract.
Yeah.
Closer to, like 98, 100 or something like that.
Yeah.
That contract dropping down. Because again, I mean, if this thing gets crazy again and eventually this May rolls off and then we get crazy again, June's gonna.
Yeah. And really, like, that's why I close that put spread, because this put spread's worthless right now. But if you get another 20% sell-off here, and that's really, like, I'm not ruling anything out in this contract.
Yeah, exactly. That's not ruling anything out is the thing.
Yeah, and a 20-point move here would bring us out of the money on this one too. And this one would be worthless, basically. Or at least into profit territory for sure. But yeah, making back a lot in the crude oil trade right now, just being short. And 8 days left. Got lucky with timing, for sure. I think that's it. I just checked the CME FedWatch tool and just to see what the interest rate movement was, and there hasn't been much. I mean, we're still tied to that 350, 375 level all the way through the end of the year in terms of probabilistic outcomes. And then middle of 2027, that's where you start to see that probability increase for a 25 basis point cut. But until then, we're chilling here.
Not a whole lot of change on that front.
Nope.
But even though there's not a whole lot of change on that front as far as like what we see on here, themselves, they're like, oh, thank God, if this we don't have to do
Yeah, for sure. Now it feels better that they can do it, but we do still have before we get out of here, SPX implied move for the rest of the week. Tomorrow, 47 points. Friday, 70 points, which is interesting. And we do have some numbers coming out. I believe it's CPI and PPI on Thursday and Friday. So PCE is tomorrow morning, 7:30 Central. CPI is Friday, 7:30 Central. So they're still pricing in a little bit, but 46 points for tomorrow? No. Can't accept it.
I know.
I just can't see it.
You know what's funny? I was about to say, I actually think that might be right. I think it's going to be quiet tomorrow.
Really? You think so?
I think it's going to be dead on the floor. And I'm going to tell you right now, those dudes are going to have golf on every TV.
That's true.
I'm going to tell you right now.
We're going to be at the SIBO and there's going to be golf on
there's going to be golf on every TV, bro.
Amazing.
I'm telling you.
So I guess in that regard, makes sense. All right. That's it for us. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. And Glenn is at Glenn Freibarger. If you have any more queries, let us know. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow from the SIBO floor. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Crazy day. We'll see if it holds. We'll see you tomorrow. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk.
What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Watch me go, go,
What is going on, everybody, and welcome back to Risk and Reward. Today is Wednesday, off to another volatile start after the post-market activity we had seen yesterday, and then kind of trying to settle into things here today. So we'll do a little bit of tour to market. We're running a little solo session today. Let us know what you're looking at. Let us know what you're trading. We'll get into it. But it's been really volatile, you know. I will say to start, I'm pretty surprised by the afternoon announcements and the volatility that we've been seeing. I know it seemed that the risk has been priced into the upside, but I mean, I just could have not predicted the 1,000-point rip that we've seen in the last 24 hours. So hope you're all doing well. What's going on, Brett? We can go ahead and jump right into the Tasty platform. We'll get into it for the day. Let us know what you're looking at. Let us know what you're trading. Big deal. What'd you get into today? Brett, what were you looking at today? As we get into this extremely volatile day, extremely volatile. What's going on, guys? We didn't do too much in the portfolio today. Yesterday in the after hours, we were trying to tame the bull a little bit on the indices and oil. So we scraped our knees a little bit after hours yesterday. So that's what some of this P&L is from. But we'll jump into the TradingView platform and we'll look at some of the executions. But I will say the USO put paid out pretty nicely, which ended up acting as a hedge for some of the stabs we tried to take on micro crude oil. So USO finally panning out today. I think today is a day where you have to do something in oil, you have to do something in the indices. And with such a massive move, you have to use some type of management on the day, whether that's taking some profit or adjusting in some other way. But what's going on, Sergio? What's going on, Ranch? What's going on, guys? What is going on? But yeah, for USO, I will say this is one where I wish I would have had a little bit more risk on. You know, I know hindsight is 2020. I know it's easy to say these things after the fact, right? But I mean, with the levels that USO was at and how cheap some of the options were, I wouldn't have hated the idea of buying an extra put for $2 or buying an extra 2 puts for $1 a piece or $1.50 a piece, or even just $3 for an extra put, whatever it might be. I would have been fine assuming that much more risk if we continue to put in a new high on oil. But none of that matters because hindsight is 2020. But we did have a put on in oil. It's finally panning out for us today. And again, with the market, or the oil market at least, being at these levels, I could just not imagine Trump allowing oil to stay at these levels considering inflation. And how that would look into the next quarter as well. So, I mean, I feel like we knew it was coming, but again, it's that case of musical chairs. You don't know when they're going to pull the plug, but when they pull the plug, things really come falling down. So oil really exciting over the last few hours. Increased implied volatility in USO as well. Took a little long delta. I feel like the market wants me to think it's willing to go bullish just to punch me in the face. I think that's the kind of sentiment that it's been giving everybody for the most part. There, Stan, but I hear you on that. Short strangle is still an option. I put on a very wide short strangle a few weeks back, almost $100 points in between. That's something I could look at. I know that's going to be a little bit more buying power on my end, so that's something I would need to contemplate. And especially because we have a smaller portfolio, right? Yesterday was a really solid day, right? I know we did some stuff into the after hours where we gave back a little bit of the profit, but especially with a smaller account, we're trying to grow this very slowly. We're doing pretty well so far. We've just passed Q1. We're going to try to continue to stair-step this. So we're going to put a key focus on risk management and just how much buying power we're going to use up. So maybe if we could even look at something in oil, if we can even go wide enough if we had to purchase those wings for an iron condor, because what's a strangle going for right now in USO? Let's see. Let's say we went out to the wings on the expected move. Let's get a good range in here. Let's see, about $814 worth of credit, $3,700 in buying power if you were to sell the strangle at the expected move. Pretty wide, 70% pop as well. That's actually not too bad. Like if you have the bucks for it, that's not terrible because that's pretty wide. I know we get a lot of volatility in these products right now, but that's pretty wide. And after such a large directional move, I wouldn't doubt if we get a little bit of a calm down in volatility in the oil market as well. But I mean, the strangle's not terrible. But I don't know how attractive this iron condor is going to look once we buy these outside wings. And with an iron condor on such a volatile product, don't want to trap ourselves in here either. I don't want to have to go inverted. Or one thing I hate to put on is the iron fly. I feel like whenever I have to adjust my iron condor, or I have to adjust a position into an iron fly, I'm almost like at my knees, and it almost never works out for me in my case at least. So the wider that I can be on these trades, the better. 237 worth of credit is not terrible on a $5 wide. Did we buy this wing out here? That's leaning slightly bullish. We'll circle back around to this, but something to have on the radar. I know oil for sure will be on the radar because if we get any type of, I think, pop to the upside, it might be worth throwing on a little bit more short delta just because we've given back a lot of the range, but I think the range is still kind of there and the sentiment has shifted a little bit bearish on oil. So I'll be patient. I'll be patient for that with the time being. Call ratio spread, another thing we could look at, short-term trades. More short-term trades. Looking at the leap in silver. SLV, what has gold and silver been up to today? Oil really stole the show with these ones. Oil really did steal the show. Silver trading at about 68 and a quarter right now. Not a bad gap up and not a bad run all the way to about just shy of 70. Silver is something that I would still be leaning a little bit short bias on. I think silver, platinum, gold, oil, they're all going to kind of land in the same category of like being on the backside of the move. And what I mean by that is whenever we officially, quote unquote, put in its high. So let's see if we can come over here and put a vertical line right there. Anything that is on the right side of this line, I would consider the back side of the move, especially whenever we get, usually these happen a lot more often on small cap stocks because those are easier to pick up a lot of momentum and we typically get that kind of large euphoric pop and drop kind of movements. So whenever we're on the back side of this move like this, those backside pops to short will be a little bit more attractive. That's kind of the picture we're trying to paint whenever we kind of just split that peak right in the middle. So now that we're not on the front side of this move, short opportunities will continue to be attractive as long as we get the range. But I have no deltas in gold or silver right now. And then big deal, we'll take a quick look at micro NASDAQ here in a quick second. Brett, what's going on? We got Brett and Rhett. What's going on, guys? Rhett. Metals front ran the move, so it's not crazy to think they may fade more if the issues get resolved. Yeah, I'm kind of in the same boat over there on that end, Jared. Thinking very similarly there. So if the premiums are attractive enough on something like SLV, may sell an out-of-the-money call spread, maybe more likely to buy a put. I really don't mind buying some out-of-the-money puts that are just a few dollars away if they have a little bit of time on them, especially looking for a short-term directional move. I've been a little bit more fond of those, especially this year for sure. Considering a short-term move, we'll keep an eye on it. I think 68.30 is a lot more attractive than 65 on silver, but I mean a 70, 75. I won't be greedy. I won't ask for an 80 silver. But if we get to like a 70, 75, 80 silver, I think a short opportunity will look a little bit more attractive since we're a little bearish over there. But we got USO, we got QQQ. This QQQ, man, somebody should have told me not to leg into this one. I mean, somebody should have told me about Taco Tuesday. Apparently I forgot. But with the Trump tweet, this call spread that's sitting out of the money is sitting way in the money. I mean, QQQ trading at 606 right now. We sold this one at 580. So about 16 points. I'm sorry, it's 16 points, 26 points in the money right now. This out of the money put spread worked out fairly well, obviously, given the run that we've gotten over the last 24 hours. But it's going to be one of those. We'll most likely profit on the puts and then have to give up the call side unless we get some type of reversal, unless in the next, I don't even have 2 weeks. Well, we have 9 days left till expiration on these contracts here. The pause was what, over the next 2 weeks, I think it was over the next 14 days. I think starting today, so maybe 13, a little less than 14 days. I have 9 days left till expiration. So we might not get a conclusion until then. And I'm not thinking we will reverse this entire move before we do get any type of conclusive information, because all we've gotten was an extended hopium is what the market's been running on. So overall, the position's not doing too terribly bad. Puts all the way in the profit, calls getting cooked right now. So sitting break even on that one. Sitting break even. See where we at here now. Quickly, let's go to some of the largest movers in the market, and then we'll shift gears and we'll go to Trade and View and check out what we did over there. Looking at a super bear on silver. Haven't pulled the trigger. We're going to be sitting on the same sidelines there, Jared, because once again, if we get any type of pop in the metals, I think some short delta, I may warrant some short delta on in the portfolio. But with the market up at its highs, let's see what else is sitting near its highs. We got Pony, 17.5 IV ring, pretty low volume. Levy, see, these are some cheaper underlyings. Riot, it's been a while since we looked at this one. Massive gap on the day with a continued run to the upside. I think Riot was very correlated with the crypto products. I think in like 2020 or 2021 or 2022, I think it was. I think when Mara and Riot were gapping up, I think whenever the cryptos were gapping up, Riot, Mara, I think was in the same category. Those are all kind of acting as sympathy plays. So interesting to see the volatility back into Riot right now. 44.5 IV rank, 15.5 million shares traded. We got earnings May 7th. We'll pass on that. But a little nostalgic from Riot, to be honest. USAR, USAR, 8.5 IV rank, not very attractive. AAOI. Nothing looking too attractive. We have SanDisk on the leaderboard right now after the down days it put in and then recovering right back to its all-time highs. Wow. What's Micron been up to? Okay. I didn't recognize these have been recovering like that. I guess we had a gap up today, a little bit of a continuation, and then now we're pulling back on some of these tickers. So the volatility is in SanDisk and Micron. A short opportunity, short delta isn't too unattractive in these names either, now that we've rallied back so much since the earnings we had on SanDisk a couple of weeks ago. Just a couple of weeks ago, that's 357. We're pretty close though. Only $10 wide on Micron. I'm not opposed to either Micron or SanDisk, so we may pull the trigger on one of these. If we could go a little further out, 272 on a $10 wide, would love to get at least 330. I'm a little OCD about that. Like ever since we had the rule of thumb of collecting at least a third of the width, like I at least have to get 333. Or if it's a $5 wide, I at least got to get $1.66 or at least $1.67. Even if it's like $1.63 or $1.64, I'm like, that's an extra $1 of risk we're putting on the table. But 354, $10 wide, 430, 440. If we sold the 430, we have a 65% pop, about a -4 delta. Not terrible. I really don't hate this trade. I think we actually might. We're going to let this one roll for a little bit because we don't have anything on in oil. We just took off our oil position. We have the QQQ Iron Condor on where the call side's getting tested right now. And then these were some paper cuts that we had taken earlier today. So it'd be nice to have something cooking in the portfolio. And I think we might have to pull the trigger on Micron, especially over SanDisk. SanDisk sitting at its highs though. It does look attractive. We have earnings after the bell April 30th. Like this. We'll pull the trigger on this one. We'll let that one cook for a little bit. We'll give back a few cents. We're not giving back too much. Go 350. Should get a nice little fill. There we go. But yeah, Big Doe. Very nostalgic trading those tickers like Riot and Mara. But with that being said, we can go ahead and jump over to the TradingView platform and we'll take a quick look at what oil in this micro position, this micro NASDAQ position has been doing. I got that order at the bottom left of the screen pop up for Micron Technology, MU right there. It made me say Micron, getting in my head. Thoughts on AAON? AAON? I don't think I've looked at it. I don't think I've traded this one. So far, right off the bat, I know I'm on a 1 minute chart. Not a very liquid chart, or not a very liquid underlying. You can tell right off the bat. Wow, this one looks like it tends to trade in a range. I'm not too much of a, just draw lines on the trend line chart type of guy. But if we could put this up here real quickly. I've never traded this one before, Big Deal. But if you look at it in the aspect of this range, we are trading near to the downside. Not a very liquid asset, though, I will say. You put on a $20 wide in SPX Iron Condor for 230. Not awesome, but too scared earlier. No, I hear you. Sometimes that additional credit that we kind of give up for feeling more comfortable, sometimes, is just a price we pay to at least be able to take the opportunity. Because the way that I like to look at it in the market most of the time is we just want the opportunity. Like we just want the risk to reward opportunity. And then whatever happens, happens. And whatever that credit needs to get to for you to feel comfortable to pull the trigger, all hats off to you as long as you're comfortable with the risk. But 100%, all we do is we just want the opportunity to pull the trigger. We'll have the risk to reward and the probabilities play out, right? A lot of the times we have to control the risk and reward, but We just want the opportunity, and we'll let the market do the rest. But with that being said, as you can see, we have this massive volume profile on the screen right here. I had taken this from the last few trading days. This is going to be February 2nd or February 3rd from when we started to sell off and started to trade within this range. And I took that all the way to about March 31st. The most relevant information is going to be between March 18th, I would say, and February 2nd. So what I'm doing in that time window, I'm just taking the range in the market where we had the most trading activity. So you can kind of see I'm taking this high volume node right here, bracketing that off. And then I just want to see how the market responds or trades around those levels. So that's how we retrieved that level over here. And then we have another one sitting at around 25,285 that we haven't been able to reach yet. But the market's been pretty volatile and the market's been pretty unpredictable, as it is every single day, right? It's not that we can predict what the market's going to do, but in terms of, looking at it from a price action perspective, the market seems to have not necessarily found quote unquote fair value yet. Fair value being the price range where buyers and sellers agree on price. And so far last night, after we had that 1,000 point rip to the upside, we kind of just grinded and floated to higher highs. And then just had a decent pullback with a low made midday today around 10, a couple hours before lunch. And then we haven't done much since there. And now pretty much we're sitting in the boat of waiting for the market to respond to one of our levels of value, because until the market can reach one of these levels, we just don't have much context to trade off of, right? And that's going to be dependent on the trader. But if you're looking at it from an auction market theory standpoint, or from the levels where the market had the most volume traded at, we don't have much clarity there at some of those levels just yet. But to show kind of what we did last night, which I think is really important, because we just talked about how we have a smaller account, right? We want to be very particular in the trades that we're taking. We're doing pretty well so far this year, steadily growing this account. But I think there's certain trades that we can kind of start to cut out of the playbook. And I think there's going to be some of the ones that I'll stop taking that I want to show you, because I think there are some trades that can kind of cut into the good work that you already do. So, for example, last night into the post market, we had gotten the news about Trump deciding that they'll extend the decision for another 2 weeks. So that absolutely made the oil market tank and crash, and that made the indices rip to the upside. So with that being said, we ripped to our value area high over here. And it's not that these trades couldn't have worked out, but I still think there are some trades that you can take out of the playbook to be a little bit more efficient. So whenever we get a trade even into the after hours, no matter how attractive it looks, I think if we pull the trigger, it's got to at least be on one contract. It's got to be on at least one contract if you want to take the opportunity, but no sizing into 2, 3, 4 lots, whatever it might be, just because liquidity is a lot different in the after hours. And then now you're putting on, in my eyes, is kind of unjustified risk, right? At the end of the day, we just want to manage our risk because that's what matters the most. But if there's also trades we can kind of just cut out, we might as well just go ahead and do that, because, we're up a little bit in the green on the week so far, but we could have performed 2 to 3 to 4 times better already if we would have cut out some of these trades. So with that being said, that's what we did last night. Wouldn't have expected this run to the upside. I was just so caught off guard that the market is actually ripping like 1,000 points, in less than an hour, that I was like, no way this market doesn't give back a little. Or no way this market doesn't at least catch the FOMO buyers off guard. That's a lot of the reason why I like to short those overextended runs to the upside or long those overextended moves to the downside, because it's kind of nice to catch the people that are chasing into these moves off guard a little bit, and you can capitalize on that sometimes. Or sometimes you might be on that end of the trade and you might be the one providing opportunity for the next trader. So we did a little bit right here. This was kind of just a little quick break even, but nothing is going to be too attractive until we get down back at least to this intraday low that we had put in, or until we can at least test this value area low sitting at 24,808. So the market's going to force us to be patient, but we will be patient because the market has proved time and time again, as long as we're patient, the market always gives us another opportunity. And as long as we manage our risk for the opportunities that go south, we will still be ahead of the curve as long as we take trades where the risk reward lines up in our favor. So big deal. That's about 8 risk rewards that I've said so far this segment. Let me zoom out over here on oil because we did a little bit in oil too yesterday. I want to point out, man, bittersweet again. These markets, right? This a lot of opportunity. I know USO panned out pretty well, right? We gave back a little bit on the micro contracts, but you really don't get these runs every day in silver and gold and oil, right? Some of you guys have been trading these markets a lot longer than I've been trading, let alone than I've been alive. But one thing I do know is we don't get these type of moves every day, because I did come from the small cap world where like having good range on moves was like everything. So to see this in large caps, to see this on some of the commodities and on products like silver and oil is just absolutely unreal, because they start moving in a very gamified fashion to where like fundamentals are absolutely out of the windows. And a lot of small cap stocks end up in that kind of momentum range where they kind of get gamified. And we're living in a day and age where the silver chart and the gold chart, platinum chart, and oil chart is literally looking like a bubble in a gamified price movements from what we see in other sectors and other asset classes that aren't as healthy as these ones. So I think it's just it's pretty surreal, I think, seeing the markets that we're trading in right now. Yeah, Jared, you're long gone if you're playing the arrow to risk to reward game. You're long gone. You're gone after the first 5 to 10 minutes here. But no, lastly, while we have a couple minutes left, we were looking to buy the dip on oil last night. So those were some of the paper cuts that we had taken. Obviously, the USO position, financing these little paper cuts that we had taken, but we were a little bit early. I don't like to hold and I don't like to sit in much drawdown, especially the products that are a little bit larger. Oil isn't a very small product. We were using a couple contracts, 2 to 3 contracts in oil last night as well. So whenever we made a new low, I was managing the risk. We ended up, curling back around. It would have been a nice trade if we were just a little bit more patient in there, but the risk was managed well. And once again, I think whenever there's opportunity that kind of hits you out of the blue, you got to make the decision, do I want to take this opportunity? Because any opportunity that you take, you're putting on risk. And whenever you put that risk on, you have to ask yourself if you're going to be emotionally okay with the risk that you just put on if things go south, and if you're going to be able to trade with a clear head the next day. So a lot of decisions that we have to make on our own behalf that affect our psyche, and that obviously affect our emotions, and then that falls into our impulses and all those kind of things. Yada, 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 yada. But with that being said, oil selling off down towards its lows. As we have 1 minute left, let's quickly check out what the crypto bros have been up to. What have the crypto bros been up to? What have we been up to, guys? Let's zoom out over here, larger time frame. What do we have here? We got a 71,000, just shy of 72,000. We got a 71,000 Bitcoin sitting at that value area high. Once again, this is the range where most of the trading activity occurred. Specifically about 68, we'll round up to 70% of the trading activity occurred within this range that we have marked off right here. We're going to go ahead and update this as well, capture a little bit more data. So the exact value area high for this leg down, this last leg down that we had on crypto, the value area high is sitting at 71,500. Value area low sitting at 65,000. Value area is a pretty wide range. So whenever we get some acceptance outside of here, I think is when things get a little interesting. But we'll swing back around on the crypto stuff. The Twitter handle is going to be under Errol Coleman. I think it's just Errol_Coleman. I think I got pretty lucky in being able to get my full name with just an underscore without having to add like extra letters. So I think I got pretty lucky with that. Put a stop on an iron condor for the first time. As predicted, they were happy to hit it even lower than the limit. Oh, wow. Yeah, stops save lives. Hey, a lot of people have different opinions on stop losses, but, I think your opinion on a stop loss is going to just really come down to how you view trading. And I think the function of how the trades are occurring and just the large picture view of it, I think is because I was listening to others again today, and they're very much so against a stop loss. But I don't know. I don't think I'd be comfortable enough to take some of these trades if we didn't have one. Because I'm not as quick as some of these computers. They'll send a price flying on some liquidity that you can have expected coming. But anyways, with that being said, Sing, Zen, Jared, Big Deal, Brett, Sergio, everybody else, thanks for taking the time to hang out. We'll see what these markets give us. I think it's still pretty exciting. I know the oil markets crashed, but I still think we have a little bit more juice left in there, a little bit more volatility. I think the unexpected rally without a decent pullback in the indices is a little worrisome for me. I don't know how I'm feeling about that, so we'll see what we get. We'll see what happens over the next couple of weeks with Trump. But nonetheless, it'll be exciting and it'll be fun. Thanks for taking the time to hang out. Be sure to stay tuned for more segments coming on next. We'll see you guys next time. Peace.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. That was
This was
awesome.
not a paid, you're not getting paid
Right.
for this advertisement.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
We're back. Still Wednesday, still April 8th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, it's another day for the books.
Yeah, it's another day. War is over for now. So, I mean, the market's obviously responding here. And, 2 weeks. But I think it's going to be longer than 2 weeks. We'll have to see.
2 weeks to stop the spread of war, officially or unofficially. There's a lot of confusion out there right now, but the market hanging on hope, as has been the case. That resiliency over this past week, those inverse head and shoulders patterns in the S&P 500 and the NASDAQ find their catalyst with yesterday's announcement that the U.S. and Iran have reached a ceasefire here, Thomas. Volatility is down across the board, staying down over the course of the session. VIX near 20, handle oil down below 100. This is all good news. The question is it staying? Thomas, that's the question we're going to be asking ourselves here today. Does this rally in stocks, does this pullback in oil have staying power? Should we be chasing the moves here in the short term? There are lots of different points to consider, but there's one place right now where the market is not showing any signs of relief. If there's relief in oil, if there's relief in equities and bonds, there's one place where we're not finding it. Josh, we can go to the slides here. That place are going to be your Fed expectations. Curiously enough, Thomas, as we see on the other side of this ceasefire announcement, rate cut odds have not moved up in a material way over the next year. Prior to the announcement, the market was suggesting that hikes were not likely, but if cuts were to happen again, they'd happen some point in the second quarter of next year. For better or for worse, that's basically where we still find ourselves right now, where the April 2027 contract is the first one that gives you north of a 50% chance of a 25 basis point rate cut. Still June being favored, and I say favored because it clears that 55% threshold that we like to look at around these parts. So, Thomas, this is one of the realities here. The market can't drag forward those rate cut expectations when it sees the supply chain issue still making its way through the pipeline. I'm curious, how are you interpreting the market movement today, specifically through the lens of these rate cut odds? Is the market wrong to suggest that the Fed can't cut rates, or is this the real story here and not just this one-day move in stocks and oil?
I mean, I think the rate cuts are going to be a little slower to react. You have to see, it just happened last night. You have to see, I think there's a couple ships that have moved through the Strait of Hormuz. The more and more we go on, I think they'll feel more comfortable, start getting the flow of goods going again. But it's still a supply shock. There's still going to be lingering effects, lingering second, third order effects. And, this isn't necessarily this whole thing. It hasn't been good for the inflation outlook. It hasn't been good for the growth outlook. So I think there's still going to be impact from that. Can it be mitigated to a great degree if it, this 2-week ceasefire truly turns out to, result in an end of the war? I think, then you're going to see rate cut odds move back. You get lower gas prices, things start stabilizing a little bit more. But the market's going to react a lot faster than the supply chains can react, because those are physical goods that have to get moving. It's a lot easier for the market to react because there's, traders can be speculative here. You could say that prices are down from the peaks. You're getting some decent valuations. And you can buy stocks on the premise that this ceasefire is going to at least be extended for a while, and there's going to be relief on supply chains. I think the market's just faster to react to speculation versus the rate cut odds, which have to kind of wait for data to show, how the impacts are going to work through the system.
It's one of the interesting dynamics, Thomas, that we see ourselves in now where, February 26th, we'll call it 27th, the Friday prior to the attacks happening, you had this back and forth narrative about private credit, AI, and, at least we're going to get cut sometime soon. The Fed is trying to, get a little bit more clarity over the inflation path, but we're probably going to get cuts by June. So at least we have that hat to hang on if you're a bull. Yeah, so the war is over, but now we're talking about the first rate cut arriving in April of next year. So just as a kind of a thought exercise here, Thomas, if all of a sudden at the end of February, the market says, June, September, we're actually going to push out that first rate cut to April of next year, would that be a positive catalyst or a negative catalyst for stocks, given what we knew at the time?
I mean, I think
negative catalyst.
As long as the rate cuts are coming, if they're a few months behind where they were at the start of this war or before it, I think that still provides a bullish base to work off of if you're speculating on higher equity prices and the rally continuing.
Yeah, and so the difference is, right, if all of a sudden the market gets back to a point where it says, hey, cuts by December, so we didn't get them by September. We had to wait an extra 3 months, not the end of the world, right? If they're pushed out a year, that's April, June, that's kind of a floor, we'll call it. We'll call that a floor right now. Market's comfortable for getting the cuts. The earlier those get pulled in, perhaps, the less of an inflation concern the market thinks it has to deal with. But right now, there is no significant movement in those Fed cut odds. So, Thomas, that brings us to our stock market here, where yesterday we were saying that stocks were looking for a reason to stop worrying. Today, they're stopping worrying. S&P 500 right now, 68.18 here. That's a 160-point advance from the close that we had yesterday. That news came out shortly after hours, and it may be setting up what could be an extended move up above 6,900 here. The inverse head and shoulders pattern that was being carved out, this Morningstar candlestick cluster, a neckline that may be 66.50, 66.75. It gives you a target somewhere near 69.50 up to 7,000. So could there still be room left to run in this relief rally? I think we need to acknowledge the fact that, yes, on a simple technical basis, that's very much the case. It's very much the case in the NASDAQ. It's very much the case in the Russell here, Thomas. I just have a question. Do you think this is a rally that's worth chasing for maybe another 100 points, 150 points in ES, maybe another 100 points here in the Russell, if you have questions lingering about the supply chain issues and the Fed?
Yeah, I'm trying to grab some long exposure here through. So you figure, if equity prices continue to rise, you'll get volatility come down. I still think vol will stay expanded from pre-war levels until we get a very clear resolution on this. But I do think it'll continue to come down. Equity prices will continue to climb through this. It's still very early days. Less than 24 hours since this has been announced. You're seeing some headlines on, there's still some attacks. I think that's a function of the IRGC's command structure is fragmented. Everyone hasn't heard about the ceasefire yet overnight. So I think you'll see those calm down. Now, you haven't seen those impact the equity rally yet, because I think a lot of traders understand that it takes a little bit of time for the ceasefire to be communicated to all the factions or portions of the IRGC. So I think volatility will come down a little bit, still stay expanded from pre-war levels. I don't think we get back to, exactly back to where we were at the start of this until there's a clear resolution. But I think playing for some upside here is probably the prudent thing to do. That's how I'm going to play it, at least. And I'm not going to dive in, head over heels into long exposure, but I do want to be able to get exposed to some of this upside that, I think it's going to continue. I think there's, we've been in, it's been more than a few weeks. We've had selling volatility, people de-risking. So I think it's not just going to be a one-day thing where you see us go up. The caveat is that things can unravel very fast. It's still a very dynamic situation. Negotiations have to happen. There's a lot of points to negotiate. Missile program, removing nuclear material, the Strait of Hormuz, tolling, a lot of moving parts, right? So I think it's best to, if you're going to get exposure long, short, do it in a way that you're staying small. You're still balancing your portfolio delta in a way that's not, you're not going to get crushed either way you move. But yeah, I think I'm going to get long here and get a little bit of this long exposure, but not overdo it.
So before I push back any at all here, you're constructing a short-term bull case that maybe this market still hangs on. And quite frankly, even though it appears Israel is disregarding one of the tenets of the ceasefire, which is no more attacking Lebanon, and they've certainly stepped up their attacks against Lebanon, which has provoked an Israeli response. The market's kind of taking it in stride right now and attempting to look through it here. So if you're attempting to look through this right now, what's your bull case for the market over the next few months? I have a few points that I could probably make here to say, like, okay, if we really want to pretend this is in the past and there's going to be no further bullwhip effects from the supply chain, what are 1, 2, 3 things that I could point to that advisors would be telling their clients, this is why it's safe to dip your toes back into the stock market right now. Let's go make some purchases. What's your bull case scenario here from now? Let's call it through. First one, we'll call it through the next 2 weeks, through the ceasefire.
Yeah, so I think the bull case is going back to kind of what we were before and getting a renewed focus on AI spending, improvements towards, general artificial intelligence. There's this whole story with Claude not releasing its model because it could potentially exploit hundreds of zero-day vulnerabilities. So I think, the pace of AI expansion, you're still seeing it accelerate. I think there's still going to be that push into investment from there. And with the war ending, oil prices receding, you're avoiding those higher chances of a recession. You get the rate cut bets coming back into the market, and you just get a general sense of enthusiasm that helps lift this market up. So you're avoiding things, you're avoiding negatives kind of more than you're looking at positives. And I think we're at some not long run decent valuations, but what we were compared to, last year's valuations you're getting where, long-term investors are also going to be looking to load up in the stock market again. And just a generally conducive environment for equities going up, rate cut expectations normalizing, and averting supply chain issues that, the longer this would have went on, you'd really be getting into some troublesome situations, especially with Asia and energy. And, I think that's the reason why we saw Asia rally so hard overnight is they were impacted more by this, at least from the fuel side of things.
You bring up valuations here. We never quite got there, but yesterday we had a Mag 7 forward P ratio of 23.7. We bottomed just below 22 in April of last year. To that point, we had a S&P 500 large cap forward P ratio of 19.6. Last year, we had bottomed near 18 in April at the lows. So thinking about where valuations have been, you're not going to find many periods of time where you saw a sub 24 PE in the Mag 7 names since the start of COVID. There's a stretch there in mid 2022 and late 22. And then again in the first portion of 2025, thanks to the tariff episode. So if you want to look at valuations, this is not a market where there were points last year, Thomas, where the Mag 7 had a 32 PE, close to it. People are screaming concentration risk. I don't think you can make that argument today if you're a bear. You can't say that the valuations are out of whack, given everything that we know.
Yeah.
So I'm very much with you. If I'm thinking about like what my bull case is, if I'm trying to convince myself to layer back in, that is one of the foundational pieces. Valuations have come in, not just because of a price decline in the broader market, but because earnings have also increased while we've seen equity markets come back in a little bit here. And so under the surface, if you were to look at something like FactSet's weekly check-in, and they do this earnings insight report, which is free, so just Google FactSet earnings insight, the Q1 estimated earnings growth rate for the S&P right now is still 13.2%. It would be the sixth straight quarter of double-digit earnings growth for the S&P 500. That's not something that happens in bear markets, ever.
No, it's not. And, if you look at things that are leading today, SMH, it's almost back up to its peak. It recovered very quickly. And, the veracity of this move shows you that, the previous leaders like semiconductors,
Semis, telecom, they're all
traders are looking, back where the winners were. So you're going back into the winners. I think that's a good bullish sign, and at least in terms of market sentiment, that traders are returning to the pre-war thesis that semiconductors are going to overperform, and there's not going to be an inflation scare in the market.
It's so interesting you say we get back to the pre-war consensus. I mean, the Mag 7 are trading at 60 right now. We were at a low of $60.13 on February 17th. And we just ran up today into our 50-day moving average, and that's where the rally stopped and started to pull back. So there are some of these things, Thomas, when you say, okay, like let's go back to where we were pre-war, which I think is one of the things, like what else could you ask for, right? Reset the table. We take this risk off the table. We wipe it away. Market just had a period where it corrected in price and then in time, and now we've reset both. The NASDAQ is effectively where it traded at the close on that 27th, 25,222.50. We're at 25,090 right now. So if we've reset here and we want to pretend that the Iran war is over, even though the headlines would definitely make me think that it's not by any stretch of the imagination, have the catalyst that kept us grinding sideways through the last portion of 2025 and the first month and a half so of 2026. What has changed on that front? And that to me is the compelling reason for why I can't get bulled up here and chase this thing to the upside right now. Forget the Iran war itself. There was a reason why the NASDAQ wasn't breaking through 26,500. There was a reason why the S&P wasn't breaking through 7,100 just yet. And I'm hard-pressed to think that the reasons why we were having trouble cracking through are resolved. Now, nevertheless, Thomas, positioning here matters a great deal. So I could be right about this, but because the market isn't overly long right now and there's a lot of cash on the sidelines, this thing could spring higher and run for a little bit in, another relief rally like we saw last April. Do you want to be the person who tells their clients you didn't buy the low in the first week of April for the second year in a row? So there's a little bit of psychology in play right now.
Yeah, I mean, the thing is, if you're trying to get bullish and you've been waiting, and you've seen prices go down and go down, is there a better time to do it than now? There's still the overhang of uncertainty if negotiations don't go through. But, if you're taking a bet on that, this is potentially the bottom is in. The bottom was already in, it looked like, before this happened. We were already getting some upside. The market was getting a little better at reading Trump's signals. One thing is Israel, you can make an argument, we won't get into the politics of it, but you can make an argument that they would perhaps be the party that would be incentivized to kind of throw this off the rails. If you look at their rhetoric and history of wanting to
look at the reporting today. Yair Lapid, the opposition party leader, called the ceasefire a political crisis, disaster for Israel.
So there's less appetite in Israel than there is in the U.S. to end the war. Let's just put it that way.
It's fair, objective.
So I'm being tactical. One thing I did is I sold a short put spread in Microsoft. I like how it was already beaten down before this, during this, and it looks to be making really good valuation compared to the past year. So that's one place I wanted to get long. Another place I'm trying to get long is just the ES. And then I might take a couple more tactical shots in names that have been. Probably like Microsoft being down a little bit more going into this and through this, and hoping that the rising tide lifts all boats kind of sentiment or thesis going into that.
Microsoft feels like it's in a tough spot still. I mean, that's another one of these themes that we're going to have to keep an eye on. Hey, software, you had a really nice day today out of the gate, short covering, all that jazz. Now down on the session by 0.1%.
Yeah. I think the AI fears that displacing software companies is still in the mix of things and keeping it down.
That's just one of those interesting dynamics that you see here, where you get this broad rally in markets and people were bottom picking in names like IGV and their various constituents over the past few weeks, certainly before the war started, right? And today you get this gap open higher, and you could almost say to yourself, okay, this is exit liquidity for me if I got long at recent lows. And so now you have everyone dumping your software. There's little things, Thomas, that just, you got to keep an eye on them. Banks are obviously having a nice day. The private credit names, that's a mixed bag. But if you were to look at something like Ares, for example, it's up by 0.8% now. But that's a candle that tells a different story, Thomas. That candlestick in some of these private equity names right now, you're getting your, okay, we're not exactly holding at the daily highs. We gapped open higher. We've started to come in a little bit here. I'm cautious right now. I actually have a much less optimistic view than you do. Volatility has come in likewise. Has it come in enough to take directional beta on? I don't think so yet. It's why when I'm looking at the stock market here at 68.22, and you're thinking about what we did yesterday, 60 or 6,000, 60, 50, 7,200, 7,250, right? That's off by $75 today. I mean, I don't see 7,200 getting touched in this rally right now, just given the structure of the market. And I keep seeing these things about positioning here, which granted, there's a lot of people who, instead of selling their single stock names, were buying put protection on the way down. And so just they're taking off their hedges and taking off those small shorts. But we didn't see the kind of shorting in the futures market, which is, I suppose, something we should cover given the topic of the show. But there wasn't the kind of shorting in the futures market we have seen in other episodes of Market Panic. And I bring us to that May 2023 episode when you had over 400,000 net short contracts held by small and large speculators cumulatively in ES. And when we take a look at where we were at the start of this war and throughout the war, it was like 40K, 50K net, 55th percentile kind of stuff. Not exactly screaming huge short positions right now. So yeah, there's nice relief today. I'm looking for the fuel for a bigger move to the upside, and I'm struggling to find it here. So little things, Thomas, private equity, software, AI, let's see how they shake out this week to see where the real concern rests on the other side of a potential ceasefire.
Yeah, I mean, for something like that, if I actually don't hate a short call spread in ES at 7,050 points wide. You go 51 days out, your max profit's 940, your max loss 1,500 with the 63% POP. That gives you some room to breathe to the upside. But it's a neutral to bullish view, but it's not an ultra bull or something. And you go up a little bit, that's fine. You stay the same, you chop around sideways, good. You go down, better. I mean, if you get close to 7,000, you can take it off. I mean, I don't hate that, actually.
No, and that's one of the things about this market here. The recent highs in the ESM6 contract are close to 7,100. And so if you wanted to go just outside of that, right, 7,050, 7,100, if you wanted to go around it or through it, you can find some decent risk to reward on here where you're looking at a 60-odd% probability of profit, and in that 2-to-1, 3-to-1 neighborhood of risk to reward. And the bet would be that the market is going to shake off everything that was preventing it from pushing through these highs in the short term. The difference is that we don't have Fed cut. The difference is that we don't have a Fed cut coming in June that we can hang our hat on. Because no matter what happens with the war, Thomas, I think as we're going to see in 4 minutes time when the FOMC meeting minutes come out for the month of March, there's just no cuts coming anytime soon.
Yeah, and I mean, a short call spread, you figure you go up a little bit, volatility's coming down, so you're kind of hedged in a way there. Stay sideways. I mean, yeah, that's a good trade. I might actually put this on right now and see where it goes.
4-to-1 at 7,100, 7,150. If you go into 7,100, 7,050, it's closer to a 2.5-to-1. That would be above the highs that we had at 51 days to expiration. Maybe there's something a little bit more appealing closer in 44. If you were to do 71, 7,000, a little bit worse than a 2-to-1 still, but that, I mean, like, this is what you got to explore here. I'm not happy with the market moving up by 2% necessarily when there's my positions in ES are mostly directionally neutral right now. Small little out of the money put spread that was put on last week for downside in case it occurred. Did not. It's going to go off worthless. But these other positions I feel great with still. We're getting vol crush. That's what I want here. Ultimately, if my concerns are right and this market fades off, so be it. But right now we're playing for theta decay. And the market gave us an opportunity a few days ago to sell 400, 500, 600 points wide from at the money and get those risking 2, 3 to make 1, 60+% probability of profits. So we take them, no regrets. Obviously, I wish I was sitting long 0 DTE calls today. But in terms of what's on right now, what's the point of taking anything off that's like, not really hurting me? Just need to be patient here. Hand sitting, looking through the headlines is how I'm approaching this, trying not to get too worked up one way or the other.
Yeah, I don't think you can dive in one way or the other. Even if you're very bullish on this, I think it's prudent to still stay balanced a little bit.
Yeah, I'm just looking through these points here that we have put together about the war. Just from Iran's negotiating position, they say that they want to hold on to all of their point 3, Iran's uranium enrichment rights should be accepted. 4, lifting all primary sanctions. 5, lifting all secondary sanctions. That's all sanctions that the U.S. has levied against Iran since the George W. Bush era, which would then require congressional approval. That would require congressional approval. That was really interesting last night. Lindsey Graham was out saying that he thinks Congress should be involved when negotiating to review the ceasefire deal.
To end a war, but not start a war.
Yeah, he's been quiet as a church mouse the past few weeks. Hell, he was in Disneyland recently, which is an interesting place for a single 70-year-old man to be. But, he had nothing to say when the war started. He was cheerleading it voraciously. And now that it's coming to an end, he's like, whoa, checks and balances, buddy. I'm comfortable.
Warhawk and him talking.
Yeah. I'm comfortable with those 7,100, 7,200 strikes in this neighborhood for the short iron condors. Today's a little, I prefer to see more chop sideways, but we're still within the inside of our short strikes. And that's what matters when you do these kind of things. So patience. From my perspective here, those inverse head and shoulders could run a little bit more. And if they do, I think it's going to be providing another sell the rip opportunity, Thomas. If we get to a 6,900 print, that is when I'll go in with the short call spread in ES above the yearly highs.
Yeah.
Just a better risk to reward. We do have a 2:00 catalyst here, Thomas, as we had mentioned, and it's a good time to switch over to our bond market here, which is optimistic-ish, we'll call it, here on the other side of the ceasefire announcement. Bonds notes both rallying here, although not following through. We got that move to the 50-day moving average, Thomas, and we immediately sold off in ZN. ZB kind of looks similar. It's a rally, yes, but I feel like there's an asterisk attached to some of these other asset classes outside of stocks right now. Do you feel the same way?
Yeah, I mean, bonds and gold, kind of the same behavior today. They pop higher, and then now they're coming out. And it makes sense. When you see rates go down, oil's down, it makes sense. But the diversion from equities, the optimism there is they're not matching up 100%. So, I mean, bond traders a little more hesitant maybe to follow through on these headlines that the war is ending. I mean, you figure, the bond and oil market's been highly correlated. You're getting oil following through on most of its move, but you figure you're still around $95 on oil. It needs to come down a lot more for yields to go a lot lower. So I think there's still some inflation pressure here on bonds that's cascading into gold. So the correlations they're holding up. The post-war correlations. But this doesn't look like a great tail here. I mean, you would expect the juice to be holding right now, and it's just not. So is that a signal for us?
Oh, we did have a 10-year auction here. The bid to cover ratio was, let's see, bid to cover ratio was a touch softer, 2.43 versus 2.45 prior. Indirect bidders took 65.3 versus 74.5 last time. So that is a big drop in foreign demand. The auction tailed about 0.2 basis points compared to when issued. So not a bad, I mean, it's not good. It's like a C minus auction, but it's a change of pace. Foreign investors had no problem buying US debt over the past month. So maybe there is something there to, justify, or at least we're getting a little signal that maybe something's different about the war now, given there is a small change in behavior there among those foreigners. They had been putting up multi-month highs in terms of demand for US debt. 30-year auction tomorrow, Thomas. Do you have any interest in that from a bond trading perspective, where, by the way, the vol is disappearing here? That's a 31.8 IVR in ZN. If we were to go up to ZB right now, you're looking at 19.4. 19.4, that's kind of like where we were back in January at points. That's nothing.
Yeah, I mean, the 30-year bond, if it's really terrible, really good, maybe it'll affect the market. I think the bigger driver is going to be what's happening in the Strait of Hormuz, things like that, where energy is moving. You figure there's a lot more spending that the government wants to do, especially with defense, the war cost money. There's going to be appropriations for that. So the Treasury is going to need more supply. More supply, lower prices, and then you have really a deluge of corporate debt that has come onto the market. So are government bonds as attractive with all that corporate debt coming into the market, and maybe expecting more debt to come in with AI spending accelerating or keeping pace? I'm just not loving the long bond position here. Even with if crude prices continue to come down, I don't know if I love it.
We have those FOMC meeting minutes that have come out here. In terms of some of the notable comments, vast majority saw upside risk to inflation and downside risk to employment as elevated. Too early to know how Middle East developments would affect economy. Majority seeing risks have increased. Many warns persistent oil price rise could call for rate hikes. More than a few members push their cut timing back in the future. Protracted conflict could soften the labor market, warranting additional rate cuts. Many judge rate cuts appropriate if inflation declines in line with expectations. And there's that whole transitory point of view, Thomas. You look through an energy shock and you think about the decline in real output on the other side. So, if we see inflation not rising as much as people fear over the next few weeks and months, and the labor market is weaker, I wouldn't be shocked if all of a sudden we start getting that pull forward in those Fed cut odds, and that becomes, maybe less of a maintenance cut and more of a recession cut. But making a recession cut call right now is just so difficult, given the fact that GDP growth is still looking like it's positive, and we have a non-farm payrolls report in our back pocket that's positive in the last 2 months on average is positive. So we're going to be working through a lot here. This is not going to be a, cut and dry issue. We're going to have to be willing to stay open-minded, as I've been preaching, as I've been trying to do myself. Some days better than others, but trying to stay open-minded to both sides of this market as new information comes in.
Yeah, and that's the thing. The bond market has a lot to consider. Maybe that's why there's more indecision in the price right here.
So we have a vol crush in bonds as well, but we talk about a market that offering slightly a different signal. So optimistic-ish, yes, through your 1 month moving average in ZB, through your 1 month moving average in ZN, but those are really long upper wicks. Traders today are not ready to commit to keeping this thing moving forward. We said it yesterday, Thomas, metals are mirroring oil here, and that is very much the case again. We can go over to gold first, which is now only up by 1.75%. You said that bonds and gold were trading very similarly today, which I think is an astute observation, whereby, like what you saw in bonds here, gold has a very long upper wick. It traded as high as 48.88. It's back down to 47.77. It's failing at key levels. The uptrend from the October-November swing lows that initially caught us here at the end of January, beginning of February. We're still having trouble climbing back into that uptrend. We're having trouble getting through our 1 month, getting through our 50-day. Where's the commitment right now? Stocks and gold can obviously take different trajectories. Same thing for bonds and stocks. These all don't need to move in lockstep the way they have over the past month. But it's fascinating that as capital is moving back into the market on the heels of the ceasefire, the asset classes that folks had been selling down to raise liquidity are not recovering as much over the course of the day. Now, it could just be a safe haven type of thing, a risk type of thing, Thomas. Why would I want to buy gold and the safety of U.S. treasuries if this crisis is over? I'm going to want to buy stocks. I want to get that upside convexity. I got to make up some lost ground for what happened in recent weeks after underperformance. I could understand that. But I think we need to keep an eye on what's happening with the metals and the bonds rates and our currency markets here, because those are ultimately the ones that will help confirm whether or not this equity market jubilation is going to stick around.
Yeah, I would like to see gold closing above 4,800, and it's just, can't stay above there. Yeah, I'm not a buyer here on gold. Just don't like this move today. Like you said, if there's speculation coming in the market, stocks that are going to benefit, why buy gold or why rush into gold? Maybe like an iron condor would be something I'd think about here. But yeah, I just don't love it.
That is a decent point, considering where we were at the start of this war and where we are right now, even where we were in January at some points. Thomas, the low that we have from 3 weeks ago comes in at 41.28. Recent highs prior to the war, and really just quite frankly, the flash after, was around 54.75. So you have a decent range to work with there. In fact, if we were to take a quick little Fibonacci retracement tool just to get that halfway mark of the war high low range, you'll see that we're sitting pretty dang close to that 50% mark right now. So what could we do here? We could do something like a short iron condor, where at 48 days to expiration, I still have some upside that's probably not going to be hit. But looking at the 1 standard deviation move, indeed, GCM6, that's below our support that we had carved out 3 weeks ago. And if we go up to the highs, can we push through the highs that we had here on the chart? We can. We can go up through 54.80, 54.75. That's just on the other side of the 1 standard deviation move. But there you have it. It's closer to a 5-to-1. It's near 70% probability of profit. If you wanted to look at this from a pure vol selling perspective, what's something you could do? You could say short iron condor here. We're not going to break either the war high or war low in this next 48 in, 21 out cycle. And while it's not the highest convexity trade on the board, certainly not at a 5-to-1, it is one of those yeoman type trades where, you just sit and be patient and you look through the headlines and you ignore the noise and you just let time drip off the calendar.
Yeah, I don't love 5-to-1s.
I hear you.
They win most of the time, but you get one blowing out and kind of ruins your week, maybe your month. So yeah, I'm going to wait off. I'm going to wait on this.
Can you name me a 5-to-1 that's ruined your month? I can think of plenty of those.
Yeah.
Especially for the past month. It's not some of these haven't worked out, right? But on a day like today, this is why we just talk about looking through the crisis. Some of the short iron condor things that I put on this past week haven't worked out in the ES, but the ones that have been sitting around for several weeks, those are doing great. Those are up today.
Yeah.
So the time horizon here matters.
Yeah, and I mean, I have a lot of room to make up from losses from going into this war. So my natural inclination is to immediately increase my exposure a lot, try to make it up. I'm trying to hold back right now. Let this shake out for at least a couple days, see where it's going. You know, there's still going to be moves to be made. It's easy to want to pile in right away when you get a relief rally like this, but just going to stay small.
That, I think, is perhaps the most important takeaway anyone can have from today's show. It's not the S&P 500 technical levels, as important as I think those are. It's the psychological aspect of all this, which is to say that if you're in my shoes, Thomas, I didn't have short-dated long deltas in stocks going into yet today, and that kind of hurts.
Yeah.
And I've, a lot of over the past year when there have been big moves in markets, I've been on the right side of them. So I'm like, oh, this is what this feels like, not like watching everyone else run outside and play while I'm stuck inside doing chores. That's kind of my opinion here. But also, there's a reason why that's happening. Because I made the decision that I'm not going to try to chase. Because I know what my shortfalls are, as how I deal with situations like this. And I want to just kind of look through it myself. So when you take a step back, have those, let's not chase, let's be patient. Are those things still working out? They are. They're not the highest convexity things in the world, but they're still working. And so if you have a process that's still working, don't be bothered or unmoored by one day's of price action. That certainly is just a point on the dot on the map, and is not a trend. And even if tomorrow there's follow through, it doesn't mean that we're out of the woods just yet. So I am being very cautious here as it comes to gold. I think the short iron condor trade is fascinating. When we look at this chart, this does not look like something that is ready to commit to getting back up. Former support toward resistance myriad ways, including our trend levels of our 1 month and our 50-day, which we are trying to hurdle here today. And 47.68, down another $10 since we started talking about gold. It was up 3% earlier. Silver was up 7% earlier. Now it's only up 4.6%. And if you just heard it about gold, you're going to hear it here for silver too. Former support turn resistance right now. Swing lows that we had in early March. Our 1 month, our 50-day envelope has since flipped over, and it's now resistance. It was resistance all last week. It's resistance here today so far. That low that we caught on March 3rd is serving as resistance here today. I mean, Thomas, is just we've jumped to the high jump bar. We haven't cleared it yet. So as a trend person, as a momentum follower, all this is really nice and well, and I'm never going to catch the exact low. But we still have not cleared the trend levels to get back on board with the full bull here in precious metals, despite today's price action. And the second half of the day is breeding no confidence, at least so far for me.
Yeah, if you're trend trading, you want momentum, and you don't get momentum from a one-day move, no matter how big it is. So I think if you are doing that, which mostly I am a trend trader too, it makes sense to wait. You know, it's painful to see, you know, a move that you're not in or not committed to fully, but perhaps more painful, you know, getting bowled up and then, you know, the market moving against you.
Thomas, let's move to the big one. Oil. Oil's worst day in decades, which isn't really true because we have COVID. So, okay, oil's worst day outside of COVID in decades, I think is the fair way to put this. And for a single day performance, oil being down over 16% here in CLK6, 17% almost now, 93.80 or so. It does bring us below your 1 month moving average there. For the first time, I'm seeing a test going back to mid-February. So very well, this whole trend may be over. One of the characteristics of the trend throughout March and into April was that the 1 month held. And yesterday we ticked above 117. now we find ourselves having this implosion. For one thing, Thomas, yesterday when we were looking at the chart, we were looking at oil trading up at 117 or so and said, what could we do that potentially would take advantage of this swell? And so up at 36 days, we said, okay, if the one standard deviation move is for oil to go up to like 150 in the CLM6 contract, you're telling me that I can go out to 36 days and sell call spreads up against a 50% move in oil prices here? You know, we could take some of that off the table right now for a little bit of profit. The side of this, though, wasn't just the call spread, it's a short iron condor. So while we have CLK6 down 17%, CLM6 is down 12%. Again, feeling pretty good about these short iron condor positions right now. Volatility is getting crushed and the market's not exactly screaming anywhere. And the low that we had on the 26th to the high that we had here on the 9th of March, the midpoint of that range is about $84. So if we still think that vol and oil could come in, and yes, there may be fits and starts of the ceasefire's off, but it's back on, it's back off, and there's a Truth Social for this. If we've crested, right, that's ultimately the assessment we have to make. Have we crested? And if that's the assessment, then why wouldn't we use this opportunity to play for more directional neutrality? There's enough supply offline. It's going to take long enough for supply to come online that there should be, at least at the front end of the curve, some cushion under the swing lows that we had at the start of the war. So like, is oil going back to 70 or 75 in the CLK6 or M6 contracts? I think that is a real long shot right now, Thomas, even with this announcement. So
yeah, and I mean, there's a cushion too, because the world, we released a lot of oil inventories. So, you know, over the next few months, year, nations that released all these barrels are going to have to start thinking about refilling it. Do you wait until oil gets back down in the 60s to refill it? That would probably be a strategic mistake. So you have a cushion there. I have an iron condor on too, a short iron condor that is finally paying today. It's between 68.5 and 110. So, you know, 88 right here with volatility coming out. I really like this position. Probably keep it on for a little bit more because we can make big moves either way. I still got a lot of room, still got some premium to come out of it. So I'm happy there with this position. I think Iron Condors going into this war was one of the best trades to do because volatility just got so high. You could get so incredibly wide with your Iron Condors that, you know, you could, you know, we went through days where we were getting really big moves, and my Iron Condor usually moves that would, you know, threaten Iron Condors. They were fine. You know, they tolerated it fine. So I'm going to keep this on for a little bit more. I like it. You know, we had crude numbers come out too about an hour ago from the EIA. They said commercial crude inventories, excluding the SPR, increased by 3.1 million barrels from last week. So that puts us about 2% above the 5-year average. Gasoline and distillate inventories, they decreased, but that makes sense. I mean, crack spreads were really high. Refiners were really incentivized to get product out, you know, collecting that bigger refining margin. So, you know, inventories are building. They've been building, you know, generally. So, I mean, if you get further de-escalation of geopolitical risk, you know, you're heading lower. But like you said, there's a cushion to be had here in the market. So, you know, getting back in the low 60s, high 50s, I don't think that's anytime soon. You know, and I think today is the big move. I think you're going to maybe see another move down in crude tomorrow, assuming that the ceasefire holds. I think you're going to get a gentle easement downward from here. But getting back to the 60s, I don't think that's happening anytime soon.
There are legitimate supply constraints that are in place right now. Global demand may be slowing marginally, but the supply shock, that's still very much legitimate. Do we think that 84, the lows that we had on March 23rd, are worthy of playing around with? Over the next few days, we can go to something like an 84, an 82 short put spread. And, you know, here's a market that's giving you some options pricing, telling you what's what. short put spread at the 8 DTE is still giving you north of a 99% chance probability of profit here. Getting back down to those levels, I mean, given the volatility, we could still pick up 3-1. Maybe this is a quirk of pricing, Thomas. But you could still get a 6-1, 7-1 down here. I don't want to say that's free money, but I've been looking at these all day today at like 6, 7, 8. What are the odds that we go back down to the low 80s, given everything we know, given the fact that the oil's not moving right now? In the ceasefire window before a deal is potentially formalized. They're meeting this weekend in Pakistan, apparently. J.D. Vance may be heading over there, although I saw a conflicting headline today that he was coming back to the United States from Hungary first, which that sounds like a nightmare. Going from Hungary to D.C., back over to Pakistan. Just go to Pakistan from Hungary. Save yourself. This is the number one thing I'm looking at today. If the whole modus operandi has been sell rips and stocks and buy dips in oil, this is an oil dip and this is a stock rip. So give me a little bit more in stocks to the upside so I can get that 71, 72 short call spread. I'm there. I'm game for it. Maybe a little bit of softness here, tinkering with the strikes, but the lows from March 23rd in the next few days as we wait for implementation of any ceasefire, I got to say I'm pretty comfortable playing around with that given the nature of this particular expiry cycle.
Yeah, I mean, waiting for a move after this is the way to do it. Well, like you said, it's not like it fully reopens one day, tons of ships start going through. It's going to be, a gradual buildup of traffic after this. It's not like things get back to normal right away. So oil is still going to hold some type of geopolitical premium, until this is, there's a signed deal and, traffic is back to normal levels.
If we wanted to do this the old-fashioned tasty way, take advantage of the wide vol, 36, 69 days, 36 is technically closer to 45. So just for a simple point, a point on either side of the one standard deviation move, be 124, 125, 65, 66. It's a little bit worse than a 4-1 right now. But then you're making, again, the trade here is, will we see new highs in oil? Will we see relative new lows in oil over the 36 and 21 out? So it's not even a full, Thomas, we're talking about tax day, basically. Yeah. You'd hold this trade until week after tax day, maybe. I think that's enough to work with, right? So I'm going to talk with Nick on last call later about this, Mike Butler today on Overtime. I'm going to pick their brains. But generally speaking, don't be surprised if I put off some short put spreads in oil at these levels. I think it's maybe time, Thomas, after the worst day in decades, asterisk. Hey, the dollar was a tell the last few days. I hold out the FX market as something almost sacrosanct, but it is the world's deepest, most liquid market. So it takes a lot to get it moving. The past few sessions, we had seen dollar weakness coming into play prior to a ceasefire announcement. And the dollar itself, being the global reserve currency, was a highly sought-after liquidity source when the conflict began. But last week, this week, Monday, Tuesday, softness, even as stocks are trying to find their footing, gold bonds were okay. And ultimately, it was a tell because that dollar weakness, canary in the coal mine, it's even weaker today. But like so many of these other things, Thomas, we gap open lower, trade lower, we get back to where we gapped open. 50-day moving average here in the dollar index. If the dollar is bouncing back, this alongside that move in gold and bonds, it's one of the reasons why I look at the rally in stocks and say, that was really nice relief. But you're still leaving me wanting more. We're not seeing the full asset class agreement, and there's so many things lacking in this 10 or 15-point ceasefire deal. Let's see if Vance heads over to Pakistan. That's probably next big catalyst here. Thomas, tomorrow, the calendar, items of interest, U.S. initial jobless claims, of course. We're going to have the personal income spending, GDP numbers due out. GDP, that's fun. GDP, we haven't talked about you. GDP growth rate for final reading expected. 0.7%. Great. Also, PCE. Fantastic. What's next beyond us? Dr. Jim Schultz from Theory to Practice. I'll be back later with Mike and Nick. We're going to be doing last call and overtime together. See you there in an hour. But until then, Tasty Live, it's sticking around.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Okay, well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well,
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth. 'Cause I'm going down in a blaze of glory. Lord, I never.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Understand I got a plan for us. I bet you didn't know that I was dangerous.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Wednesday edition of what it is that we are trying to do. Welcome to the first day of the post-apocalyptic edition of what it is that we are trying to do. Apparently, we made it. I'm not exactly sure. Is this Lost Season 2 or is this Lost Season 5? Like, have we started the flashbacks and the flash forwards and the flash sideways, or are we still kind of figuring out our way around the island? I'm not really sure where we are, but we are together. And so thank you guys for being here and being a part of what it is, whatever it is we're trying to do. I just appreciate you guys so much. If you are watching over on the Tasty Live Network, now it actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with our brethren who are also watching the show. Man, everybody's celebrating today. Like, no civilizations got blown up last night. Like, everybody walked it back. We all knew it was coming. We've seen the movie 19 times before, but still, we can all celebrate today. Bulls, bears, in the middle, it doesn't matter. Just hop in the chat and put something in there simply for the love of the algo. And of course, if you have a question for me, you can drop that in there too, and I'll try to get to as many as I can right around the second half of the show. So, Josh, bring us into the market. Man, that's a little something, man. Look at this. Even the S&P's up 160 on the day. Pretty close to the highs. They're not exactly on the highs, but they're looking pretty good for themselves. You got the risk-free instrument, also known as the NASDAQ futures. Extremely high-risk product. It may not feel like it is today, but it most certainly is. NASDAQ up 700. You got the boomers up 1,270. And the Russell 2000 Futures Index up 71. Man, everybody is excited. Everybody is celebrating. Bonds are up. Notes are up. Oil down, just a quiet little $18 drop on oil. Shout out to the inverted strangle that we have on in MCL. That's obviously doing quite well today. Got UB40s up. The shifties, they're up, but it doesn't feel like they're up. You got the Hump Brothers up a couple bucks. Man, both gold and silver, they were really rocking and rolling last night and even in the morning earlier before the market opened, and they've since sold off pretty significantly. If we take a look at, let's take a look at the metals here. If we take a look at gold, I mean, it's up 64. It's not a bad day. Obviously, it's a pretty decent day for all the shifties out there. They can certainly celebrate as well. If for no other reason than the simple fact that we're here. Like, if for no other reason than the simple fact that we all survived and here we are. But if we look at gold, we look at a chart of gold, you know, you can see that this is, what is this, a 2-minute chart? Yeah. Let's look at like a, let's do like a 1-hour chart, man. Let's mix it up a little bit. Yeah, so last night, you know, the news broke around, I think it was around 6:30, maybe, give or take. It was a little bit after the futures market opened when, you know, the sides came together. They got brokered by, I think, Pakistan, kind of brokered the deal or what have you. But both the U.S. and Iran agreed to whatever they agreed to. I don't know. It's all made up, right? But they came to some type of agreement. It could have been 2 unilateral agreements. Whatever it was, it doesn't matter. The market loved it. Market absolutely loved it, and everything was ripping. I mean, gold, you know, shot up. You know, you can see 100 points there on that 1-hour candle. And then overnight, you know, we hit a high of 48.88. And so all the way up to 48.88. And we have since, you know, kind of engaged in a little bit of a downturn for all my technicians out there. A little bit of kind of a, you know, lower high, lower low type of deal. And so you've got gold all the way down to 47.47, which is a pretty steep drop coming off of the high from last night. Silver, very similar thing. You know, silver last night, very similar pattern. The high for silver, though, wasn't until this morning, I don't think. But still, $77.82. And we are now $3 off of that high, down to, or $3.50, I should say. $74.47. So a pretty big drop on silver as well. But the metals absolutely ripped last night. The market ripped last night. I mean, everything basically followed a similar pattern, other than the fact that, you know, the markets have been stronger this morning. They've held on to the lion's share of their gains. The metals have given them back, but you can see even S&P's rallied hard on the news and has basically held on to that rally. The NASDAQ, very similar, rallied hard on the news, has essentially held on to that. You know, the boomers doing the same thing. Boomers looking strong going into the weekend, which this is typically where the boomers, they start to show a little weakness. They start to let that fatigue kind of creep in. But, man, they're looking good today with the boomers pretty close to the highs, actually. I mean, the highs on the boomers were 48,261 earlier this morning, and they're 48,000 right now. So you're a couple hundred points off the highs for the old YM index there. So that is not too bad at all. And then, yeah, Russell 2000, I think it's very, very similar. I mean, everything's following the same. Man, it's almost like these are all equity indexes. It's almost like these things are highly positively correlated when you take a look at each individual chart. But yeah, the Russell was all the way up to, this morning it was 2662. It's now 2628. So, you know, it's 30, 35 points off the highs, but still, you know, given how ominous things looked yesterday afternoon, I'll take it. I think a lot of people will take it, you know, given the fact that it could have been a lot worse and gone in the other direction, of course. And so, all right, so there is some market commentary. Was there ever a doubt? It looked about 50-50 there right up until the end. But here we are, and you're here for the show, so thank you guys so much. All right, so let's go into a couple of things that are happening. Oh, first and foremost, oh, man. So if you follow me on the follow page, which you should be doing, obviously, because, again, if you fade all of my trades, all of my binary event trades, sight unseen, you're going to take 6 to 9 months off of your pathway forward to retirement, like minimum. Like 6 to 9 months. I mean, you might actually take 12 to 18. I think the median is about 4.5 months. And so I think you're in a good spot if you go ahead and just kind of take the opposite of each and every one of my trades. But this morning, I was taking a look at the market had a huge run up, and I'm like, all right, we had our GTC order in for SPX, but then this morning I went in, and I'm like, all right, I don't think we're obviously not going to take $10 out of this guy, which is the trade that we had in yesterday. But I'm like, all right, can we get something? Can we salvage something on this trade? Because obviously the market felt super strong, and it felt like it was not going to come back down, and it's come back down a little bit, but I don't think our butterfly would have been in a good spot at all. So I went in this morning, and I overrode, well, actually, I guess it was late morning, kind of early afternoon. I overrode the process. I took a look at SPX, and again, if you follow me on the follow page, you saw this guy come through because I pushed it out right after I did it. I looked at the pricing. I did not expect this thing to be selling for $2. I did not expect to be able to get out of this trade, essentially salvaging $2. And I'm like, all right, I don't think this thing is coming back. Now, a lot of the time, I'll let it go. A lot of the time I will let it ride, but I just had a little bit of a hunch, and I might be wrong. I mean, they may squash them here on the close, and then that butterfly would have, opened up really nicely for us. But I was like, hey, we're having a really nice day across the board. Essentially, everything else that we're doing is working. Of course, Dell is still giving us problems, but hey, MCL is even working. Snapchat's up like 3 cents. I'm like, hey, let's go ahead. Let's save our $2 on this SPX trade. So we're going to end up losing, about $1.70 on this guy, which is not that big of a deal. Let's just go ahead. We're down $1.70 on the SPX butterfly. It could have been worse. We essentially only lost half the stack of cash. We were able to salvage the other half, and that I felt pretty good about that. And so I did push that out on the follow page. And of course, if that ever happens, you don't have to worry. We will talk about it for no fewer than 9.5 minutes on the show, which is happening right now. And so that was our SPX butterfly trade from yesterday, and we had the move right. Like, we had the directional move right. And if you watched the show yesterday, you saw I even situated the strikes such that I was ready for it to overshoot to the upside. Like, we even pushed our strikes higher beyond the expected move because I was like, all right, if this thing overshoots to the upside, I want to be ready. Like, I want to set my booby trap up there such that it's ready for something to outperform and overperform the expected move on the upside. The problem was it wasn't ready for 180 points on the S&Ps. Like, it wasn't ready for 168 points on the S&Ps. Like, that was way too much for kind of what we had set for the SPX. I mean, you can even see for yourself right now. You can see SPX, our short strike was 67.05. And if we go to SPX right now, you can see that. Yeah, it's 67.70. So, and then this is after a 25-point drop. This is after selling off 25 handles off of the highs or whatever. So, definitely not, it was a great trade directionally. The problem is the magnitude we were not able to nail. And when you do a butterfly, you have to get both correct. You can't get away with just one. You have to get them both correct, and we were not able to do that. So I saved my $2, and so there it is. There's your SPX trade from yesterday and into today. But let's talk about the rest of what's going on. Man, look at this MCL situation. And so this is obviously really nice. A very, very big drop in MCL. I mean, again, we're not getting the drop that you're getting in the front month. Like, if I go to MCLK 6, you can see that the front month is dropping. I mean, it's dropping like a stone. I mean, I think the low last night was like 91 and some change. And so this guy is dropping like a rock, obviously. The M cycle, when it was rising and there was no end in sight, it was just making higher highs and it was doing all these things. We got saved a little bit by being in the M cycle so that we weren't experiencing as much pain as you would be in the front month. But now the opposite of that is going to be true. So now we're in a situation where we finally gotten the move that we wanted. The market's finally going lower and kind of rolling over a little bit. Well, it's not going to benefit us as much because we are in that back month and we are kind of in that M cycle. And so, I mean, I'll take it. I mean, I'm not complaining, but I'm just explaining kind of the pricing differentials between kind of the front month and the back month, the K cycle and the M cycle. So right now, it's pretty crazy to think. It's really crazy to think, actually, that we are actually right on the doorstep of this trade being inside of our strikes. It feels like it's been a while since we've been able to say that. Like, it feels like it's been a minute since I've been able to say, all right, this MCL trade, like, it's right where we want it to be. Like, I'm actually in a good spot in this MCL trade. It's been, I mean, I feel like it's been weeks. I'm not sure we've been able to say that a single time over the life of this entire trade. And so because of that, I feel very, very lucky. I feel very fortunate to kind of be where I am right now. And so right now we're down about $16 on the trade. And I said this, given all the problems that this thing has caused and given all the pain that we've had to endure, my objective is not to scratch the trade. Not at all. If I get out of this thing for a $10 loser, I'm probably going to take it. Like, if I get out of this thing where I'm in a situation where I can get this guy off the board for a $10, $11, even $12 loser, I'm probably going to take that off ramp and just not think twice about it. And so that is kind of the game plan moving forward. That's what I'm looking for. We finally got it in a decent spot. So now let's sit tight. Let's see if oil can calm down a little bit. And if there is some continued, I don't even know what the right word is, respect maybe? I'm not sure. But if both sides kind of honor their sides of the agreement. Again, I think there's 2 or 3 different agreements. But if everybody's looking at their given agreement and they're honoring that agreement, that's got to be some type of progress, right? That's got to be some type of movement forward. And so that's what we're kind of going for. So MCL, there you go. We we do nothing right now. We finally got it in a decent spot. So there is MCL. MES, oh my gosh, it's too funny, guys. So MES, so we talked about this, and I lamented this, right? When we put this trade on, I said, when we did the 6,800 call, I was like, okay, are we about to be tested on this 6,800 call? This is going to be so funny. Like, this is going to be downright hilarious if we get tested on this 6,800 call. And look at us right now. MES 6806. It's laughable, man. It's so laughable. The DNS is the default setting for a reason. The do nothing strategy is the go-to for a reason. Now, again, there's a lot of good reasons to adjust. There's a lot of good reasons to control directional bias. There's a lot of good reasons for all the mechanics and the adjustments and what have you. But man, don't forget the DNS is there too. Like, don't forget about lonely little DNS, because it's a solid move, man. It's a solid move. Now, right now, I'm not going to do anything. Like, I'm going to sit tight on this. I'm not going to close it. I'm not going to roll it. I just want to sit there. Let's see if things don't calm down a little bit, kind of from where the where the market is right now. So MES, I'm a little bit miffed that we did get tested on the call side. It's pretty funny, because look at the put side. The put side is crushing it. Like, the put side, right? This was the original trade, or at least some offshoot of the original trade. I mean, this was essentially what we were pushing our chips in the middle on, and that would be doing incredibly well. But unfortunately, because of the call side acting as a stick in the mud, we are at about a scratch on the trade, which again is still not that bad. I mean, this obviously could be a lot worse, but for our purposes right now, we're going to sit tight. We're going to do nothing, and we'll kind of see what's what. But MNQ. So MNQ is a little bit of a different story, because it's rallying so much today, right? Up 656. A little bit of weakness in the last couple of hours, but it'll be very interesting to see what happens going into the close today. This was a put that we've had on for a while. We held it in the money for a good bit as well, and we had to endure some pain, and we really kind of leaned into the DNS on this strategy. And so for MNQ, I'm kind of thinking, I mean, let's not think twice about this. Let's just take it off. Like, let's just go ahead and be done with it. I mean, we were able to pick up almost 400 points on the trade, which, again, remember, the multiplier for MNQ is $2 per point. So it's $2 per point. We're able to pick up about 400 points on the trade. And so that ends up being a really, really strong trade. And so this is a very simple decision. Take it off. Don't think twice about it. And then you just kind of move on. So we go to MNQ. We close this guy down. It looks like the markets are a little wide. We'll go 467. And we'll see if we can get filled. No takers at 467. Okay, let's see if we can get something. 470. Maybe we'll get somebody. Nah, no takers at 470. All right. MNQ, man, the markets are just not good at all. Let's try 472. I think we'll probably get filled here. No takers at 472. Okay, all right. Well, let's see. 472. Let's try 470, 450 maybe? Give me something. No takers at 470, 450. Am I going in the right direction? Sometimes I have to rethink. I'm like, is this a debit or is this a credit? No, we're going in the right direction. I definitely want to get this trade off. I'm not going to let this guy slip away from me. But the mid prices, are you guys seeing this? If you're listening to the audio-only version of the show today, thank you for joining the show. I appreciate you. Maybe more so than the AV people, because you guys have a tougher go of it. But I'm looking at the MNQ markets right now. I'm looking at the bid-ask spread differential. And the mid price is jumping around like crazy. Like, now it's 488, but it was just like 465 and 470. And I've been kind of following it forward through the forest here, but it just keeps kind of evading me. And so right now the bid is 474 and the offer is 501. And the mid price is 488.50. And so I'm going to go in at the mid price, and we'll just see what happens. I'll go in. In fact, I'll even do 489. We'll go in a little bit above the mid price, and let's see if we can get filled. All right, we got filled. So how about that? There you go. So we finally got it. We had to give up a little something, I think. I don't even know. I mean, it could be fair, of course. It probably is fair. But the MNQ markets, they're just super wide. I mean, look at the chain. Like, you can look at any option across the chain. I mean, look at that stuff, man. That's some crazy stuff. These are some Vinny Batista markets if I've ever seen them. I mean, these are some Tony Batista, like late 80s, early 90s markets. I mean, this is where it's like, yeah, I'm a quarter bid, 4.5 offer. Like, I mean, you think these jeans are going to buy themselves? They are not. And so when you look at these markets, it's like, that's some wide stuff, man. But anyway, MAQ, so we're out. Oh, look at Delta Airlines, man. Look at that. I don't know how we did it, guys. I don't know how we did it. But somehow, some way, we actually got an earnings trade correct. And so I don't know. Could this be a little something to look forward to for earnings season? For earnings season, I should say, because we've got earnings coming up later this month. We've got all the heavy hitters are going to report. We've got all the guys are going to, be releasing their earnings. I mean, all your Amazons and your Apples and your Metas and your Microsofts and your Netflixes. I mean, they're all coming, man. And so this could be just a little warm-up set, just to kind of get the knees loose and a little bit of a pump in the old bone, I was going to say boints, in the old boins and in the old bones and the joints, or even the boints. There you go, man. So let's see here. Delta Airlines. We could take this guy off. I mean, I'm going to take it off today because, again, remember, if you do a butterfly early in the week, you've got to temper your expectations. You've got to pare down your objectives there because it's not going to open up until the end of the week. Like, you're not going to get anywhere near maximum profitability until like Thursday, even Friday. So Thursday going into Friday is my favorite time to do a butterfly, but I'm not opposed to doing them earlier in the week now that I've just kind of reframed the objective. Like, what is the goal? What is the objective of what we're trying to accomplish? And essentially, generally speaking, what we're trying to accomplish is make money, of course. But understanding there's obviously different ways to do that. And if you do one later in the week, you have essentially one shot or maybe two shots to make a good bit of money. If you do one earlier in the week, you have more than one or more than two shots to make a little bit of money. And so you just have to reframe your objectives when it comes to that. And so for me right here, looking at Delta Airlines, it's like I'm able to get $1.40, $1.50 off this trade. That ends up being a really solid trade in my opinion. So I don't think we have to think twice about this guy. We can take this guy off as well. So if I go to Delta Airlines, we'll do like 274. That should be fine. All right, no takers at 274. Okay, all right, so it was not fine. Let's see. What if I do 271? Try and do a little something. No takers. Man, it's some tough trading today. You guys having a hard time getting filled out there? Let me know, because I'm in at the mid price. I mean, I'm doing all the things I'm supposed to do, but there's just nobody wanting to be on the other side. Wow, 269, no takers. 267? 267, no takers. All right, so now I'm just going to leave it because now it's like, okay, at a certain point, I'm not just going to price discover my way out of profits. Like, that doesn't really make a lot of sense. But anyway, oh, wow, we're like halfway done with the show. Wow, that's crazy. It's so fast. You guys have no idea. But Dell is obviously up a ton, so we're down a ton. That makes sense. GLD's working out okay. You got Meta's back. Right, Microsoft is back. I mean, both of those guys are back. That feels pretty good. Starbucks is up. That looks pretty good. Silver or SLV for our strangle. This is great. You've got SLV only up 89 cents today. I mean, it was up a couple bucks earlier. But this is great for the strangle. So we're in a good spot with that. And then Snapchat up 2 cents, which is basically like a 10% rally. So we will take it in Snapchat. But let me get to you guys. Man, where are you guys at? Let's see here. Josh has Amazon Primed us a surprise and delight and brought it right to our doorstep. So let's do it. Dr. Jim, this is from Antonio. What's going on there, Antonio? Dr. Jim, great show, man. I appreciate you, my friend. Is it possible to only sell premium and still be profitable in the long run? Man, this is such a good question. Okay. So yes, I absolutely think so. In fact, I actually think using short premium as the foundation to your portfolio is a very, very smart and strategic way of thinking about the markets. Because again, I mean, just take the short put. I've been very clear about this. It's my favorite strategy. It's my go-to strategy. Think about a short put relative to long stock, right? Like if you want to play the market to the upside, which a lot of people want to do that for the longer term, the medium term, whatever, then you can buy stock. I think that's a fine strategy. And I think most investors are going to end up with some type of passive long delta in their portfolio. And I think that's totally fine. But if instead of doing that, you wanted to use strategies like a short put instead, you're going to be able to tap into a lot of the benefits of long stock, but now you have room to be wrong. Now you have higher probabilities. Now you have time working for you. Now you have, volatility contraction also working for you. Although to be fair, usually volatility contraction does go along with the market going higher. So long stock usually benefits from volatility contracting. Like a day like today, what's volatility doing today? You've got the VIX, it's getting smashed, right? Yeah, it's down $4. It was down like $5 something earlier. And so it's not quite getting smashed like it was, but still, that's a pretty big drop in volatility. And clearly the market is up huge today. And so when it comes to, thinking about wanting to play the market to the upside, thinking about wanting to play the market from a long bias, using short puts in place of something like long stock, I think that can be a really strategic way of approaching an overall portfolio. I do think for most traders, though, you don't have to go all in on short premium if you don't want to. I respect the fact, some traders are going to want to do that. And I think they can really, the potential is unmatched, right? The potential is unmatched as an active trader selling premium and all the things that we talk about. But I also understand and recognize that for a lot of traders, they're going to want to have a blend of the two. They're going to want to have some long delta. That's, you own the indexes, you own your favorite stocks, whatever, your Starbuckses, your Microsofts, your Snapchats, of course, right? You just play these guys to the upside over the long term. But then in addition to that, you layer on short premium. I think that's the best combination for most people. And you have to decide, Antonio and everybody else, what type of breakdown, what type of percentage do you want to put in each? Like, do you want to be 50-50? Do you want to be 80-20? And you can go 80 in either direction. You can go 80 the passive stuff and 20 the active stuff, or you can go 80 the active stuff and 20 the passive stuff. I think most people are probably going to end up 75-25 or 80-20 in favor of passive, because most people's assets are tied up in things like 401ks or 403bs or what have you, where you don't even have the option, pun intended, to sell options. Like, you can't even do it. It's not even on the menu. And so because of that, you are kind of, ushered into this long delta bias in the over the long term, more or less against your will. Now, of course, you could opt out and do things like that, but if you've got employer matches and the tax savings and things like that, that probably doesn't make a lot of sense either. And so I think, Antonio, yes, you can do it if you want to do it, but for most people, I think a really good option is going to be a combination of the two. So hopefully that helps you a little bit. I think I probably got around to some type of useful answer to your question. But thank you for being here, my friend. I appreciate you. I don't recall you having been here before, and so I could be misremembering. I have been off my blueberries for a couple of days, and so thank you so much for being a part of the show. But let's see. Oh, I see another one. I see another surprise and delight near the end that just kind of caught my gander here. This is from Ivelo. I think I might be saying that right. I probably am not. Ivelo says, Dr. Jim, what is your opinion on a jade lizard versus a naked put? Yes. Okay. So a naked put and a jade lizard. So a jade lizard, a naked put is, I go into, like, let me see here. Let me pick something. I go into like IWM, right? I go to sell, I go to May with 37 days to go. Maybe I sell like a 35 delta. Maybe I sell a 35 delta put. This trade's too big for my account. So this is only for illustrated purposes only, of course. But still, we can use this to kind of go through the different gimmies and gotchas of a short put versus a jade lizard. So if I look at a short put, it's pretty clean. It's pretty simple. The management's going to be fairly straightforward. The setup is fairly straightforward. It's a bullish play. I've got time working for me. I've got volatility contraction working for me. I've got some room to be wrong. If we even go to the, let's go to the curve view. Are we doing the curve view today? Yeah, we're doing it. We are 100% doing it. So if I clear away my drawings there and you look at that and I look at that, you can see, it looks it's pretty straightforward, right? When you look at I don't use this enough. I'm just a creature of habit, man. I'm on the table view. There you go. So you can see that, you've got all the profitability up here. Here's your strike price, right, at 252. I've got all my profit, and it just went away. I've got all my profitability up here. And then obviously I have unlimited risk to the downside, just like you will with long stock. And so you have more buffer, like your break-even point is much better than long stock would be. But a short put is a great strategy. But if I go into the option chain, if I go back into the option chain, I should say, and let's say I wanted to do a jade lizard. And so this would be, the 252. So maybe I have a short put on. Usually you would go a little further out of the money, I think. With a jade lizard, I haven't done one. It's been a minute. I'm going to add a short call spread onto the short put. So if I'm collecting, let me bring my trade bar back up. If I'm collecting 377 from my short put at 245 strike, maybe I'm doing like let's see, if I do like a 270, let's see if I can figure this out. 270, perfect. 270, 275. So now let's go back to the curve view. Hopefully it will show me what it's perfect. There you go. So a Jade Lizard, right? You can see it looks very similar to a short put in that you've got the unlimited risk to the downside because of the short put. You've got this region where you essentially make the most amount of money, very similar to a short put. The difference is once it goes beyond a certain point, and this is going to be when your short call spread is fully in the money, you're not going to make as much as you would have made if you just sold the put. And so you can see your profitability drops off. You're still profitable because you want to make sure that the total credits you collect, in this case it was 522, is greater than the width of the call spread. So that way, if the call spread is in the money, you keep that differential, which in this case would only be about 22 cents. And so it's not that significant, but it's a little something. When I think of a Jade Lizard, I don't do them that often. I should probably do them more often. I don't think of them as a short put substitute. I actually think about them as more of a short strangle substitute. And so a lot of people that do Jade Lizards, they do them because they don't want to do a short strangle where they just keep getting hammered on the upside. They don't want to do a short strangle where they just keep getting peppered on that short call. And so that is kind of the more commonly used substitute for a Jade Lizard is the short strangle. The short strangle and the Jade Lizard is a better complement, a better substitutionary decision than a short put versus a Jade Lizard. And so that is how a short put and a Jade Lizard kind of, stack up against one another. But I typically think of Jade Lizards as being a strangle substitute as opposed to a short put substitute. So hopefully that helps there, Ivelo. And hopefully I'm saying that right. I'm not sure that I am. But I appreciate you very much. Let's go back to the beginning. Man, go all the way back to the beginning. Man, look at you guys in the chat, just getting work done. Man, you're doing it. I appreciate you guys so much. So Orgdenu is in the house. What's going on there, Orgdenu? Hello, Dr. Jim. I saw your latest calculated risk. Man, I appreciate you. If I have an undefined risk position and after 21 days it only gives a scratch or doesn't give me 50%, should I close it or should I roll it? Yes, great question. That's up to you, my friend. And so it's either one of those two, right? Leaving it on at that point doesn't make a lot of sense going inside of 21 days to go. No, 21 to 14, it's not that big of a difference. And so if you wanted to carry it a little side inside of 21, you didn't hear this from me, but I think you're probably okay. But still, whether it's 21, 14, it doesn't really make a difference. When you get to that point, let's call it 21, closing it or rolling it makes the most sense, right? It doesn't really make sense to carry that any further getting close to expiration. I mean, the thing that we're really trying to avoid is the final week of expiration, the final few days of expiration. Like that is totally avoidable. All that extra directional risk that you're taking is completely voluntary. Like that's what we want to kind of get away from. And so I would, it's up to you. Do you roll or do you close it? That's 100% your call. And so, it's 6 of one, half dozen of the other, as Tony Batista would say. And so, yeah, that's 100% your call. It's not a better or a wrong situation. It's not a right versus wrong situation. It's just a 100% your call situation. And so I think they're fine. I think they're both, a case can be made for both. And so that's how I would kind of look at that. And so Sergio's in the house. What's going on there, Sergio? I appreciate you, my friend. Sam L. Doc, I guess we tacoed the end of the world. What are we even doing here, man? I have no idea, but we certainly did. We most certainly did. And so here we are together as a team, and it feels good, man. It feels good to be here. And it looked a little dicey yesterday. There's no question about that. And so Danish Dynamite, let's go. Taco Tuesday has arrived. It absolutely did. And again, it's in the Constitution, guys. Like it has to be followed. Like this is literally a bylaw. Right? So yesterday was Tuesday. Everything was setting up. It was like, man, the writing was on the wall. Like the taco seasoning, it was right there for all to take. And so N1C is in the house. What's going on there, N1C? The doctor is in the house. I appreciate you, my friend. Jared Kramer says, Brad Martin, class of 08. Don't forget your ibuprofen for the day, amigo. That's pretty funny. Let's see, Samuel. Doc, do we wait for iPod Touch next event horizon, or do we just keep winning like nothing happened? Yeah, I think we're on our own now, man. Like, is iPod Touch here? I mean, he pops in most shows actually. Like, we don't think he's here, and then boom, he's here. And so he might be listening, and so he might very well be here. iPod Touch, if you are here, make your presence known. We need to know. Like, we need to know, is this a fadeable market today? I mean, it's fading itself right now. It's down about 45 handles off of the highs. I mean, the metals are really struggling. I mean, gold's at 47.28. Silver's at, 73.61. So silver's getting absolutely crushed. And so all of a sudden, the metals have really, really reversed course. And so it's going to be very interesting to see, kind of where this thing goes from here. But yeah, iPod Touch, let us know, man. Let us know where we're at. And so let's see, Jared Kramer, did the good doc call the pump yesterday? I guess we only fade the doc on ERs. Yeah, I mean, that's the safe play, right? To fade the doc on an earnings release, I mean, that's going to be the tried and true. That's kind of the default setting. That's the tuna fish and applesauce of what we all really want. And so for regular calls and whatnot, I mean, I didn't really say it either way yesterday, so I'm not going to take a victory lap that I didn't earn. Not that I've never done so before. Not that I've ever. I don't know. We take plenty of victory laps on the show, as you guys know quite well. But I'm glad. I'm glad that we got a little bit of relief in the market, and so it was definitely the market was starving for something like this. And so let's see. Jared Kramer's in the house. What's going on there, Jared Kramer? Sam L. Algo running simulations. Best outcome. Listen to the doc, but verify emotionally. Yeah, you definitely gonna have to verify with something. There's no question about that. Adam Armfield. Hey Jim, what's the play at this point? I was hoping for a predictable 2-week cycle of genocidal threats, followed by chickening out, but it looks like they went ahead and broke the ceasefire already. Yeah, I mean that's what I heard. I mean, the market is still pretty strong for a ceasefire that apparently is already broken. And I mean, I would have expected there to be a bigger reversal in the markets. And so the markets are pretty good. I mean, the markets are pretty good at kind of sniffing out what's actually going on. And so given the fact that the markets are still pretty strong, obviously there has been a little bit of weakness in the last little bit here. I don't know. I think we might be okay for a little bit. And by a little bit, I mean the next 20 to 30 minutes. But let's see. Joe YQ is in the house. What's going on there, Joe YQ? Appreciate you, my friend. Too Late Jake is here. Good day, Dr. J. I'm here to update my Fade Dr. J fund. Yes, please do. I would like to know. I'm sure you're doing quite well. And as you should be. I mean, that is obviously the easiest trade on the board. Cynthia's in the house. What's going on there, Cynthia? I appreciate you, my friend. Thank you so much for being here. I hope you're doing very well in your neck of the woods, which I believe is in Pennsylvania, if I am remembering correctly. But thanks for being there, Cynthia. I appreciate you so much. Let's see. Brian Ratkin is in the house. What's up there, Brian Ratkin? Point B is in the house. Hey, Doc, we survived. We did. Barely, I might add. Ash Finn is in the house. Dr. Jim time. Let's go, man. I appreciate you, my friend. Thank you. I'm very much looking forward to Friday. That's going to be awesome. And Adam Armfield, they bombed the something. This is a family show. They bombed the something out of Lebanon. 100 strikes in 10 minutes. Yeah. I mean, I don't know. I don't know who's bombing who, but it's hard to keep track of these days. But again, I'm looking at the market to kind of, guide me as to what's real and what's not real. And right now, I mean, it appears that the ceasefire is still holding up to some degree. And so it may be quite fragile. We will see. Ranch in the house. What's going on? A. Wills is in the house. What's up there, A. Wills? Give my best to Mrs. A. Wills, please. We made it. The market surprised and delighted me today. Also try some tuna and applesauce. Excellent choice. A. Wills says, terrible choice. It's not good. Yeah, but don't you feel better for having done something difficult? Right? When you do something difficult, when you go out of your way to voluntarily engage in challenges that you should never be engaging with, that the regular average person is never even going to consider. Hey, Wills, you're just that much more mentally strong now. Like your intestinal fortitude, like it's unbroken now. Until you go in for the second time, then that's going to break it down pretty bad if you go for seconds on tuna fish and applesauce. But I'm very proud of you, my friend. Nice job. And I can't believe you did it. That's pretty awesome. Joel James in the house. Dr. Jim, apparently you're the gotcha and Liz is the gimme. That's what I'm saying. I faded your DAL trade. I'm going to need you to have her duplicate all your trades so I can make more money and follow you in. No. Just be on the opposite. Again, the only reason we won, thank you for reminding me, because I need to give credit where credit is due. It's all because of Liz. Like, it's 100% because of Liz. Like, it's not anything that we did. It's most certainly not anything that we did. And so because of what Liz did, because of Liz's magic touch, we were able to turn that DAL trade into a winner. And so I'm as surprised as everybody else, but it's only because we were not left to our own devices. And so base 8's in the house. I'm glad no civilizations got destroyed, but my portfolio did. Ooh. So you must have been short going into last night. That's a power move, man. That is 100% a power move. Or maybe you're referring to what happened before yesterday, kind of being long in the last couple of weeks and things like that. Sam L. Taco Tuesday is real. Doc said stay small. Marcus said full combo anyway. That's right. A little combo value meal. Yes, 100%. Steve Aguilera is in the house, or Steve Aguilar is in the house. Perhaps on this rare occasion, bulls and bears unite in a small moment of peace because you can't trade anything if the world ends. That's correct. That's 100% right. That's why you got to be bullish on World War III. You got to be bullish on the nukes in the sky. Like you 100% got to be, because if you're wrong, it's not going to matter. It's not going to make a lick of difference. And so that's why, I mean, going into last night, it's like I stay in the course or being a little bullish or whatever. I mean, it seemed to be the play to me, but again, I mean, I've been wrong before. I could be wrong again. I mean, the simple fact that I said yesterday, and one thing I did say yesterday on the show is I'm like, I really think that they're just going to walk it back, which is essentially what they did. Whether it was us, whether it was them, whether it was Unified, whatever, it doesn't matter. Like they walked it back, they kicked the can down the road. It's like, man, I've seen this movie a million times, right? The fact that I was on that side, that would have been significant pause for concern. Like if you weren't worried going into my show, but then you heard me say that, that's the time to get very worried. Like that's the time to be like, all right, Dr. Jim is just not very good at this at all. And so, man, I do not want to be on the same side as him on this. But the good thing is somehow we found our way to be on the right side of history on that one, at least temporarily. The Preston's in the house. Dr. Jim is the king. I don't know about that, man, but I appreciate you, Preston, in there for the algo, man. Look at you. Absolute beginner is here. I guess Kroger and Sprouts were just tracking oil. It's Kroger. What's Kroger's KR, right? Wow, look at Kroger down $2. I remember when we used to trade Kroger. Man, we traded Kroger a ton. I mean, I remember like we were in it, man. Like we were trading Kroger like left, right, and center. Man, we got to get back. Those were the good old days, right? Like I remember, I mean, we were slanging puts in Kroger. I think we were even scalping Kroger, like a couple shares here, a couple shares there. Man, those were the good times, man, for sure. And so we'll have to get back there. When does Kroger have earnings coming up? Is it coming up? Kroger earnings. No, but they're paying a dividend on May 15th, which that makes sense. I mean, it's just a good company. It's just a very well-run, product. And I think Kroger owns Harris Teeter. Harris Teeter, it's tough, man. Mariano's is probably the best grocery store I've ever been to. So shout out to Mariano's there in Chicago. Mariano's is, I'm going to say it's number one. Harris Teeter is very close behind though. So Harris Teeter is a very popular grocery chain for people that live in like North Carolina, even South Carolina, possibly like Georgia. I know it's in North Carolina because we lived in Charlotte and I went to Harris Teeter, multiple times a week, every week. And so Harris Teeter, it's a very close second in my opinion, but I would have to give the nod to Mariano's at the end of the day in terms of number one grocery stores. And so let's see where we at. There's Antonio. Wow, I made it all the way to the surprise and delight. That was pretty far into the show. Man, we are really getting something done today. Man, look at this. Ash Finn says, no Errol Coleman settings in here. There we go. No. And again, he's got the 15-second guys now. And so he's really getting after it, man. Like, I don't think we can keep up. And so let's see. Zenvag, ES did a 100-point algo swing in 1 second. Yes, I know. That was last night, right? Like, let's go to, I am curious. It was like 100 points in like a minute, right? Like if I go to a minute, let's do a 1 minute chart. Let's do a 1 day, 1 minute. Let's go all the way back. It should be pretty obvious when it happened. Well, I mean, yeah, wow, look at that. It actually went down. Oh, that's nasty business, man. Look at that. They just went down, right? To get all the stops. Just one final little, let's just clean them all out. And then they took them right back up. And so that range on that candle was, 100 points. You're right. Look at that algo. Look at the algo, man. I mean, the algo is going to win in the end. Like, we think we're going to win. Like, we're putting up a fight. We're doing these different things. But the algo is going to win in the end. And I rest my case. Like, that was obviously positive news. Like, that was obviously a good thing and really, forward-looking developments. And what did they do? They ran them down just to sweep everybody out. And then they ran them right back up. And so, man, there you go. Thank you there, Zenveg, for making me bring that up because that's some nasty business out there. So, A-Wills, Dr. Jim, I know you don't like iron condors. They're not my favorite. But what are your thoughts on $20 or more wide iron condors on products like SPX? Okay, so the thing about iron condors, I don't love them because there's a lot of friction on both sides of the market. Like, there is just a ton of friction when you're buying the wings and you're buying those longs. Like, you just have to be aware that, all right, you're going to be in this for potentially the long haul. Like, this is going to potentially be, something that you're going to have to slug out for maybe longer than you might realize. And so because of that, it's not generally my favorite strategy. But when you start to widen out the iron condor, you're getting out, to 10 to 15 to 20 to 30 to 50, whatever, it's going to start to behave and react a lot more like a strangle. And so then you're tapping into some undefined risk elements while still having the defined risk nature. So as you widen out the wings, I start to dislike it less and less. So I start to I'm welcoming it in a bit more and more. Now, again, you've got to be, very, very sure of your position. Oh, look at our Delta Airlines just got filled. Wow, look at that. Man, we waited them out. And we got them at the end. I think they got us in the end, but we got our order filled. And so, man, that was some good stuff. But yeah, A-Wolves, if you widen them out, like I have less and less of a problem with it because you're tapping into more kind of undefined risk elements. And so let's see. MP850 says, do two positive agreements equal a negative agreement? Yeah, I don't know, man. Maybe. I mean, that's kind of what the market is saying. It's rallying back a little bit now, I guess. But I mean, it's almost like markets moving, things change, man. Like it's almost like nobody really knows, kind of what's going on. But Ashfin's in here for that algorithm. I appreciate you. And then MP, or is it two negative agreements that equal a positive one? I'm not sure about that either. Maybe that's where we're at. That feels a little closer to where we're at than kind of the two positive equaling a negative. But man, I'm out of time. I can't believe it. I see you, Point B, Ryan LP, Don Duke in the house. Man, I see you guys in there. I appreciate you guys so much, but I gotta go. I see Zozo Baggins is here. Wow, that's crazy stuff, guys. I gotta roll. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Hello, everybody. Well, what a green day we've got, huh? I think there's a couple of lessons to be learned from our recent experience, and speaking for myself. One is the value of risk management. Yesterday, moments before the camera clicked on, Dr. Jim and I passed each other, digitally speaking. He was on a camera too, and he asked me before he blinked off, "Hey Tim, what do you think is going to happen with Trump? Is he going to do it or not?" And I thought about it for about half a second, said, "Nah, he's not. he's not gonna do it." It being like, ending civilization and all that. It was an off the cuff notion, but put it this way: taco. The A in taco stands for always. Trump always chickens out, and I just figured it would happen again, and that's exactly what's happened. I didn't bet that way. I didn't trade that way, except in as much as. And I mentioned this yesterday and the day before, light. I wanted to keep risk low because this sort of giant binary event that depends on the whims of one man. No, I'm not into flipping coins and rolling dice. And so I came into the day completely short. But how horrible is the damage? Last checked, it was 0.9%. I can live with that because the exposure wasn't that big. It also helped a little. Not only was I light, but just by dumb luck, I did short XLE and Dow, DOW, which helped lessen the damage. So a losing day to be sure, but doesn't matter. It also helps that this binary event's behind us now. Now, obviously, it doesn't mean like the coast is clear. Things are as uncertain as ever. Both sides are going to claim victory. Both sides are going to laugh at the other side. Both sides are they're going to go into this negotiation thing. Now, if you told me that for the next year, it's going to be a whole series of 2-week extensions, absolutely could believe that. And with each one, people will lose a little more interest each time. I will say, the next time the man has to issue a threat and get scary, the world's just going to roll its eyes, because you can only do that so many times and people take you seriously. You get up to the precipice, it's like, just kidding. They're not going to believe you next time. So the bulls are getting a much needed mega rally today. And the bad news from a charting perspective and from a bearish perspective is, in a lot of cases, the clarity, the cleanness, the edge is gone. The move is so strong that in some cases, a lot of cases, we have pushed deeply into patterns and just kind of wrecked the whole thing. It's not universal. There's still good trades out there, but the cleanness is just kaput because of this big fat mess we're all in. And we'll see some of that as we go there. You'll see some good things, you'll see some bad things. So let's just jump in and look at the charts. Here's the ES. We've got just as big a big green fat bar as we did, I guess, a little more than a week ago. We have undone most of all the damage from this war, from the tippity top here to all the way down to, I guess, a couple of Mondays ago. There's something magical about April 7th, I guess. April 7, 2025 was the bottom in terms of the Liberation Day and tariff wars. So that was the white flag then. And then yesterday, April 7, another white flag. Of course, it's held up as a flag of victory. We won everything. Okay, whatever. You tell yourself that. But the white flag went up and everyone's like, thank God, and celebrate. So April 7, market calendars henceforth, I suppose, something magical about that day. But you can see here that we've rallied mightily here. It's not an all clear for the bulls at all. For one thing, as of Feb 28, before any of this started, it's not like things were just peaches and cream then. But the chart's a mess. This is bullish consolidations, breakouts don't look anything like this. It's just a mess, just a big fat mess. What I will say with this kind of strength, where you have like 1,200 points on the Dow and all this, there are select places to basically sell into strength, absolutely. And that's what I was doing this morning, because as I said, I came into the day light as a feather, but was definitely looking for new opportunities. So I'm back. I'm not, keep my terminology clean here. I'm not aggressively positioned, but I'm back to about 90%, 90. So not as light, not nearly as light. The IWM, the small caps, are strong, about 2.5%. This is the kind of wreckage I'm talking about. This is the kind of lack of clarity I'm talking about. Until yesterday, we had a nice clean top here and a reversal and resistance, all that. Now we're just kind of hanging out. It's like an intrusion. The call is coming from inside the house. It's just, there's the bar hanging out there. So that, again, a mess. You can't do much with that. So I'm not. Fear has left the building. And in turn, the kind of bullish setups, like bullish volatility setups, are also dead as a doornail. There's UVIX plunging back into what had been a pretty little basing pattern. And with all these assets flying higher, of course, the one exception is crude oil, down about 15%. The inflationary effects, the economic damage will be felt for many, 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 many months to come. I still am amused at like $4 gas. Oh my God, $4 gas. It's almost $10 here in the Bay Area. Yeah, I can show you places where diesel is being sold for $8.69 a gallon. So yeah, enjoy your $4 gas. But you ain't gonna see cheap gas for a while. Yeah, it's gonna be like 4 months from now. It's like, although I realize that inflation data very conveniently leaves out luxury items like energy and food. And they only count things like, printing paper and stuff nobody cares about. But you're not going to see that much volatility. But these energy costs are going to be with us for a while. These increased energy costs, which flow into all kinds of other industries, as we've all heard endlessly, fertilizer, food, and so forth, plastics. But fortunes were made and lost over the past 24 hours. Somewhere out there, someone has had a life-changing amount of money, either for better or worse, based upon aggressive bets, particularly with crude oil. So really extraordinary chart, and quite a breakout too. From a charting perspective, it was unlikely, but very pretty. You can see it was just down, 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 and it all changed when it crossed above that line. And it was this explosive move. Intraday, we still peaked way back here. Even with all the mayhem and the end of civilization talk yesterday, it was still higher back on this day. But we got close. But yeah, when I saw how high XLE and XOP is, I gave it a shot and shorted a bunch of XLE. And that, as I said, that was a bit of a salve to the wound for the other losses today. And I also, speaking of risk management, I tend to be very consistent with having stop loss orders on rare occasions. Like this morning, I got rid of them all because I just want half an hour. It sounds very hard to deal with, but about half an hour of just get all the mayhem out of the way. Everybody will get squeezed out and all the craziness and so forth, then revisit. In some cases, well, that chart's dead. Get rid of him, or okay, I'm going to have a looser stop on this one, and so forth. So yeah, there are times when it's okay to just toss them and reevaluate, because this has been a big change today. Here's XLE, and nothing much to say about this except I got out real quick, lickety split this morning. I covered that, took my profits because I figured that it was going to be an outsized move, and it was. We opened weak and been climbing all day long. Miners, GDX, still have a nice little gap. See, I said not everything was wrecked. We've still got some items out there. Nice clean gap here. I almost shorted this one today, but I didn't bother. Shame on me, because we have been backing off with, gold has lost more than half of its earlier gains. Gold's backing off, silver's backing off, miners are backing off. In general, assets in general started off super strong. I guess partly because of the short squeeze, because being bearish got popular briefly there, and they found out how much it can hurt sometimes. But they have been easing away. The diamonds, DIA, their gap is still way up here, so that didn't come close to getting violated. I've simply thrown a new line here, anchored to today's high. Not a bad little top still in place. Some items are stronger than others. Small caps have been exceptionally strong today, but this is still intact. So this isn't wrecked like the IWM is. As far as the cubes go, tech has been strong. This is wrecked. You can see here, and my nastiest loss definitely was, rest in peace, my SOXL puts, about a 50% hit to those. Oh well, I had great dreams for them, but once the chart is that destroyed, you don't cross your fingers and hope something changes. The cubes, we've gone flying into this pattern here. So now we're into this muck that we've been in for months and months and months. As of yesterday, it was fine. But like I said during the show yesterday, one tweet can wreck the whole thing. Trillions of dollars can move based upon just like one sentence. And in turn, all the leverage stuff out there like SQQQ, which incredibly actually made a profit day trading yesterday. Thank goodness I got out. And then QID, which is the double inverse. This one fell hard too. It's down over 5% naturally because the cubes are so strong. One item, which is actually a very clean one, and I got into this one early today, is EFA. This is equities outside North America. Very clean gap right there. Shorted it, set the stop just above it, and here we sit. It's showing a profit. I'm just gonna see how that goes. But that was a nice clean one. We had a gap here and a gap here, and that's good enough. Definitely good enough because it's a nice broken wedge. This, unlike the cubes, unlike the IWM, is still pretty as a picture. So that's EFA. As I said, though, yeah, rest in peace, semiconductors. Semiconductors have been extraordinarily strong. Micron, NVIDIA, AMD. This is all flows into SMH. which itself is up over 5% and trading near lifetime highs, which you can't say much about. Too many items you can say that about. Even with today's big rally, things have been so trashed. But yeah, SMH near lifetime highs today. It looked fantastic as it was breaking down here, but boy, what a fake out that was. NVIDIA has not done any sort of bullish breakout, nor did it break down. It has been grinding away incredibly, all the way back to, back to July. I always have trouble finding out where the date line is on this. But yeah, we're coming up on you could have a baby in this amount of time. 9 months of grinding around. Nowhere fast. So NVIDIA's still stuck in the muck. But I will mention the FANGs, those aren't wrecked on the short side. FNGS, which is the amalgam of FANG stocks, this is beautiful. It looks terrific. You've got an unviolated pattern. You've got lower lows, lower highs. It looks terrific. So yeah, this one, I'm not going to get into it now. And but shorting this right at today's open, if you did, congratulations. I think it's a great trade. This looks really good. Even with all the strength, it looks really sharp. There are a few stocks, God bless them, which have managed to stay red. There's just a couple. Cloudflare's one, NET. It's not a beautiful pattern, but again, it's a matter of defiance. Any chart that can be red on a day like this has my salute. Surprisingly, here, PLTR. Maybe with the war disappearing, the notion of military / intelligence is less appealing as investments. I don't know, hardly matters, but we're down double digits on this, over $10. Big reversal on Palantir. And I'm short that one too. So yeah, most things are green, obviously, but there's here and there. I'm not mentioning it today, but another one which is down is CRM, Salesforce. I had puts on that already. I bought more because it was oh my God, it's actually down today. Something must be right. So increase that one. Financials, XLF. I'm not going to lie to you, this is not a gap, but it's not a bad definition, delineation for the overhead supply. So I shorted that one today. I'm only short 2 ETFs now, XLF, this one here, and EFA, as I just mentioned. As far as the spiders go, always important. It's not terrible. I have this rectangle is basically everything above today's high. It really isn't a bad top. It's not a bad chunk of distribution. It really needs to stop around here, to tell you the truth. If the optimism keeps flowing for whatever reason, earnings season is coming. Remember those earnings? If we push deeper and deeper into that pattern, it gets worse and worse for the bears. As it is now, there's still a little hope out there because this isn't a bad place to be. As far as Bitcoin goes, this was an item that I had been avoiding for lots of reasons. I finally pulled the trigger early today and bought a bunch of, I guess it's BITI. I hope I got that right, the inverse fund. So short Bitcoin by way of BITI. Bitcoin's up right now, but the position's up because I got it at a better price. But we're up a couple of $1,000 on this, and I've just got to say, Bitcoin's rally today isn't that amazing considering all that's going on. Yeah, it's up 3%. That's kind of feeble, it seems to me. So long as we don't violate this line here, it seems like an interesting bearish opportunity. If we get above that, forget about it. Have to wait till 81,000, I guess. Anyway, I hope you have made it through. Some of you out there have had a great day. Congratulations. And hey, at least we're not waiting for a deadline anymore, right? So I will see you tomorrow. Good night.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mr. Vecchio, my friend, we are back for the closing bell here. We've got E-mini S&P 500 futures up 152, a little over 2%. They're about 20 or 30 handles off the high of the session here. Got as high as 68.47. It's been a steady kind of bid here up at the 6,800 mark. You've got the NASDAQ just under 25K here, up 615, about 2.5%. You've got the Dow up 1,200 points here, about 2.5% as well, 48,000 on the Dow. And you've got the Russell up 68. It's the strongest of the group, but everything up between 2 and 2.5% or so. Oil has been weak, obviously, but has bid off the lows here. It's at 96.34, only down 16. It's probably the high-ish of this kind of session that we've seen since the open this morning. Volatility futures as well, kind of staying steady here, 22.25 here, down $1.75, about a 7% move in volatility futures. The VIX itself at 2150. You got bonds up 24. They were up to the 115 handle today. They basically reversed that entire move since this morning. You've got gold off the highs. Gold was up 150 at one point last night, only up 56. Silver as well was up at 77.80. It's down to 74.28, up $2.33, about 3.25%. And Bitcoin has stayed steadily bid at up $2,100, around 71 handle here on Bitcoin. What say you, sir? How are you?
I feel like I'm. This is for the younger viewers out there. I feel like I'm SpongeBob, or maybe Squidward in that SpongeBob meme where SpongeBob and Patrick are playing outside.
Okay.
And Squidward's just looking at them having fun. I wasn't long stocks. Yeah, I wasn't long stocks today, so I see a lot of people having fun out there. But I'm also looking at the ceasefire deal. Like, what? Why isn't gold agreeing? Why isn't oil staying at the lows? Why aren't bonds staying near their highs?
Mm-hmm.
And the commentary that we've heard this afternoon from Iran, maybe their ceasefire is into question already. So we have a nice little pop here.
Mm-hmm.
For me, directional neutrality still works. The market wants to give us opportunities to sell 7,100, 7,200 calls in ES at better levels now, sizing up a more appealing iron condor. You can have 400, 500 points on either side of at the money, and you're through the highs of the year and the lows of the year.
Yeah. Yeah.
Keep looking through it.
That's certainly been, I mean, we talked about it this morning. The move in volatility obviously is welcome and is nice to see, but it's not like, risk it's a full risk on right now. I agree with you on oil. Oil has looked interesting all day today. I mean, it's had a huge move. You expect it to have a huge move in the front, but the back months really haven't budged all that much. I mean, when you look at the curve in oil, 88 in the M contract and even further out, like none of these have really moved. I actually think some of the further out oil contracts are up a little bit, like October, November, December. They've actually kind of increased. So it's been a weird little session. I agree with you. I don't think everybody's buying the end of everything. Like, it doesn't seem like we're just out of the woods yet. Certainly a lot of uncertainty.
I don't think so. The market yesterday, when CLK6 was trading near 117, the one standard deviation move for CLM6 at like 30 odd days to expiration was going up to 150. Yeah. And even now with this market decline today, you're still looking at 120s, 130s on the high end for CLM6.
Mm-hmm.
We just went through the worst of the disruption, right? At least for the physical products not moving. There were no tankers moving through the strait.
Yeah.
So thinking about potential ceilings here in oil, and again, directional neutrality as volatility comes in. Are we going to go back down to 70? Probably not anytime soon. So you could sell some puts down there at a more appealing level now, up above the 120, 125 level. You could sell some calls. I mean, that's what today is for me. It's an opportunity to look for corrections, mean reversions after aggressive one-way action over the course of March and kick out those iron condors.
I put on an iron condor in oil last night after taking off my shorter duration oil position. I actually added a little bit of long delta in oil with your thinking, selling a put spread to buy an out of the money call spread, kind of a shot trade to the upside if something crazy happens. Does the move in oil to you, like to where we're at right now? I mean, if we had traded here in the 80 handle for the whole session, I would have said, okay, this thing is over. I think what you're seeing in oil and the curve in oil, and we talked about this a little bit of like, oil doesn't necessarily have to come back down to 70. The curve can kind of just flatten out at higher prices. Do you think that's what we're more in store for? Like, have they taken out the 150 oil? In your opinion? No. Really?
No, there could be more infrastructure damage, right? Like one of the mitigating factors for why oil prices haven't gone completely ballistic. Saudi Arabia has this east-west pipeline that carries oil to the Red Sea for loading. And while it's not, it can't offset everything. That was attacked today, right? Okay. And the pipeline is being assessed right now for damages and to see if it needs to be shut down for repairs, which all of a sudden, forget about the Houthis closing off the, Bab el-Mandab Strait. You now just don't have any oil that can be loaded in the strait regardless. So again, 5-minute macro here. If you were long deltas in stocks and short deltas in oil today, it's a win.
Yes.
Just take it day by day. Don't get pot committed. I'm not getting pot committed to anything directional at all. My only commitments on a longer term basis are selling vol and directional neutrality, which even today with the vol crush, like that's been fine.
I was on the other side of the coin. Obviously, I was long equities, short oil, and it's been a nice day. With that said, today's move obviously was well outside of what I expected. I did not expect this sort of face ripper of an upside move. That said, I've done 64 trades today, and most of that has been closing out of stuff that worked, taking units off. I had a lot of like USO upside call options that I sold, multiples 2, 3, 4 to 1 versus the downside. So you've gotten that kind of skew trade on the table. That was a good trade. All said and done, I'm basically flat delta here. We're back to 6,800. You're in no man's land. So I totally agree with your sentiment right now that, if you've been kind of hesitant to lean into some short premium, I think you got a spot here to start doing it.
We're back to the, December lows and the February swing low initially, and a place we were at in early March. I mean, this is kind of to a certain extent close to a midpoint of a trading range where 40 points north of the 50-day moving average. So again, back to neutral. NASDAQ has recovered the losses that it incurred throughout the month of March.
Yeah.
And so let's just Now let's say Iran's off the table. Let's pretend there's no supply chain issue that's coming, yada, yada, yada.
Mm-hmm.
Where were we in February, on February 26th, 27th, before this all went down? What were we worried about? Have any of those issues been resolved yet? So what's the catalyst now that's going to get us through the 2026 highs here? Have we resolved the private credit issues? Have you noticed that IGV today as software? You get this
It's
market
probably
rally at the
down
start
now.
of the session?
Yeah, it's down $1. Wow.
Yeah, down almost 4% here. And
Well,
it gapped open higher, and the market used it as exit liquidity.
Yes. So and I will mention a couple of those because Microsoft is one of the names. It was up $6 or $7 earlier this session. Another one, Tesla, was up $10 or $15. It's reversed all that move. Apple as well was much stronger on the open. It's down, $2 or $3 from the opening print there. Even like Nvidia got into the 185 handle this morning. It's now 181. Meta, which had some like kind of news-driven movement here, was up at 629. It's come off about $15. So I agree with you. It's certainly, and this has been the story all year long. The market has had huge moves in both directions. I mean, implied volatility has been super high, but we are getting realized volatility. It's still inside implied volatility, which is amazing. So just when you think about how high volatility has been and just the constant overstatement that you see in implied volatility, despite the craziness you've seen this year, it has not been quote unquote volatile from an implied versus realized standpoint. That said, you've had tons of opportunities. That's what this level of volatility provides you. Selling puts, call diagonals, put diagonals. I mean, you've been able to do kind of anything here so long as you've been nimble. And I think you're seeing a little bit more of that today where, if you had long delta in a Microsoft, you got your first $7 or $8 up move in weeks. Like if you've been selling out of the money 20 delta puts and they're now at the money and you get this $7 or $8 up move and a huge volatility crush in the market as a whole, and you're getting back 2 weeks worth of pain, you got to it's decision time again. And I think that's still like the story that you have here is, would it shock me if we're down 50 tomorrow? No. I mean, you got volatility's telling you that you should expect that.
I think that's exactly right. And I'm curious to see how the psychology of the market here changes, because if we go through this cycle, and you're seeing it in some of these names, like the beaten down names that were struggling before the war. Microsoft was a dog before the war.
Yeah.
And then it pops today with everything else. And over the course of the session, it's up by 11 cents, 10 cents now.
Unbelievable.
And that's an ugly day for a market that's up 2.6% broadly speaking.
Oh,
so when
in a vacuum, if you would have said that,
liquidity.
Yeah. Go on. Sorry.
Yeah, right. If you had said, Microsoft's going to gap open higher by $7 and it's going to close flat, you go, oh God, what happened to the rest of the market?
Oh, not even that. If you told me that, the fear was off the table and the market's up 3% and Microsoft, which is down 50% in the last, 6 months, I would say Microsoft is up 10%. I wouldn't say it was up $10. I'd say it'd be up $30. If risk is off the table and we're not, everybody's buying the dip, I would say it would be up a lot higher. I would think it would have a meta type move that Meta has had over the last couple sessions, but it hasn't.
It hasn't. So these are like some of the warning signs that make me wonder if, and we were talking in recent days, if the market does get a rally, it's a rally that I would like to sell into. It looks like it could pop inverse head and shoulders pattern. I'm not going to trade it that way. But if it does pop, I'm going to look to sell into it. And then today you're looking at, like the put call ratio is up at 1.9 still. People are still hedging this.
Yeah.
Hedging this market. They're not ready to say like, okay, there's no reason for me to do that kind of activity. And then you throw an IGV and Microsoft. And I saw a comment earlier on Twitter from someone who uses a pseudonym. So like I'm not a guy who goes by the name of Xiphos. But like hope turns into supply for selling in the market. And you see that kind of psychological shift happen, given the headlines that we're seeing about the ceasefire falling apart. If you had long deltas that were short dated, don't look to give horse in the mouth. Win's a win.
Yeah.
Take it, move on. Otherwise, I'm not chasing up here. And this has been a market that is 40, 50 points off the highs for most of the day. And you have gold pulling back in and bonds pulling back in and the dollar bouncing, like just everything else. Watch the cross asset flows for confirmation in stocks.
Yeah, for sure. It's been a wild one today. I mean, I was almost speechless on the open today, just with the way things were moving. It was unbelievable. I mean, when you look at just the S&P 100 list, you got a bunch of these semiconductor stocks. You have some of the memory stocks moving, $30, $40 here. Meta is a huge mover to the upside. Caterpillar is up $46. John Deere up $32. I mean, these are just massive moves. AVGO is in there. Just craziness. On the downside, it's very far and few in between here. Palantir down $9 or $10 on the potential for no more war. You have some of the oil names, XOM down a handful, Dow Chemical, Tesla. The numbers are very, very big today. It does feel hopey, for lack of better words.
It does feel hopey, but there are some interesting names out there, like Delta Airlines today. Yeah, is now trading higher than where it was at the end of February before the war started. They're one of the few.
It's only up $2 now.
It's only up $2 now. It was up how much?
It was at 73 and change earlier this morning. Another one to put in your hat of that's ugly. That's an ugly move.
And this is a company where, it's a little bit more insulated than other airliners. But by the way, if you're trading airline stocks around these crises, Delta has a little bit of an edge through one of their subsidiaries called Monroe in a town called Trainer, Pennsylvania. They own an oil refinery that they purchased back in 2012. And so they refine themselves close to 200,000 barrels of oil a day.
Okay.
And so when you have these supply shocks, right, they don't have to go to the refiner to pay the higher cost. They have that built-in hedge a little bit. So it's no coincidence that Delta is emerging as a winner relative to some of the other airlines on the other side of this. But that said, again, look at the airline tape. All these companies that have been negatively impacted by the surge in fuel costs. If it's a Delta, if it's a UAL, UAL is up at 103 earlier, 102.50. Yeah. It's back down to 96.
Yeah.
I just cautious right now, right? Yeah. There's no agreement here. And I know some folks would say, if I'm a bear, I want this thing to close on the highs. Everyone's blindly, stupidly bullish. Not necessarily. And psychologically, again, we're talking about that shift. Are we watching the market treat this as exit liquidity? And some names, it seems like the answer is yes.
I don't know if you need to have a closing on the high after, a 500-point face ripper in a week. If it closes 10 or 20 or 30 handles from the high, I think the bulls can be happy. That's a good week or two of a 10% move. I don't know if I.
Okay, so let me ask you a question. In honor of Helene Meisler, who we've had as a guest on our Trending Trades video series on YouTube.
Yes,
she does this poll every Saturday. Next 100 points in the S&P 500. So Nick, I'm going to put it to you. A poll of 1. Next 100 points in the S&P 500. Are we more likely to see 69.15 first or 67.15 first?
I think you'll see the pullback first. I don't think it's going to be
the healthiest.
Is that healthy?
What's the healthiest outcome here for the market? Okay.
67. You get a 100-point pullback or whatever. The speed of everything is the not healthy part. I think there can be a little chop, sideways / down, and then you can resume. That's my thinking. I agree with
Velocity.
you. I think it's a move like this after a week like this. You got to be crazy to kind of load the boat right here, and you should have been not loading the boat, but you should have had a portion of your position 2 weeks ago after a 10 or 15% down move, because those are not dime a dozen. You should have something on. You should be getting some convexity. You should have diagonal spreads. You should be selling puts. Those are things you should have done. So here is a little bit of a catch up.
What's fascinating about the tape too, the names that have held up better throughout this past month during the course of the war, those are the ones that are closing closer to their highs today, like Telecom, XTL, for example. That thing gapped open higher. It pulled back, but then you look at that long lower wick, it's basically erased all of its intraday trading losses, and it's going to close to the open. XLE, it gapped open lower alongside oil, but you look at how it's traded over the course of the day, it's going to be closing close to its intraday highs. So the pockets of the market that showed strength over the course of March, relatively speaking, those are the ones that are going out with a little bit of strength here today. And the things that were weaker, like your Microsofts and your Teslas of the world, those are the ones that have seen their gains fade over the course of the session. So when I think like this thing is not over yet, it was a nice one-day move. It's still a 5-minute macro market. Let's speed date, not get married to anything. And if you're going to do the marriage thing, like kick it out.
And listen,
50, 60, 70 days.
The news-driven market, this is, we could be completely reversed tomorrow. I mean, there's all sorts of stuff that happens in these overnight sessions, and in the, a tweet can send this all, can completely change everybody's thinking. I don't discount that.
Yeah. Call me a cynic, but the fact that someone like Lindsey Graham throughout the duration of the war was cheerleading it. And the second a ceasefire's on the table, he goes, oh, hold on a second. Checks and balances, my friend. Congress should have a part and a say in finalizing the ceasefire agreement.
I liked, right? I saw some memes of like the big fat pig, like crying on a, like some like farmer had like this big pig and it's like crying on his lap. And they were calling that like a Lindsey, like they were basically labeling it Lindsey Graham of just like this, fat pig crying about the end of the war.
The feedback from that particular circle of folks, they seem very disappointed by the announcement that we didn't end civilization yesterday.
Yes.
So
yes, I'm happy that didn't happen.
Same.
It's good. I like civilization.
That's two sames.
Yeah.
That's insane.
It's good.
Yeah. Fan of humanity.
E-minis here
bangers.
Up 158. They've been chopping around here. What do you think into the end of the week? Does anything matter? I mean, didn't we have FOMC dots, minutes, something today? Not that matters.
And what did they tell us that we didn't know, right? Like, inflation could be a bigger problem in the coming months, and therefore they're not going to do much of anything until they get clarity.
When do we come for their heads? When do we just all admit that it's just a crock of crap?
Are you asking me to say something bad about St. Powell?
He has been good to us. He has been good to us.
Or like the those jokers, practical jokers on camera somewhere trying to get me. Like, no, I'm not going to say anything bad about Powell. Okay. Are you out of your mind?
Of course. I'm sorry. I'm sorry. But the other stuff this week, you have CPI end of the week. Do we have another one? We don't have any employment data.
CPI,
right?
No. We have initial jobless claims coming out tomorrow. There's a few income spending related data points. Okay. I know the earnings calendar isn't too hot right now. Friday, you're going to get US CPI, which the month-over-month is expected at 1%, which if you do, 1% annualized, you're going to get 12.7% inflation year over year after a full run. So that's not great. But then again, just like how we were looking at the February data and saying, oh, well, this is all pre-war. How much do we, take it into account? Now, if we're going into a ceasefire and the market believes in the ceasefire, how much do you take into account data that covers the war now that we're past the war? So I just think all of this is kind of downgraded right now in terms of importance. Non-farm payrolls last week, didn't move the needle, even on the other side of the market open on Sunday. It's not that kind of macro environment. The data doesn't matter. The headlines do.
For sure. Are you interested in earnings season coming up here? Because we're getting to it in the middle of next week. Yeah. You have some of the banks and stuff reporting earnings, and then obviously we get into the big tech stocks. You see that as a catalyst for upside or downside or neither?
I would think upside. We've had a nice valuation compression in recent weeks, and thinking about like what the legitimate bull case could be from here, narrative and thematic issues aside. This is pacing to be the 6th consecutive quarter of double-digit earnings growth for the S&P 500, which is absolutely fantastic. And we've gone from a world where the Mag 7 names last year for points, talking about concentration risk with their 32 forward PE ratios. That forward PE ratio at yesterday's close, so not taking into account what's happened today, that forward PE ratio was 24. Last April, it bottomed out near 22.
Okay.
So the value, and that's not just a function of the price is correcting in the market, because today when the market opened at a point when the S&P was at its high, it was less than 3% from all-time highs. So to have a PE compression like that, it can't just be price. It needs to be driven by higher earnings as well. And that is, again, 6 consecutive quarters of double-digit earnings growth. So if I'm thinking about the bull case here, earnings, for the most part, right? Any energy, inflation, input problem, like that doesn't show up in input costs for most companies that are reporting their earnings at this scale in a material way in the first quarter. So it's probably going to be a really good quarter of earnings again, all things considered, given what we know about GDP, given what we know about consumption. That's what I would hang my hat on if I'm a bull, not not the headlines themselves. But Nick, I square the circle for me though. Even before this news announcement, and NASDAQ had an IVR in the 60s. NVIDIA had an IVR in the teens yesterday. Now it's 5.5. If we're going into earnings season, how do you trade around this dispersion, if you will, the differential between the high index level vol and the lower single stock vol right now? How do you operate in that earnings environment?
So I've been doing upside call ratios in the Qs and the SPY to kind of limit my exposure to the downside in the indices in general. I see opportunity in some of those Mag 7 stocks, and so I've been more aggressive with diagonal spreads, short puts or put spreads in those names as kind of a long delta, kind of neutral / slightly short delta on the index level, and then long delta, more dynamic delta in something like a Meta, a Microsoft, and NVIDIA, those sort of names. That's kind of how I've been playing it here. I think that's the interesting, to me, way to trade it.
I think you're probably right. I mean, obviously, you're not going to play JP Morgan earnings through S&P 500. So you have to go down.
I do have some upside there. I have been playing that. I played Goldman Sachs as well. But a lot of those names, like if you had positions on with long delta yesterday, you can't hold them today. Like you can't hold into a $50 up move in Goldman Sachs. You just can't do it.
No, and that's
in one day.
That's kind of the bridge. No, that's the bridge you have to cross right now, which you got a chance to reset the book. And you were long deltas. Today is the data to make those adjustments here. But Nick, going back to that valuation argument, the 5-year forward PE ratios for the S&P 500 is 19.9. The 10-year is 18.9. We're currently sitting at 19.9 with today's close in about a minute and a half. So this is not a market that is stretched anymore, which was the case for so much of last year. And thinking about how I said before, corrections happen in both price and time. A market that's gone nowhere in 6 months has now logged 2 more good quarters of earnings, maybe a third consecutive quarter of strong earnings during a sideways movement. And so the correction has happened in time. Prices haven't changed all that much, but that valuation issue has come out of the market now, and we haven't sacrificed meaningful downside. It's just 6 months of frustration, grinding.
Yeah.
And ultimately, that could be the base for a much bigger move higher.
Speaking of a move higher, as we get into the close here, you've got E-mini S&P 500 futures at the high of our time together, up 165 here, about 2.5%. The NASDAQ up almost 700, just under 3% here, 694. You got the Dow up 1,300 points and the Russell up 75. Oil as well, near the high of the session, down 1682. $16.82. Volatility futures contracting into the close here. That's an interesting move. 21.90 here, down $2.10. Bonds only up 24 ticks. Gold and silver both rallying. Gold's up 71. Silver up $2.63. Interesting move into the close here. Was kind of expecting it to go a little bit lower. That was my move, but didn't get it.
That's okay. 5-minute macro. We could wake up tomorrow and it's all changed.
Very good. Quick little earn a commission, 200% commission back on new accounts. If you want to set up those accounts for new customers only, get a couple bucks back. So it's been a fun time to trade. We're giving you a little bit back in your pocket. Mr. Vecchio, that's it for us. I'm going to take a quick little 90-second break, come back and do this all tomorrow morning. You, though, are staying on for overtime with who?
Mike Butler.
Ooh, special guest. Mikey and Chris. You don't want to miss that. We're going to take a quick little 90-second break. You're listening to Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is. And learning that the market is not always going to move in your direction, you have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Relief, it's here. Gas prices are going down. It's Wednesday, April 8th, 2026. This is Overtime. I'm your host, Chris Veio in New York. He's your co-host today, Mike Butler in Chicago, here to take you through the next 6 minutes as we wind down this trading day, and another trading day that it was, with stocks rallying between 2 and 3% for the most part across the board, including your S&P 500, back to 68.23 there, Mr. Butler, as we get this vol crush thanks to ceasefire plans announced by both the U.S. and Iran, thanks to the great country of Pakistan for enabling that, or China, or whoever did it either way. There are other countries that are trying to break the ceasefire, however. I don't know if that's going to be a surprise to many, but the war right now is in this ethereal state where we're trying to find an off ramp. And that's good enough, Mike. It's good enough for the indexes, at least, where we now have effectively erased most of the losses from the month of March in the S&P 500. For the NASDAQ, we are basically there. We closed February at 25,222.5. We're at 25,074. Mike, it's all about oil, though, and that's the one that has its biggest move we've seen in quite some time. Outside of COVID, this is the largest single-day loss for oil since 1991.
Wow.
I'm just going to get to it, Mike. Are you buying the dip here in oil?
That's a good question. So a couple of interesting things about oil. This move makes sense. Ceasefire, front contract getting crushed. The back contracts are staying where they were. Like, they haven't really moved, which I think if you are buying oil, maybe you see that as a bullish case. I'm just referring to, like, if you're looking at the CLG or H or J contracts, those have actually elevated. Now that I'm looking from this afternoon, yesterday they were at like 70, 71. This morning they were at 71, 72, and now they're at 73, 74. So I don't know. It's kind of weird because yesterday we had a 15-point backwardation in the April contract relative to May. Now that backwardation is coming out quite substantially with only a 7-point backwardation between April and May, but you're seeing these back months elevated. Maybe to your point of other countries trying to end the ceasefire, or maybe the ceasefire is just doomed to fail. I think that's an interesting situation that's happening right now. But at the same time, E-minis and NASDAQ ripping higher, coming off just slightly from their highs. But the real story for the equity market, I think, is the vol collapse, where we went from 1.5 points of backwardation just yesterday to now a full contango through the J to Q contracts. So it's kind of conflicting. We're back at the drawing board in terms of, I think 2 Fridays ago or maybe last Friday. It's all blurred to me now, but it was the day where crude oil was up 15 points, 15%. The E-minis and NASDAQ were down 1.5%, and we were like, okay, this looks normal. And then all of a sudden, the equity markets ripped higher and they ended flat on the day, while crude oil stayed elevated. So I feel like the volatility curves are telling us a similar situation where we're seeing the elevation in the crude oil back months. We're seeing contango in the VIX futures, kind of conflicting information here.
It feels like there's conflicting information across the board. So stocks actually firm up into the close, and so do things like gold and bonds a bit here. But even so, Mike, gold today 60, so 47.53 right now in the market. Just from a technical perspective, I'm trying to find the silver lining here, or I guess the golden lining here right now. The uptrend from the October-November lows that carried us from 4,200 up to 5,600 over the span of several months, we keep bumping into that and we can't get through it. And sure, that's subjective in the spirit of Ilya saying we don't look at diagonal lines because anyone can draw those. Horizontal price matters more. So be it. 4,800 here, right around that 1-month moving average, the 50-day moving average. We're struggling right now. And gold would be one of those things where people were selling it for the month of March to raise cash so they could pay for the more expensive oil in Asia and the Middle East. You'd think that there would be some rotation out of cash across the board into various things today, but you're not seeing it everywhere. So it leaves me very cautious about this. I've been wanting to sell a rally anyway. The charts looked like, with those inverse head and shoulders patterns on the lower term timeframes, it looked like there was a possibility of a pop. And sure enough, the pop came. I'm just questioning whether or not it's too early to sell, because if we can get 71, 72 on a call spread here at a 5-to-1 risk to reward, I am more than happy to just put that on and actually go fishing for a little while, not even really think about it.
Yeah, I couldn't agree more. And I think when you look at things in isolation, you're always going to get a story. It's similar to like IV rank. If you look at IV rank in isolation, it tells you a story, but it doesn't tell you the whole story, because you need to look at the actual implied volatility too. I think the same principle applies here when you look at gold and silver, when you look at the futures curve in the crude oil markets, and just the fact that, like, if you were to assume that when the equities were rallying, or I guess another way to put it is refusing to sell off while crude oil was staying elevated, maybe the equity market was pricing in this ceasefire that's going to happen. But what if the ceasefire ends? Like, this is a 2-week ceasefire. What if it lasts 3 days, 4 days? I think that's when you really have some turmoil in the markets, because now you can't really price anything. I think you might see a liquidation of a lot of things in that event. But regardless of your opinion, I think the intelligent thing to do is take a step back and realize that it's not every day that you get a near 3% move in the equity space and like you said, the biggest sell-off since I was 3 years old in the crude oil markets. And I think if you positioned for those moves, it makes a lot of sense to consider taking off risk, sitting on cash, and seeing what happens over the next couple of days, because all of this could change tomorrow.
Yeah, you say this doesn't happen all that often. Stock market rallies, single day gains of 3% or more. And we didn't get to 3% here quite yet. No.
Yeah, almost Russell was in the NASDAQ. Yeah.
Almost in the NASDAQ. And so I use the 3%. 3% days happen less than 2% of the time over the past 30 years.
There you go.
Right.
Yep.
So when you get a big update like that, especially if you have shorter term duration, then this is a gift.
Yeah.
Great trade. take the profit and run and figure out a way to reestablish a new position with a new time horizon right now. This is not a conundrum I'm in right now because I had no short dated long delta exposure. I continually view this market as an opportunity to just look, I'm emotional. I think politically, I think about the economics. I know that I can't scalp. You've heard me say it here on air 1,000 times over the past several years between futures power hour and overtime. You got to know your limitations so you don't make those mistakes. I go to 51 days here, Mike, and I'm seeing things like I can sell the 6,000, 60, 50, 72, 72, 50, which I'm currently in, and it's giving still a 4-to-1 risk to reward north of a 60% probability of profit. I can place a trade that close to the typical Tasty cycle that says we're not going to break the lows that we just saw or the highs for 2026. I mean, things like that interest me because it allows me to avoid having to pay attention to the every single Truth Social post or what the Iranian parliamentary speaker is tweeting out. Which unfortunately, those are the things that my brain goes to. And I know I have to, I can't trade around them. I can't let myself be influenced by them. So this is how I adapt to my own personality defects to prevent unnecessary losses going into place. And I just find with today's rally, it's a great opportunity again to do something similar. The market, 51 days is saying that we can go up here and sell 75, 7,400. The risk reward's not great, but you can start tinkering with some of these high strikes and find maybe a trade that is appealing to you on the right duration. But finding a push to new highs right now with all these catalysts in place still, I don't see how that works out. But I've been very wrong recently, so who knows?
Yeah, and the timing is great. I actually just did a options math check that'll hit the YouTube channel soon enough, but I looked at just that, basically looking at the probability of a 20% rally or 20% sell off from here. And in the near term, the markets are still pricing in substantial put skew, which I think reflects just that. Just the fact that this could flip on a dime on any kind of escalation overseas. And at the same time, like to your point, even if we do continue to rally here from 6,800 to 69 to 7,000, it doesn't make a lot of sense that we would push to new highs and exceed new highs given all of the other things that are moving in this market as well. So yeah, I agree with you. I think you take these opportunities, set some high probability situations that are above levels we haven't gone before. And even if we chop around here, the volatility could come out of this thing and you could close it for 25, 30% in a couple weeks or maybe sooner. So you have a lot of outs in a position like this, and especially into a move like this that we're seeing. Like you said, 3% moves happen 2% of the time. You're getting a near 3% move today, which only helps your upside premium if you're selling into that kind of move. So I like that idea for sure. And I think you can use a number of different trading vehicles to express that.
So there was a point earlier today where the put call ratio for the S&P 500 flashed up to 1.9. That to me says that people are still aggressively trying to hedge this market right now. That's not actually even the high that we've seen for the cycle, for what it's worth. Actually, it was the high that we've seen for the cycle. Excuse me, I stand corrected. It's the highest put call ratio we've seen throughout the Iran war so far. Are you using metrics like that to help determine whether or not sentiment has washed out? Because I keep seeing these stories that sentiment is extremely bearish. And the places that I look, I'm just not seeing that in the tape right now. I see people who are concerned, who have delevered, who have sold some, but like fear, panic, blood in the streets. Maybe we were there, 2 weeks ago for a brief moment, but not recently.
Yeah. I don't personally look at it specifically, but I think if you look at something like the vol curve, that tells you a lot. I look at the vol curve with a very, very simple near Neanderthal level of analysis. And it's really just, are we in contango or are we in backwardation, and how steep is that curve? So to your point, the fact that we went from backwardation to contango today on this move, we're still flat-ish in the back months, but I think it would have been, blood in the streets still probable if we stayed in backwardation into a move like this. But moving into contango, we haven't done that in quite some time. Now we've had a massive rip from the lows, of course, which certainly helps. But I think the contango nature of the vol curve is telling us, to your point, that maybe the bottom's in, maybe we chop around here, but nothing too crazy is expected from this point on. And I think that's even further emphasized in SPX price movement. Sure. So SPX price movement, like this shocked me. I looked at this and I was like, there's just no way this can be real. 46 points for tomorrow, implied range. That is so low. When you look at
that has to be the lowest over the past month.
I know, it's crazy. And it's like, it's the lowest in the past month on the back of this ceasefire and the craziness that's still happening overseas. And it's just like, are we really expecting the market to just essentially do nothing tomorrow? It feels very odd, very, very ominous.
But that is odd, Mike. Is tomorrow a holiday? It is the 1 year anniversary of Trump taking the tariffs off.
You know what's funny? I posed the same question to Jamal, and he was like, you know why this is? It's because everyone in the SPX pits is going to have the Masters on the TV. And I was like, there you go. So
that is a real thing. I keep telling this to people. I mean, I remember the first 2 years that I went through a World Cup summer when like the World Cup was in South Africa all those years ago. The market died. Everyone in Europe, your first half of the day, everyone in Europe is not trading because they're watching the World Cup games. And then by the time you get to noon, American traders are like, well, I guess nothing's going on in the market today. I can go have a 3-martini lunch and go watch the World Cup games.
Yeah.
so you get these like 200,000 contract traded days in ES, and you're just like, where is everyone? Is it the market open?
Yeah. The snowball effect. Yeah.
Yeah.
But yeah, I think
I should watch the Masters tomorrow during work. I didn't say that out loud, did I?
You should. But yeah, 50 points.
The Mets are playing right now, Mike. I'm tempted.
Listen, it's not our choice. It's the SPX markets forcing us to do this. But yeah, 50 points, less than 50 points feels really light for a day like we saw today, an overnight session that we saw last night. It feels really light, but I've been proven wrong before in the same sort of scenario where it feels light and then it's like 20-point range. So do you put any weight on the CPI on Friday or the PCE? Or is this kind of like water under the bridge until this thing finds a footing?
I feel like it's water under the bridge because it's from a data set that may be irrelevant, right? If we have really de-escalated and we're on the off-ramp right now, then you can't use a single month's rate of change from the energy inputs to forecast how it's going to move going forward. If oil was stuck up at 100 for a longer period of time, you could say, if oil's going to be at 100 in September, like year over year, that means, CPI should be here by that point, all things considered equal. So if we want to go real doomer, Mike, the consensus forecast for CPI this week is 1% month over month, which if you annualize, that's now 12.7% rate of inflation, which is way higher than what we had in June 22 when we were looking at 9.1% as headline CPI. During the post-COVID, post-Russia-Ukraine inflation surge. So that might not be helpful for market narratives. But again, it's not like the war is pressing on. We're trying to find some sort of off-ramp here, even if it seems like it's very flimsy. So I would think it gets downgraded. But if all of a sudden tomorrow Iran says ceasefire's off, we're bombing, Riyadh, and they start launching drones at Riyadh and facilities and oil facilities along the coast, and the Houthis attack the Saudi facilities in the Red Sea. I mean, this thing is dead in the water. And all of a sudden we're getting the CPI on Friday with, this is a CPI report that is relevant to the current environment where energy prices still may be going up and we're not on an off-ramp. So I think the context of what happens over the next 36 hours before we get there, I think actually determines whether or not it's the weight, the report carries any weight.
Speaking of energy, an interesting move today in XLE. So,
yeah, this is one of those little things where, you think about the leadership groups over the course of March, telecom, energy, they close at their relative highs for the day after gapping open, right? Whereas you have like your Microsofts of the world, your software companies, they gap open higher and they sell off. It's all exit liquidity.
Yeah.
It doesn't make me feel good about what happened in the broader indexes.
No, I think it's just one of those things where it's like if you look at this market in isolation, you see the market's rallying and you're like, okay, everything's back to normal. But then you peel back the layers of these other sectors and it's like, I'm not sure about this. And I think this is really interesting. XLE closed at almost at the highs of the session and rallied 2 points from the lows, like pretty much immediately and sustained through the day. So yeah, I mean, there's a lot of conflicting data here. Nothing is, creating this perfect narrative where it's like, okay, we're done, everything's fine. Even though there are some things that are showing us that a little flicker of that, there's plenty of stuff in here where you could argue otherwise. And that goes beyond just the equity markets and energy. Like we're talking about silver and gold kind of behaving in a way you might not think in this current situation. So I said it before, I think this is the only way to put it. Like something has to break here. I think in order for this to be over or to be back to the highest of escalations that we've seen, we're going to have to see something give. It could be the equity market, could be crude oil ripping back higher. And I think those will continue to have that inverse relationship until proven otherwise.
I feel like Principal Skinner. Am I out of touch with this bull market? No. It's those kids. It's the kids.
Damn kids.
I really want to be long. There's every bone in my body that's saying buy the dip. I saw that inverse head and shoulders 2 days ago, and I'm talking to Ilya, and when Ilya, like, you're generally wrong about these things, and I'm usually right about stocks. Why should I just not buy here? I joke, but I can't get over that hump, and I'm generally the fool who's looking for every reason under the sun. Oh, stock. Oh, this is happening. Oh, it's good. Oh, the Fed's not cutting rates. Oh, it's because the economy's so hot. That's good for earnings. Oh, the Fed's cutting rates. Fantastic. Cheaper liquidity. Buy stocks. I'm not in that headspace right now. And maybe it's because of my macro brain. And that leaves me at a disadvantage during these turns around macro events because I'm like, what about everything else? So I'm going to keep doing this the way that I've been doing this. If we can get opportunities to sell strikes north or south of the highs or lows of the year, we'll let the market figure out who's right or wrong about all this. Because I do feel a little out of touch, like, doing my best Simpsons impression right now.
Well, I think that's the beauty of utilizing those out of the money strategies, especially into big moves like this, is that you can create levels that we haven't even touched during this whole thing. And if that single day move like today gives you that opportunity to throw that on, now you have that dynamic exposure and more of a choppy exposure where you can still make money. Even if we flutter around here, even if we go down 160 points tomorrow and back up 160 points, you don't have the same headache as timing those kind of moves.
No, timing the market is the hardest part of, which is why a lot of people say don't bother timing it and just buy and hold. We think that we can do better than that.
Yeah, and we hope. Yeah, the dynamic expression is what counts here, especially in these high heavy environments and the two-sided action that we've been waiting for a long time, and now it's been here for the last couple months. So it's been good and whippy, but still got to keep the risk small in case you're wrong. And speaking of that, like crude oil, I thought I was being cute selling the 98.99 call spread, 3 weeks ago, and then crude ripped higher, and I was like, well, there's no reason to close these now because anything can happen, and there's such a big backwardation that if something does happen, all the value is going to come out of this K contract. And I got very lucky with this timing. 8 days left, and we're now below these strikes. But this is basically trading at a max loser 2 days ago, and now it's out of the money. So just things like that. Like that's another benefit of selling spreads or buying spreads for that same matter is like if you have a defined risk and you're realizing that risk with time left, you can hold it. And if something crazy happens, like what we saw today in this market, you can go from a near max loss to a scratch or a full winner in just a couple of days. You have that asymmetric reward to risk as you are getting closer to max loss with spreads. So I like to use spreads in these environments as opposed to undefined risk with stops, because if I had undefined risk with stops, I would have realized the loss, been out, and then not had an opportunity to get this back. So we'll see what happens over the next couple of days here. But I like your call of using spreads, using the rips, getting the delta moves, helping where your strikes are and where the premium is. And then also to your point, looking for these levels that we haven't seen in quite some time. They blew through mine to the upside in crude oil, but I also have a 79.80 call spread as part of an iron condor that I put on 43 days ago. So maybe that comes into play. Maybe that moves out of the money if we see this continue to crumble here. We'll see.
Yeah, we have this drop in oil and the repositioning flows driving the market today, and certainly moves of this speed can overshoot. I know the hero ball move is to take the directional beta and go naked, but I think you and I are on the same page. Tactical positioning, risk defined is still the way to go, given the information environment that we're operating in. So, Mike, the market needed a catalyst. It got a release valve. It responded across the board. Let's see if ships start making their way through the Strait of Hormuz. If they do, then there's more tangible evidence that this thing is coming to an end. If not, maybe buy the dip here. But I know what I'm doing here right now. Sideways in equities. I am looking for long deltas in oil. I have been trying to work positions today. I'm going to have to do them tonight. I don't think we're going to be clearing out the lows that we had at the end of March. So 83, 84, going back to the M6 contract. I'm looking for opportunities to have some long deltas from here henceforth. I like buying the dips in oil still. Color me crazy, but it's worked for the past month and a half. This probably won't be any different. But I've been wrong, Mike. So you know what? Instead of me stammering through the ending here, let me just say it. Overtime's out of time. We'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. So for Mike Butler, I've been Chris Veio. Nick Batista's. Nope, Jamal Chandler's sitting in tomorrow. Come back for more. After this, video on demand. Ilya Spivak here, Macro Money. See you soon.
The markets are in a holding pattern. Apparently, we are waiting for something to happen on this ultimatum that President Donald Trump issued to Iran about opening the Strait of Hormuz. And so there isn't conviction on the board for now. What's coming this week, and can we get some conviction? And can we figure out what in the world is actually going on here? That's what we're going to try to figure out right now. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And as ever, what we are going to do is first and foremost take a look at the price action, see what that is telling us about what is on the menu here. And from there, see if we can't figure out some next steps. Because, of course, the key here is, as ever, what is the price action whispering to us? Because certainly attempting to make sense of this news flow seems like a dangerous kind of an idea instantly, just because the markets are so headline sensitive that everything seems to be switching in rapid form. So let's first and foremost take a look at what the prices themselves are telling us. And from there, maybe we can make some sense of next steps. Here's the view on the bogey du jour, of course, crude oil prices here holding steady against the spike high that they hit when this whole episode began. And we can see here that we gap a little bit higher at the start of the week, but we don't end up actually going anywhere. We're just hovering. And so, on the one hand, there's conversations after an Axios report overnight that maybe there's a ceasefire being discussed. There are conversations about perhaps we are going to have the president make good on this ultimatum that he's made, where he very clearly said, listen, I'm not backing down from this one if Iran is not going to reopen the strait. And the deadline for that is essentially overnight here. If that's not met, then we're going to start to bomb all manner of energy infrastructure. The market seemingly not sure which way this goes, but they're pointedly not putting conviction behind that outcome or this one. So what we're seeing is the market is clearly unsure of whether the president means it, whether Iran is going to meet him halfway. They've certainly been sounding a defiant tone. Whether there is a ceasefire to be had, that Axios reports claimed that a whole range of countries are having these discussions, including the U.S. and Iran, and that Iran asked for this, which of course then raises the question as to who we're talking to and who is talking back when the president makes threats on social media. Because again, that defiant tone coming out of social media on the Iranian side ostensibly isn't the same group of people that's negotiating a ceasefire if that ceasefire negotiation is in fact occurring. So the fog of war is particularly dense at the moment, and the markets don't want to make a call this way or that. We can see the same thing from stock markets. They attempt to get a little bit of traction, but ultimately they're holding back at a familiar level. If ever there was a clear cut, if the trend stays, this has to hold. And if it's going to break, this is the spot. This is about as classic of a chart setup as you can imagine. This is the deciding one. And we'll recall there was something very similar here, for example, in this instance, where we had a clear band of former support become resistance. We broke through that. We gapped to test it, and ultimately the trend held. Once we came down to this support, we came back again into the same area. Couldn't hold it, broke down. We've retested the underside here before, broke down. We're retesting it again. Not unlike we tested this 2 times, 1 time closer, 1 time more distant. Now we've tested this 1 time closer, 1 time more distant. Let's see if it holds. But for the moment, the markets are not prepared to jettison the war trade as an idea. Same thing with the bonds. We can see they're also pointedly testing the former area of support that they broke, and they're not finding conviction to overturn what has been a trend toward lower bonds and higher interest rates since this thing began. Same thing for gold. And the trend motivated in the same way. Gold, of course, doesn't yield anything, and so is a natural foil for interest rates, and as an alternative store of value is also a natural foil for the dollar. Well, what have we had against the backdrop of this war, where the melt up in crude oil has given us what we just saw in the bonds here, right? Higher interest rates, born, of course, of inflation expectations surging. And what do we end up with? We end up with gold lower because, of course, higher rates don't do it any favors, but also a higher dollar, which also doesn't do it any favors. And so we end up with a situation here where the market is ostensibly looking at this and going, well, this whole thing in its sort of sum total is an inflation risk. Nothing that we've seen so far suggests it's become any less of an inflation risk. Maybe we are going to have some variety of change, of course, here eventually. But for the moment, this is the story that we're looking at, and the markets aren't prepared to let go of that narrative, even as we see the sort of fog of war really descend on markets and obfuscate whether maybe we have some on-ramp here. The hopium, in other words, is not strong here, but neither is the panic. It is worthwhile to mention, though, that the markets have had more hopes for an on-ramp than they appear to be entertaining now. And that's something to keep an eye on, of course, because as ever, this is the story. We can see clearly that the markets are looking at this situation through an inflationary lens, where when you have a run-up in oil, or indeed any kind of concerted move in oil, it would seem, the lag for that to appear in headline CPI inflation seems to be about a month. And what you end up seeing here then is everything that we just saw in the price action across the major assets kind of cascade from that idea that if you have this surge in oil, and if it becomes sticky, especially since if you were to reopen Hormuz in full today, it would take months in the best case for things to normalize, and normalize they maybe could, but the reality is we probably can't go back to the status quo before the war, because now if Iran is going to continue to have control of the Strait under this regime, they want to charge a toll. So that's baking in a higher price perpetually in perpetuity. If it's a capitulation and a new regime takes hold in Tehran, well, there's no telling what they'll do with the Strait and how quickly they can get everything back in order. And if it's the U.S. controlling the Strait, well, then who's to say that it's not going to get used as economic leverage, especially against China? So there is a whole range of options here, but none of them seem to end up with this not being an inflation shock, at least for some amount of time. And when we look at where the world was, this is as of January here, these are the OECD countries, and we can see that 50% of them were already looking at inflation rising before this war, even though, of course, inflation had normalized significantly since the COVID spikes. And by, let's call it the middle of 2024 going into 2025, almost no country had rising inflation. Before this war, clearly it was a different story, but now it is almost certainly an inflationary risk, because whatever comes as a consequence of this war is going to come on top of what we're seeing here, which was already starting to become inflationary by itself. Now, of course, the counter argument is if this goes on long enough, the higher price of oil and the higher price of everything that is transacted through the Strait, be it aluminum or helium or fertilizers or the petrochemicals that are needed for all manner of fertilizers and plastics and what have you. Something like 50% of global polyethylene, the most common plastic that really goes into almost everything you see around you, goes through the Strait. So there is all kinds of an inflationary shock here beyond just energy. But of course, if you keep that squeeze long enough, people are going to start to say, well, we need to pay for those necessities that are now more expensive, like energy, like fertilizer, and we're going to, as an offset, start to claw back spending elsewhere. If it was a temporary shift, we'd just bite down and take the squeeze. But if it's going to last for a long time, well, then we need to make some more lasting adjustments to our spending patterns and pull spending from those things where it can be foregone to now cover these extra costs. And that kind of demand destruction has been starting to show up in inflation expectations. We can see here the 5 and 10-year break-even rates, which measure the inflation expectations baked into the bond market, they've started to come off recently, in particular at the longer end here, as crude oil has continued to march higher, even though, of course, the initial march in crude oil since the beginning of the year fed inflation expectations. And then, of course, the war amplified that by many orders of magnitude. And so we saw a surge in the violence of this crude oil move, and with it, the inflation run-up got another big shot in the arm. We now see these things diverging a little bit. And that could be because we're getting into that demand destruction risk part of the equation. And not surprisingly so, because just like 50% of OECD countries had rising inflation before this war began, so too 50% of them had rising unemployment rates. And so we were already in this uncomfortable location economically, where global economies were starting to feel the stress even as inflation was starting to perk up. Well, here it is, the overlay of overlays on this thing. With the war, both of those things get worse. Now, you wouldn't know it looking at U.S. employment data that came out on Friday. 178,000 jobs added to non-farm payrolls. That's well in excess of the 60K expected. The unemployment rate ticking down from 4.4 to 4.3%, reversing the rise in the prior month. But there is more than meets the eye here, it would seem. This is not exactly the rosy report that it appears to be at first blush. And you see that when you start to look under the surface. The actual tenor of these numbers is perhaps much more worrying than these headlines suggest. And you really get it when you start to look at the breakdown in the various subcomponents here. And what you see immediately is that the overwhelming majority of jobs here is once again coming from healthcare and education. And that isn't altogether unusual, because when you consider what this seems to say, it follows a familiar pattern. We know, looking from the recent history, certainly a couple months back and longer than that, that this has been a structural sort of jobs growth. Take a look at the way back here. This is as far back as the data goes, about 3 years here. What you see is this pink area in the middle seems to be the largest one of the bunch. And that's, of course, education and healthcare services. Now, why is this consistently the biggest driver of employment growth? Well, rocket science, this is not. As of March, the U.S. hit the highest population of 55 years and older Americans on record. Unless you think that this is somehow proportionally matched by younger Americans, it isn't. We also hit the highest share at nearly 31% of the population for those Americans. So more, we're approaching a third, let's say, of Americans are now 55 years or older, the highest ever. These records go back at least to the 1950s, depending on which data you look at. And so when you consider what this means, well, of course, there's job creation in education and healthcare, in particular in healthcare. Somebody has to take care of these people. There's obviously a lot of demand here for services that target this cohort. Now, on the one hand, this means that job creation is not so cyclical. And so were there to be a big squeeze, these people 55 and over aren't going anywhere. And so you do need to still create the jobs that support them. On the other hand, it also means that everything in these other sectors is at best anemic. And so if there were to be some sort of a major economic shock, it wouldn't be very difficult to overwhelm the kind of structural baseline that occurs for this healthcare work job creation engine with all the losses that you might see were there to be a recession and a meaningful round of layoffs. And so it's, on one hand, a source of insulation for the job creation that there is now, to say that it is structural rather than cyclical. But on the other hand, the cyclical part is not exactly spread in an encouraging way. Most of it is modest, if anything. The second biggest job creator after education and healthcare services, for example, for March was leisure and hospitality, exactly the kind of thing where you might see people trade away to finance extra energy costs. And so encouraging this is not. Now, we also got some ISM data from the Institute of Supply Management, a view on the service sector. And here still looks like we have generally solid output growth. We come down a little bit from the heady levels that we saw in the prior month in February. That was, of course, the highest since back here in 2022. So very strong numbers, and a little bit of a pullback probably doesn't hurt here and probably makes a little bit of sense in context, but look under the surface and things look much more ominous. Employment contracts for the first time since the middle of last year. As ever, this is done in the logic of PMIs. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so you can see here, this is perhaps the first time that you're below 50 since back here, call it latter day 2025, October, November, but it's also the fastest contraction since December of 2023. At the same time, costs are surging. The price component here flying higher and is now at the highest since, let's call it July or so of 2022, mid-2022. Very much still around that shock that we have on the prices front post-COVID. Before the Fed's rate hikes that they start in March of that year really start to take hold and beat inflation back. So as we look under the surface, all of those risks, both to inflation and to employment and thereby to growth, all of them are materializing here. And we start to see how you get from an inflation shock to demand destruction, which is, of course, precisely the fear and precisely what the markets seem to be looking at here as we consider what comes next. Now, the biggest read-through from this, of course, is to what the Fed may do next. And here is perhaps the biggest risk for markets, because with the Fed's objectives seemingly in tension, we have a kind of rock and a hard place situation. From where the expectations sit currently, the markets don't expect any policy changes from the Fed this year, and they're flirting with the possibility of maybe one cut next year. That's not hysterical concern about demand destruction, but it's certainly a recognition that we don't have space for hikes or cuts this year because, on the one hand, the economy seems to be under threat. On the other, inflation is on the march. Now, we can see that even under these clouded circumstances, the stock market is responsive. As we've seen this surge in the policy outlook that erases rate cuts for 2026, the S&P 500 has come down. As you see the demand destruction part of the conversation start to come into the conversation at the beginning of this month, beginning of April, and coming out of March, as things get a little bit more dovish, as you start to put some rate cuts back into the mix for next year, stocks come back up a little. Now, there's a couple of things this week that are going to impact this closely. First, of course, is going to be minutes from the Fed's latest policy meeting. And we're going to see if this sit down, this is, of course, the March sit down, if reading the tea leaves there gives us any clue as to what the Fed might be biased towards, the sticky inflation or the demand destruction side of the equation. It seems like the vibe going into that meeting was inflation was the bigger worry. And of course, that is what the markets would be afraid of, because if the Fed is afraid of inflation, then whatever rate cuts are on the menu here may be too many. And if this starts to move back higher again, because you start to factor those out even for next year, well, then stocks probably get pressured lower. The next bit here is going to be the CPI report coming out Friday. And not surprisingly, we're looking for a big jump. 2.7% expected for the core, 3.3% expected for the headline. So a dramatic increase in inflation that's coming on the menu. Of course, that much seems clear from what we saw in our kind of mental map of how all of these things appear in sequence. First, you get the spike in crude oil. Then a month later, you get the build in inflation, give or take. But the question really is going to be, do the markets expect the Fed to look through that? Or is this the kind of thing that, in simple terms, takes this down 33 basis points expectation for next year, which is basically one cut and a 50-50 chance for a second, and trim that back? And if it does, well, then we can see the implications. And of course, from there, cascade all of the other major assets. So if the story after these FOMC minutes and the CPI numbers this week end up being the Fed is concerned about inflation first and foremost, and the story from labor markets looks like the kind of thing where the Fed is going to justify doing something like that by numbers like this, even as what's happening under the surface is vulnerable and perhaps is already deteriorating if the ISM numbers are to be believed, well, then the read-through ends up stocks probably find a way to hold this level and come back in. Bonds probably find a way to hold this level and come back down. Gold probably follows suit. And of course, the dollar probably has legs to punch through this resistance. Now, with all of that in mind, the exposure that I have on the menu here, still very long the dollar against the Aussie, the pound, the euro, the Canadian dollar, and in my spot exposure against the yen. That 6J contract is just too big, so I use spot rather than the futures. I am still short the bonds at the middle of the yield curve and at the long end, looking for rates to go higher. Still short risk. In fact, I've just extended my maturities a bit here for both the NASDAQ. That's now 46 days out. S&P is now 53 days out. I still need to work out what I'm going to do with the Russell and probably push out that one as well. But still short risk, long oil with plenty of time on the docket, and looking for the higher interest rates, fewer Fed rate cuts, and all of the implications thereof to wash over the markets from here. And that is macro money for today and for this week. I'll be back next week. I'm out the rest of this week, though. The show is usually here Monday through Thursday after overtime. That's the show I co-host with Chris Veio, looking at the Wall Street close and where things might go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns next week. Live and on-demand recordings for the rest of this week. Happy trading.